November CPI in the US, that's the Consumer Price Index, was up 0.3% for the month versus an expectation of 0.4%. Annual inflation rate was at 3% versus an expectation of 3.1%. Cooler inflation has also increased hopes of a Fed rate cut, and you saw the 10-year steady at the 4% mark on that data. Oil has spiked over increased curbs on Russian oil. It seems it's coming from all over the globe. Brent was above $66 mark. Meanwhile, the big global story this morning, US and China are closing in on a framework for a trade deal. You can expect a Trump-Xi meet soon. And you have Asian markets up in the green as a result. Some new highs being formed there for various Asian indices this morning. You have the Shanghai up nearly 1%. If you take a look at what the India implied is, some of that rubbing off here as well, because the closure of those very, very tough trade talks maybe indicates that a deal with India is round the corner. 110 points up on the implied open. Listen in to what US Treasury Secretary Scott Bessent and his Chinese counterpart said while talking about a framework that they have crafted to ease economic friction.
A great deal of negotiating leverage with the threat of the 100% tariffs on November 1st. And I believe we've reached a very substantial framework that will avoid that and allow us to discuss many other things with the Chinese. I think we will be able to discuss them helping us get this terrible fentanyl crisis under control. I think we are going to be able to discuss substantial soybean and ag purchases for our American farmers. I think we are going to be able to discuss more balanced trade. And I'm not going to get ahead of the two leaders, but I think that they will also be discussing President Trump's global peace plan that he's been so successful at, both here in Asia, the Middle East, and now he's looking to Ukraine, Russia.
And such a big deal, and I wonder if this gets the oil markets reacting, because the sanctions literally haven't. I mean, there has been a bit of a spike, but as a Neelkan Mishra column points out, that with the Chinese electrification of vehicles, it displaces nearly 10% of the oil demand across the world. And therefore, while we had this spike, and even if the trade deal were to be reached between US and China, very likely, it may not really have a major impact on oil, and which is such a big deal for Indian markets. So something that you keep an eye out for sure.
I'm wondering if the claim that India has reduced or will reduce its purchases from Russia have come through yet. When that comes on board, then we have to see if this mitigating factor still works about China's electrification. I think that's yet to play out. The initial noises are there, but the entire stopping of that import has not yet happened.
But only limited point, China and India, the largest buyers of oil, but we're talking in a scenario where there is oversupply in any case.
Exactly.
And there is capacity to supply more.
That's across the world.
Brazil supply, US supply will come in and all of that as well.
Yeah. So I don't think there could be a huge dislocation of prices.
No, you're not going up to 90, 100, maybe between 60 and 70 is where you will have a... All right, Richard Harris joining us this morning, Chief Executive, Port Shelter Investment Management. Richard, a very good morning to you from where we are here in our Mumbai studios. Great to have you as always. Just want to get your sense on the US-China framework that's being talked about. Who comes off better in this deal?
Too early to say. You know, we've had a lot of talk. You know, we do tend to get the American side talking a lot. We get the Chinese side talking not very much. You know, very often they come back with something a lot less emotional after 2 or 3 days. So we really have to see. I do find Secretary Bessent is very much a jam tomorrow kind of guy. And in a way, he has to do that because that's what Secretaries of Treasury do. They don't want to spook the markets. I think it's almost inevitable that both sides will come to some sort of agreement that they can live with. They both upped the ante before the talks, the Chinese with rare earths and soybeans, the Americans with threats of 100% tariffs. I don't think it's a particularly good way of negotiating because both parties go into negotiations looking to come down from a much higher position. So I think we will end up with tariffs. I think we'll end up with tariffs higher than we are now. Nothing like the extreme ones that we've seen before. But let's face it, compared to 12 months ago, much higher.
Richard, morning. All of this is happening at a time when there is a little bit of uncertainty for the US with regard to data back home, and you have the government shutdown that continues 26 days now, and it's heading towards the longest ever. The question is that with that inflation data that you saw on Friday, it was softer than expected, perhaps enough for the Fed to pull the trigger on rates and go lower. At least that's the expectation. But in this swirling uncertainty on data and the direction that US debt is going to take, how would international investors like yourself position themselves? Would you reduce your exposure to the US, perhaps look favorably towards India, where you have short covering that is in effect already?
Well, I think the thing about the US, although it's a market that maybe still doesn't look too bad, we're looking at more muted inflation. We're certainly a bias on lower interest rates, and the markets do seem to want to keep moving up. Let's face it, anybody who's been invested in the US has done extremely well. It probably is time to take profit. Certainly for much of the year, I've been looking to take the top off, say, some of the stocks in the US that have done very well, and shifted principally into China because China had underperformed. And as we've seen this year, China's actually done very well, especially the Hong Kong markets, which reflect the bigger Chinese companies. But also, I think that investors are looking elsewhere towards Southeast Asia, towards India. The one thing about India, of course, that foreign investors think is that, well, India's had a fantastic run over the last few years. We're seeing a bit of a slowdown this year. That's not terribly surprising. So I think that probably the principal focus will be, if you're looking at emerging markets, will be towards China, towards Southeast Asia, and then towards India. That doesn't mean to say that India isn't a great investment. It's just the psychological impact of having a market that's done so well over quite a number of years, I think probably means that investors are going to see where they can pick up value elsewhere, and the Chinese market is still very cheap.
Okay. Richard, just one final point. We were talking about oil, and what do you reckon happens there if the trade deal is reached? Because US has shown its propensity to increase supplies every single point of time crude oil goes above 60, right? The whole of the shale and the other factors come into play. Do you think upsides are capped here, even if the trade deal were to be reached and growth expectations lift off?
Well, I think the analysis you had between you just now was exactly right. So I'm pleased you agree with me. It does look difficult for oil really to have a spike up. I mean, if we haven't with the war continuing in Ukraine, if we haven't seen it with the US putting pressure on China and India to reduce buying oil from Russia, I think that, we're probably, there's unlikely to be a spike. I think it's likely to be where it is now. I think a couple of things to remember about oil is that the exports from Russia, of course, are quite expensive. Just the sheer process of getting it from Russia to refineries and other parts of the world is difficult because a lot of these Russian tankers are under sanctions. That probably costs maybe 10% on the price of oil. So if you're looking at getting cheaper oil, well, you're probably not going to bother unless it's more than 10% cheaper. So you're looking at the Russians having to sell at least 20% below market. And even there comes a point at which there's a point of no return. So I think that the pressure that the US is putting on other countries will certainly take the edge off purchases from Russia. They won't do it entirely. I don't think US shale pumpers will come in at this sort of level. They probably need 80 or 90 before they get interested. But there's still plenty of capacity in the Middle East. So, yeah, oil looks as if it's probably stuck within this range, maybe $10 higher, although very often we're surprised and it might be $10 lower.
Richard, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you.
All right, and bear in mind that Asian markets are cheering the possibility of a trade deal being reached. Japan and the Nikkei up about 2.2%, 2.3% at this moment. And that sets a context for us here in India. But before we do, let's talk about what happened last week. Foreign institutions net bought equity on Friday, and they've actually been net buying. 6 out of the last 7 sessions they've been buying, and short covering in evidence for those investors. The benchmark Nifty 50 ended the Diwali week with gains of 1/3%. And in fact, it has gained in 3 out of those 4 sessions, but it ended Friday lower. And that, of course, includes that Muhurat session, which was very short. In fact, the Nifty 50 broke a 6-day winning streak on Friday. Take a look at the weekly moves, though. The mid-cap index gaining about 0.5%, small-cap index about 0.8%. The Nifty Bank relatively underperforming, but it has had its move in the recent past, so this is par for the course, and it flat with a negative bias. But IT, take a look at that move. 2.7% just last week. It was the hero of the show, so to speak. Most sectors declined on Friday, led by FMCG and PSU banks, but the Nifty Metal actually bucked the trend, gaining 1%. And we'll get you a sense today on the show as well what you should bear in mind going forward. Should you ride that rally or not, Neeraj?
Seems so counterintuitive to not ride it, right, Alex? Simply because the earnings are so good, so well spotted. Now that's why the trade setup kind of mirrors what you and Tamanna have just said, right? So one, the progress or setbacks on the trade talks will effectively determine what the markets do. We've had an earnings boost led rally thus far. Now it's upon trade talks. Today's implied open of 120 points in the green kind of tells you that. I mean, Nikkei, 65% YTD, buoyed further by trade talk promise. That's what Indian markets are doing right now as well. The US-China trade talk progress might well influence market sentiment. It is a solid earnings-based move in metals. I mean, this time around, we've not had a rally because Chinese metal prices have soared and therefore you have the Indian metal prices rallying. The numbers have looked very, very promising for the Indian metal names thus far. And just in case people have forgotten, banks, the deal flow has now crossed $7.5 billion in India, and earnings are not supportive. And my colleagues will talk about Kotak Bank amongst others as well. It just shows that market earnings are not too bad in banking names as well thus far. So, rate cards, increased liquidity, flurry of activity, good earnings. Banks are in a good space. So therefore, don't take your eyes off that sector at all. And guys, just the data on earnings as we do every Monday, right? So the earnings stats thus far, 341 companies have declared numbers thus far. The median operating profit growth for all of those is 13.9% versus 8.6% YOI. Talk about a slow Q2. Well, what Q2 is delivering is exactly the opposite. Banks, Nifty, non-Nifty tech names, right? And maybe Coforge is an example and others are an example. And banks, large banks are leading the charge on earnings. So, 13.9% operating profit growth. I don't think anybody penciled that in. It's early days as yet,
base
but hopefully this
effect, little bit of base effect.
You could argue, but the estimate should have priced that in, right?
Yes. Definitely better than estimates, no doubt about that.
What were the expectations? Single digit, right?
Hello, single digit. Yeah.
We'll see if the major auto packs reporting bring that down or higher.
Actually, that's true.
Those are the ones that are left. But nevertheless, key factors to watch this morning. I think the FOMC meet becomes important for this week as well. That's between 28th and 30th of October. Important cues coming in from there. Positive cues from the US-China trade talks will be a big boost, especially for metals, among other sectors. As far as the index is concerned, it's entered a short-term consolidation phase after a strong rally from late September. The broader uptrend remains intact, but the market is likely to trade sideways to mildly weak until key supports are tested. Consolidation will continue between 25,500 to 25,950. A buy on dips near 25,550 to 25,600 is a strategy that could be looked at. Immediate support at 25,700. Breach may trigger 25,500, though chances of that seem dim today if you look at the implied open. Crucial support at 25,500 must hold to avoid extended correction. Now, resistance 25,900 to 26,000. Important resistance breakout needed to resume the uptrend. As far as the Bank Nifty is concerned, support at 57,520. Crucial supports, and those numbers on your screen, 57,340, 57,050. The breach could track to 56,670. Resistance at 58,090, 58,560. So those are some of the levels to look at. But what's the F&O action? Going across to Puneet for more.
Well, thank you for that, and a very good morning to all of you. We've seen some selling happening on Friday, but largely a good start is what's expected this week. We have global key factors like the US-China trade deal that could possibly happen when both presidents decide to meet by the end of this week. So that will be a key possible trigger. Apart from that, as you rightly said, the Fed rate cut meet or Fed meet also is expected this week as well. So you have a lot of global factors, but earnings will likely continue to drive a lot of those conversations. We're expecting an implied open of 130 points, and that's largely led by the global factors, as we mentioned. When you look at the foreign investor positions as well, it's been steady in terms of open interest. Of course, we've seen that dip, but largely seeing some buying in Nifty futures. And because of that, for the first time, we've seen a meaningful increase in the index long for foreign investors, now close to almost 24%. This was hovering at 6% at the start of this month, so it's definitely seeing some covering of shorts by foreign investors and additions of longs as well. When you also look at the net OI put call ratio, it slipped below 1 for the first time over the last 12 to 13 weeks, essentially indicating the increase of calls compared to puts by foreign investors. So that's another key positive trigger as well. When you look at the open interest distribution, largely unchanged with an increased interest at 26,000 as well as 26,200 in terms of calls, while puts have largely remained at 25,500 for most investors. Open interest gainers and losers is the other key factor. We've seen minuscule change in a couple of pharma names, both Syngene as well as Lupin, 5 to 13%. Laurus Labs was one which was in focus last week. So that'll be the interesting one to watch what happens with that counter. While you've seen a meaningful dip in open interest for something like an Axis Bank. So you've seen unwindings of longs in a bunch of stocks with meaningful open interest change over Friday session. So Ashok Leyland, something like Zydus Life is the other one as well. So continue to see the banking pack to be in focus post earnings. Kotak Mahindra Bank will be in focus today, but largely a positive start is expected this week. We're very close to 25,800 as well. So that'll be the other one to watch if we can continue to upward momentum towards 26,000, but a positive start to say the least.
Positive start, but we've seen these days last week as well when the implied open was showing a very strong start, and then the actual open was a bit of a puski in comparison. But let's see how it goes. All right, Kotak Mahindra Bank first on my watch list. All things considered, a thumbs up. I have to say this is a caveated thumbs up, because a guarded one, because there's enough reason out there to be a little disappointed with higher provisioning, etc. So here's what's worked. Asset quality has improved sharply. Lower slippages and higher recoveries have aided improvement. Strong advances growth across portfolios. CASA improvement, that's current account saving account ratio, that improvement has helped cost management. Cost of savings account deposits have also come down on the quarter. That's 2.89 versus 3.32. There was a contraction in the net interest margin, but not as sharp as estimated. So take a look at some of the numbers. We'll do that first. So the net interest income up 4% for this quarter. Operating profit up 3.3%. Provisions. Now, this is the part where I say it's a little mixed. Provisions up 43.5% at 947 crores, and net profit was down 2.7% for the year. Net interest margin for the quarter did reduce from 4.65% to 4.54%. Now, at the bank's earning conference over this weekend, our banking editor, Vishwanath Nair, spoke to the management on how they're planning to take on the large inorganic opportunity. We're talking about more acquisitions or maybe M&A in the banking space. Listen in.
In the current environment, where you've just are in the process of coming out of the stresses from the unsecured, you're also sort of still managing the margin compression bit. Is it advisable from a management bandwidth perspective, from an environment perspective, to take on because you said that you're always on the lookout for opportunities. Is this an appropriate time to take on a large inorganic opportunity?
So let me answer the question, say the same thing, but say it slightly differently, because you asked me to ask the question slightly differently. Look, it's our goal and aspiration to scale. And in getting transforming for scale, we've always said we look at both organic and inorganic. We look at all opportunities that come along. And in evaluating any one of the opportunities, we always look at, does the opportunity make strategic fit? That is offset by does that particular opportunity affect management bandwidth, right? Because we are also doing a lot of things organically and growing the business organically very well. If the net of that is a strategic tick, then we look at valuations and financials, right? And if the strategic fit is right and the valuational fit is right, we go ahead. And that is true of a small portfolio tuck-in acquisition to a larger acquisition. So it's just the process that we follow, a disciplined process that we follow in evaluating any of these kind of opportunities.
And is 2025 the right time?
Well, for the right.
Okay, I'm just going to start with one. I'm just going to take one note on Kotak Mahindra Bank because we've spent some time on it, but it is the big one today. Jefferies has maintained a buy and hiked the target price to 2,650. They say the September quarter is showing improving core trends, beaten estimates with better net interest income and lower operating expenses and credit costs. Loan growth was healthy as well, which has compensated for weaker than expected net interest margin, although the calculation for net interest margin was worse than what has come through. So that's the story with Kotak Mahindra Bank. The next one, very quickly, Zen Technologies has also reported. Now you'll see the margin figure looking good, but numbers are weak sequentially and everything else is a bit of a problem. Operating cash flow does remain strong, but it is a second straight quarter of weaker performance. Order book is at 675 crores. Now the management is saying that it's a lumpy business and second half is expected to be better. In fact, you're going to hear from Ashok Atluri exclusively on NDTV Profit in just a bit. Revenues were down 28%, EBITDA down 19%. Margins were decent, even though net profit was down 4.6%. Margins maintained at 37%. Okay, Federal Bank is the third one. I know this came on Friday, but I thought the CLSA note was interesting. They've maintained an outperform and hiked the target price to 260. They say the large capital raise is an accretion to book value but dilution to EPS in the medium term. They've increased the loan growth estimates for financial year 26 to 28 from 15 to 17 to 18% and consequently increased PAT by 4 to 8%. They've cut earnings per share estimates 3 to 7% due to large share count dilution as well. But all in all, Federal is one to look out for.
You know, Dr. Reddy's Laboratories, we were having a debate in the newsroom as well as to how to tag it, because if you think about it, the earnings were expected to be weak. Why? Because of Revlimid, which is a key product for them. They were losing the exclusivity. So it's called a cliff, essentially, because it falls off a cliff. And there's so much competition that it has a bearing on the margins for the company, certainly. So the reason why it's a thumbs down is that it was indeed a weak quarter. It's met expectations, but it was a weak quarter. It was in line with the performance in the second quarter. Strong performance ex-US markets. Overall growth was led by the branded markets as well as the contributions from the nicotine replacement therapy portfolio. And there's also a contribution from semaglutide, GLP-1 kicking in for this company as well. The margin pressures on account of that North America price erosion and the lower PLI incentives. But on the flip side, you had a lower R&D spend that supported the EBITDA margins. The thing is, it's not expected to get any better. The weak margin performance is expected to continue in the third quarter. So that really is the kicker. That margin, just take a look at that number, down to 22.8% compared with 25.8% in the comparable quarter. Net profit rising just about 7% or thereabouts. I picked one note, Goldman Sachs and Dr. Reddy's Laboratories. It has maintained a neutral, but it's cut its target price to 1,225 from 1,250. It says that it was in line performance, but the Revlimid cliff impact has started. Semaglutide Canada approval is awaited. Double-digit growth in India business continues. Europe business remains robust. So all those things have resulted in the cut in the FY 26 to 28 EPS estimates by 2% to factor in the Q2 numbers, as well as lower semaglutide sales in Canada and the updated business outlook. The second company on my list is Crompton Greaves Consumer Electricals, and this is an interesting one. Not the biggest order, but what it means for the potential. It has secured an order worth 445 crore rupees in Andhra Pradesh for rooftop solar. And you must be aware of this, but the government is very, very keen on this project that will go across the country. The company is set to set up rooftop solar systems for 40,000 homes in Andhra Pradesh, and those systems will be 2 kilowatt on-grid systems. The context, of course, here is that it entered the rooftop solar market just 2 months back, so it's a pretty large order in that time frame. The company sees the potential for the rooftop solar market at 20,000 to 25,000 crore rupees, with a 20% growth per year anticipated. The last stock on my list is Bharat Rasayan. This is an update. It's not really something that has a material bearing, but it has been known to affect share prices. The board has approved a stock split in the ratio of 1:1. That is, equity shares of face value 10 will split to 5 rupees, and the board has also approved a bonus share issue on that split share in the ratio of 1:1. Corporate actions, of course, are subject to shareholder approval, but those two announcements coming through for the agrochemical player.
Yeah, interesting. You know, in terms of order wins, the NCC order also kind of stands out for the size, right? So, Lokha, watch out for NCC as well in the session today. But the first stock on my list is Coforge. Very strong numbers. Revenues up 8%, profit after tax up 18.39% quarter on quarter. EBIT margin 273 basis points uptake. It was 11.32. It is at 14%. I mean, that's the extent of beat that has come in. The deal wins have looked strong too. And look at the Nuvama note on Coforge. I thought from amongst all that have come in, this note sums up the results beautifully. So they say that along with solid results, the Coforge management has put to rest all concerns pertaining to margins and cash flows, thereby paving the way for a significant re-rating in their opinion. Of course, they're raising the FY26 and 27 EPS by 2.6% and 4.6%, building in higher margin and lower interest expenses. And their target price is 2250 versus the earlier 2000. So keep an eye out for Coforge. I think there could be a rub-off effect on some of the others as well. And by the way, the reason why we said non-Nifty tech is doing well, because it's not just Coforge which has done well. Look at eClerx. Look at those numbers. eClerx revenues were up 7.5% quarter on quarter at 1,000 crores versus 935. Margins at 22.7 versus 19.6, as a result of which quarter on quarter sequentially profit after tax is up 29%. This is stuff that we see in YOY results. This is a quarter on quarter uptake of 29% in profit after tax for eClerx. Not only that, two other things. The new sales, the ACV of the new deals is $46 million, up 42% quarter on quarter, and they've announced a buyback. Like, it hits all bullets that you can think of, and therefore watch out for eClerx. May well turn out to be the stock of the morning today. Actually, there are a clutch of others. Lastly, I thought just a deviation from the numbers, watch out for Indus and V today, because the Supreme Court decision is scheduled for today. It may get deferred, but the reason why that's important, because stocks have shown strength going into the event. And any kind of deferment or an adverse decision may actually bring back a sharp downtick as well. So be mindful of that. Look at the 5-day move, right? Vodafone up 9.8%, Indus Tower up 3.56%. So the stocks are saying that there's something in the offing, but be careful. If you're a day trader, the moves could be very, very sharp, particularly on the downside if the decision is adverse. So keep that at the back of your mind.
And we have to slip into a very quick break. On the other side, we'll speak to Ashok Atluri of Zen Technology, so stay tuned for that.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity. So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome back. You're watching India Market Open, and we're setting up for a positive start for the Indian equity markets at the start of this week. But we're bang in the middle of the earnings season as well. And let's talk about Zen Technologies numbers. Revenue downtick of about 28%, but there is a substantial expansion in the margins on account of a lower material cost during the quarter, and that has mitigated to a certain extent the impact on the bottom line, which has declined about 5%. To talk about both the quarter gone by and the path ahead, we're joined this morning by Ashok Atluri, who's the Chairman and Managing Director of Zen Technologies. Sir, thanks so much for taking the time. Absolute pleasure, as always, speaking with you. As I understand it, there were a few procedural delays and a few delays in the initiation of contracts. Is that the reason why the revenue downtick is taken place, and do you expect that to reverse in the second half?
So, because we were doing some regular contract for simulators and training equipment, the process was going on, then Operation Sindoor happened, and suddenly the emergency procurement took precedence, and the regular procurement kind of slowed down. And so, that is the reason that the order book is not so strong as of now. And we would have expected, had the orders come earlier, the second half, we would have executed it. But taking all into consideration, I think the second half, will definitely be, equal or better than this. But overall, our expectation is that the orders will start coming in the second half, even though I'm not predicting the exact month or date in this regard.
Got it. Mr. Atluri, good morning. Neeraj here, and wishing you a very happy summer 2082. How much of the current order book, sir, therefore, would, I believe it's what, 350 odd crores, executable, I mean equipment order book, excluding the AMC, is executable in the second half in order to support the revenue run rate for FY26?
Yeah, I think it should be about 230 crores or something like that, out of that. And we may have some more orders coming in, even that may be executed. But at this point in time, Neeraj, I'm thinking about the smoker who read so much bad about smoking that he finally gave up reading rather than smoking. So, I think will be a little careful with predicting, because, my ability to predict has not been so right.
No, fair call. No, the only thing is, Mr. Atluri, based on what you've done in FY24 and 25, right, and maybe a couple of years earlier, the expectations are so high that when the misses come in, they seem surprising. And then, therefore, the questions come in as to, is there something wrong in the ecosystem, or is it just a delay and not a denial? So I think that would be the broader question. Is it a order, process, etc. delay which comes in the second half, whichever month, quarter it comes in, doesn't matter? Or is it now difficult to predict that?
No, I think we are very, very sure that the ecosystem is very favorable to companies like Zen Technologies that are, developing the IP and not just reselling or, doing TOT and doing it. So ground up, we are developing the thing. And we see not only that, in the recent trials of the anti-drone systems, we have really excelled not only in soft kill, but, remote control weapon station from our partner, our subsidiary AI Turing, the system itself from UTS. All this converged, and we can see the pride not only in Zen Technologies but even in the armed forces, that Zen has actually delivering products that are absolutely world class. So to your question, that it is absolutely just delay, procedural delay, nothing, and we don't feel any sense that there is going to be any change. I think the growth is expected to be as strong as ever, and I have been talking about on a cumulative that we'll be hitting 6,000 crores. That still, I think that still holds very, very strongly in my mind that the next 2 years, this year may be muted, but next 2 years are going to be very strong.
I just want to reinforce the point so that my viewer and your investor knows exactly what you're saying, Atluri sir. And then I want to get into the acquisitions that you've made in inorganic opportunities. But what you're essentially saying is that the second half you expect order inflow to recover and be better than it was in the first half, but you expect that the conversion to revenue is likely to be along the same lines as what you've seen in the first half. Am I getting that right?
Yeah, yeah, you are right. I think absolutely on that. And we expect the orders to come in the second half, and most of the orders will get executed in the next financial year. They may not get executed in the current financial year.
Okay. I do want to ask you about the acquisitions that you've made, because you've made quite a few key ones and seemingly along the ethos that you have of creating from the ground up as well. I'm wondering what the revenue streams will emerge from those acquisitions and any that you have on your anvil right now, especially when the government seemingly is very keen on developing the maritime capability in its announcements that it has made in the recent past. That seems evident to us.
So, I think our acquisition of ARI was very, very timely. They are the big players in maritime and especially marine and naval. And we have started investing a lot of money into R&D at this point in time. And we see that the acquisition is actually, if you see, there are in the consolidation, they have significant contribution by both ARI and UTS. And so ARI, we think that actually with the focus on the Indian Ocean now, there's going to be a big acquisitions happening in the field of training and simulation for Navy. And we are very well placed to take advantage of that. I think, and we are going to deepen our involvement with the Navy. And as we speak, we'll probably be expanding the scope of our products that we have. And again, the way that we have been in the Army, we are number one in the world in Army simulators by far, by very, very long distance. There is no number 2 or 3, maybe it starts at 4. Similarly, we want to get a very, very dominant position in Navy, and that's our agenda for the next couple of years. And I think by 27 or 28, we should be really number one in the world in naval simulation. And I think, and of course, the biggest beneficiary will be the Indian Navy, but even our allies will be completely beneficiaries of this.
Interesting. Mr. Atluri, a quick question on margins. One of the standouts in the quarter gone by, I believe that's on account of lower material costs. Is this something that is likely to play out in the remainder of the year as well? Will you more or less stay within that range of higher range, therefore 37 or thereabouts, or do you see that dissipating?
So, if you look at the margins have been similar to the past, but they have been, because we have raised the money, the fixed deposit interest and some foreign exchange gains were added. So that's why the profits look a little higher. But if you look at the operational EBITDA, it is at the same levels as the previous one. So so if you adjust that, I think the operational EBITDA is at the same level. We typically have been saying that 35 will be the operational EBITDA and PAT will be about 25%. So it is hovering around those margins, only the actual operational EBITDA and operational PAT.
Mr. Atluri, just one final question. Assuming that FY26 stays at about 900,000 or what have you in terms of the numbers, if you have to do cumulative 6,000, that's a 93% CAGR growth for FY27 and 28. You are confirming that you believe that it is possible for Zen to do that?
Yeah, so it should be, you're right. I mean, it should be 5,000 plus crores in the FY 27 and 28.
Wow.
And we reasonably feel confident that that can be achieved. Yeah.
Great. Mr. Atluri, the earnings conversations are short. We do hope for a longer conversation at some point of time between this quarter and the next. But it's always lovely talking to you. All the best for the quarters ahead.
Thank you so much.
All right. That's Mr. Ashok Atluri. Don't look at this quarter. Try and look at the bigger picture is his message. Don't stop reading. For the fear of whatever it was, yeah. But smoking, yeah, exactly. Let's quickly do this. Our conversations on the technicals and the fundamentals as well before we move to the next big story of the day. Kush Bora, founder of kushbora.com, Avinash Gorakshekar, founder, head research, Avinash Mentor Research Services on the tech and the fundamentals. Kush, good morning. Thanks so much for joining in. Buying, selling, or holding?
A bit of both.
Okay.
Yeah, duality is the norm, right? The reason I say that is because the near-term setup looks very fascinating. Momentum, FIIs coming back and all of that, right? So yes, you have to buy. And remember how we spoke that the Nifty and the Bank Nifty both are overheated from a near-term perspective. 4,000 points of rally on the Bank Nifty, about 1,500 on the Nifty. Some cooling off was par for the course. We saw that. Now it seems like we're close to those support levels. PCR very, very mild. In fact, close to oversold territories. So you could see a rebound, a retest of 26,000. My concern, however, is the slightly medium-term outlook, where you've got the negative RSI divergence popping up. Now, the reason that is important is because time and again we've seen that this setup has played out not so well for the markets. Case in point being the September-October 2024 setup from where we saw a slip on the Nifty. So yes, from a near-term perspective, you could take a position on the Nifty. But from a medium-term perspective, I'd be a little cautious. So small ticket size positions should be okay. Bank Nifty is still a preferred trade over the Nifty. The profit booking on Bank Nifty on Friday wasn't surprising. What was surprising was the cash buying that the FIIs did, and still you had Bank Nifty correcting. Very clear sectoral shift. That's why you saw the IT sector doing rather well. So I would suggest, buying Bank Nifty over Nifty if you have a choice, and then playing for targets of 58,000, 58,500. The buy on dip strategy on Bank Nifty is still very much intact.
Kush, good morning. What are your stock calls?
Well, very good morning. And being Monday, we are looking at those weekly picks. So this time around, it's previous specialty. By the way, a quick update on CESE, something that we discussed 2 weeks ago. Second target, 187, fairly close to that. Plus, I think there's a dividend play also in CESE. So that might just, hit the second target today. You are better off booking off your profits there. Previous specialty, 4 weeks of positive gains, last 2 weeks of those on back of very good volumes. I think this momentum's here to stay. For targets of 3,060, 3,200, 2780 is where you keep that stop loss. And from the financial side, Aavas Financiers, the stock seems to be bottoming out. So you have a rising trendline support on Aavas Financiers. Volume uptick in the last 2 sessions, very interesting. 1710, 750 are your targets. 1630 is where you keep that stop loss.
Okay.
Okay, all right. Let's, before we get to Avinash Gorakshekar on his fundamental call, let's talk about a big story that broke over this weekend and then fell quite flat. Not so big story at the end of it, because it's another day and another hit job that has fallen flat. The Washington Post claimed the Indian government pressurized LIC to invest up to $3.9 billion in the Adani Group, a charge that LIC calls completely false and baseless. From multi-thousand crore bond deals to equity stakes, LIC says its decisions are independent, profitable and fully above board. Nisha Poddar joining us for more on this. Nisha, why it's even more ludicrous is because LIC has a robust investment portfolio, and I don't think the Adani Group investments even make it to the top 10 of their investments overall.
That's right. Let's look at the facts and publicly available data that is there to really see whether Washington Post's allegations have been true, hold true or not. First of all, they have said that government of India has pressurized LIC's investment decisions in Adani Group, and especially Adani Ports, which required over $500 million for repaying some bond or debt dues. Now, first of all, LIC has proactively refuted all these claims by Washington Post and also stated that their exposure to Adani firms is 30 36,000 crores, which is under 1% of their total AUM. The first big allegation of over $500 million of bond issue refinancing. That's what Washington Post has said, that it is for refinancing some earlier debt. And to that, the publicly available data suggests that Adani Ports had utilized that particular money for really buying back the bonds which were maturing in 2027 and 2029. Also important to note that LIC is receiving an additional profit with 1.26% of spread over 15 years GSEC. So that is a profitable investment coming in for LIC by way of this investment in Adani Group. Also to look at the big question that Washington Post really asked is Adani dependent on LIC for its fundraise and funding requirements? Well, debt from LIC is less than 3% of Adani's total debt. 50% of Adani's debt is from overseas investors. So that particular point gets refuted here. Other large investments that have been done in LIC, and is LIC really the sole investor? That also is one of the claim by Washington Post on Adani in this particular bond issuance. So is that of its investment decisions or general trends of decision? That is a big question to be asked. And here again, we have found out that LIC has been making or being the sole or the largest investor in many of the conglomerates and large companies in India, and the list is right here. Now, the second allegation also is of other international bankers and institutional investors, whether or not they invest in Adani Group. And there again, the fact suggests, and we have many instances in this particular year where Adani has received investments from many marquee foreign investors. So looking at the overall size of LIC's investments, and equity issuance, remember, could be just market trade by LIC by way of even corporate action and equity action of Adani Group, which has unlocked value in several of its verticals, starting from Adani Enterprises way back. So there again, by way of that, LIC could have held larger stake in many of the companies in LIC. But when it comes to large investments, top 10 investments of LIC in the large conglomerates or businesses in India, Adani Group does not fall in that. So a lot of these Washington Post's allegations fall flat when we look at the facts which are publicly available data on the listed companies of Adani Group.
Nisha, great work, and just point by point rebuttal of most things, and therefore very well done, Nisha. Thanks for that. Because at times I think we give too much credence to pieces that have come in from some global publications, but it's important to dissect them, and to do that, an expert voice, Sanjay Ashar, senior partner at Crawford Bailey, with us as well. Sanjay, thanks so much for joining in. And you know, whether it's for A particular group or B, my principal question is that for an institution like LIC is, having a committee, having a board, having enough checks and balances in place, is it even possible to think of or allege that there could have been some malified intention or some pressures for any kind of investment that an institution like that has to do?
Absolutely no, because as you rightly pointed out, there are checks and balances. There would be the investment committee of the board. There would be the criteria which would be fixed by the investment committee and the board for the purpose of making investments. And only if they meet with the requirement or the criteria fixed by the investment committee or the board, then only the investment team would have invested. So by saying that there is some mala fide, I don't think it will hold any water, because LIC, which is one of the largest investor in the country, has a robust system where to invest, where not to invest. So to my mind, it would have met with all the criteria fixed by LIC's committees, and therefore I don't think so. Okay, there is any mala fide which is involved.
Sanjay, morning. Alex here. This is a group that has a lot of large physical assets, infrastructure assets, and it is a stated objective to raise considerable sums of money over the course of the next several years. It has been going abroad, and there has been considerable interest from global investors as well. This seems a little motivated. Would you agree?
Yes,
And,
I would agree with that.
and what is your rationale or reasoning as to why you would think that?
No, see, look, if the group is growing and in case there is large investment which is coming from any state level enterprises, there are people who would bound to raise such questions without verifying the facts, without verifying whether it is only LIC which has invested in the group or which has other global investors also who have invested in the group. As I understand, there are other global investors who have also invested in the group in debt instruments. So I don't understand as to why a global publication is raising such an matter where the largest investor in the country, which has a robust mechanism and which is there in existence in 1956, is investing in a strong group like Adani Group.
It's actually more of an attack on LIC than anything else, Sanjay. Hi, Tamanna here. And that is at the core of it, because LIC is the holder of value and savings of crores of Indians. And that is where the real attack is.
Yeah, but LIC has, as I understand, more than 20 lakh crore amount which is invested
Of course,
in several.
they have to. It doesn't make sense for them not to.
Yes, and it is also, there would have been IRDA inspection as well. So I don't foresee any issue where some money has been invested in a particular group.
So much.
So even if it is an attack on LIC, LIC has robust policies. Otherwise, it would not be the largest investor in the country.
Absolutely. Thank you so much for that, Sanjay. Ashar there. Well, that story has definitely fallen flat. We'll take a very short break, but we're coming back with the pre-open rates. We're coming back with top ideas for you this Monday morning before markets open. The implied open showing a strong start. How do you make the most of it? All of that when we return.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ये बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting.
Welcome back. You're watching India Market Open. It's that time of the morning. Samit Sarkar back with all the chatter from the dealing room. What's the buzz this morning, Samit?
Be quiet. Good morning, Tamanna. Multiple stocks remain in focus given that we are already in the earnings season. So a lot of action that we are seeing for stocks which will be reporting their numbers. Firstly, when it comes to PNB Housing Finance, now dealers are indicating that there are buy flows on large HNI desk, and they're expecting the new CEO announcement name to come out very soon. In fact, they're expecting someone from the private banking side to join PNB Housing Finance. When it comes to Paytm, there are buy flows on PMS desk. Dealers are expecting some positive corporate development or positive development to happen soon when it comes to Paytm. For Tata Steel and Shree Cement, there are sell flows seen on higher levels in both these counters, and dealers are indicating that the second quarter numbers could be weaker than what the street is anticipating at this moment. When it comes to Vodafone Idea and Industars, both these counters were seeing positional buy trades being taken by large HNIs and HNIs on Friday, and this was largely on the back of the court hearing that is today on August 27th relating to the AGR matters. Keep an eye out for Industars and Vodafone Idea as well. When it comes to Waaree Energies, there are sell flows on institutional desk is what dealers are indicating, and when it comes to Crompton Consumer, there are buy flows on institutional desk is what dealers have indicated. So buy flows on Crompton Consumer and sell flows on Waaree Energies on institutional desk is what dealers have indicated.
Got it. Okay. Thanks, Somit, for that. And as usual, an interesting set of stocks that you should bear in mind. Avinash Gorakshakar with us this morning. Avinash, our apologies for coming to you late. The nature of the news system, you have to address stories when they do come. But I want to ask you, out of all of the stocks that you've looked at with fundamental developments on the earnings front or otherwise, what according to you could well be the stock of the day? And here you have Kotak Mahindra Bank, or you have Dr. Reddy's Laboratories, or even e-clerks from the smaller companies?
I think, good morning, Alex. I think e-clerks definitely looks pretty interesting. I think they've announced a buyback also at 4,500 rupees. Clearly, I think numbers have been pretty strong. The buyback is another sweetener. And Kotak Bank numbers have been much better than
e-clerks. But itna news.
Avinash, yeah, please continue. Please continue. Please finish your point.
So basically, within the choices, Neeraj, I think it is e-clerk and Kotak Mahindra Finance. Kotak Mahindra Finance, we had a discussion on your channel post the results. I think numbers have been slightly better despite the headwinds. And I think the bank is pretty confident that in the second half, we could see a little bit of better traction both on the deposit as well as on the growth side. So I think Kotak Bank could open on a steady note. These numbers have been better despite the challenging, headwinds in the quarter gone by. So I think we remain positive on Kotak. We believe that any dip in the market should be an opportunity to accumulate here. And e-clerk definitely looks interesting. I think the buyback at 4,500 rupees plus the kind of numbers which they have presented on a constant currency basis look pretty robust and encouraging.
Okay, some of the other sectors that might be in focus today, let me just go through that very quickly before you have the first ticks on the pre-open session come in. Now, watch out for metal stocks today. Positive developments on the US-China trade deal will definitely help with that, and I think that whole commodity space is something that you should watch out for. Mixed cues for large caps, but private banks may buzz on the back of decent Kotak Mahindra Bank earnings. Shipping and maritime stocks. So there's a maritime week which has kicked off in Mumbai today. All of the major ports and shipping companies are there. Some deals are expected. So watch out for that whole host of companies as well. E-bus theme is something that can come into play this morning. 10,000 orders have come in from CESL, and strong export numbers have come in for rice exporters. So watch out for that. Solar PV players could also be buzzing because of order flows that have been racking up in the system. So these are some of the companies that maybe you should see. But Kush, I wanted to come to you on Zentech. We heard from Ashok Atluri, and definitely I think you might see a bit of pain point in the stock this morning. Nevertheless, on charts, how is Zentech looking to you?
So not so encouraging, because there was an attempt at rebound, and as you said, if it does play out the way you're anticipating, then there could be some more pressure coming in. However, with that, what will happen is that the stock will test the medium-term support zones of 1300, and the risk-reward ratio will become extremely favorable. So if you want to buy a stock, this is a good time where the stock is trading close to medium-term support zones. But because there aren't very strong signs of recovery, I would suggest if you do want to indulge, do it with a very small quantity. Overall, the structure is consolidative to mild negative.
Okay. Let me ask you, so you didn't comment, Avinash, on Dr. Reddy's Laboratories, and it was expected to be a weak quarter because of that Revlimid effect. but would you buy if the opportunity presents itself, assuming that it's GLP-1 or semaglutide business takes off in the remainder of the year?
Yeah, I think Alex, numbers have been much better than what the street expected. So I think today you could see a little bit of small bump up on the opening side for the stock. But yes, I think if you want to basically take a bigger bet on the US market, and I think if you look at the kind of commentary which came out, I think definitely the second half looks better. And hopefully, if there are no major issues on the tariff side, which I think was clearly an uncertain factor for some more time. I think with more clarity coming in, I think definitely it looks pretty interesting, and I think one could definitely take a small exposure here.
Okay, the pre-open rates are in, and watch out for some of the banking names, watch out for the mid-sized tech names. I think that's the space you really want to watch out for because of Coforge as well as eClerx. Now, Coforge, 7.95%. We may not have an 8% uptick, but we'll have an uptick for sure. eClerx should come up on your screen. Info is okay. I mean, there's no other reason, but eClerx should come up on your screen. Okay, for now, flat. Wow, interesting, very interesting. We'll ask Kush Bora if he's inclined to trade this one or no. But I wonder if the Coforge rub-off effect is there on the persistent systems, on an emphasis and a few others as well. So keep an eye out for that bucket and that cohort of stocks. Very, very interesting. And then, of course, watch out for all the metal names, simply because if the other factor for steel, right? China is saying no to additional steel capacities, and if that is indeed the case, then you probably see some of the Indian steel makers have a rub-off effect as well. So that's one cohort of stocks that should be keep an eye out for. I don't know if you guys are catching something.
So just a small point on eClerx, it might well change. This is early minutes and once the market opens, but pull up the longer term charts, right? Look at the 6-month performance. It's 77%, if I'm not mistaken, over the last, or 74%, all right, over the last 6 months.
Very
so over the last 3 months, it's up as much as 20%. So therefore, there might be some fatigue that comes in. Why don't we ask Kush whether you would buy at these levels?
No, I see your 74% and I raise you 102. Look at the moves.
Kush ka Diwali mood gaya nahi hai.
Yeah, the poker's still on. Yeah, the poker face is still on. If you see from the April lows, the stock's up over 102%, and this is basis Friday's closing. It's actually run up a little more as well, seen some consolidation, some profit booking. And as I was discussing off air, I suppose, if it wasn't Privy, I was actually going to pick eClerx, but because there is so much news flow and positive one at that, and the stock could perhaps have a positive pop, and you might not get an entry into it. Hence, I chose Privy because there is a better chance of getting an entry. eClerx above 4500, 4550 zone will actually have a very strong breakout, so you could see a very big upside on eClerx. If you do get that big pop anywhere from 5 to 7%, then I think the near-term trade is done. If anything less, it's still a good buy.
Watch out for NCC as well. Big order win over there, and you have NCC popping this morning. We were talking about Coforge. Now, 5.9% revenue growth in constant currency in a tough market is perhaps what has a stock up, and you will hear from Sudhir Singh at 9:30 this morning as well. But Avinash, just your take on a Coforge this morning, basis numbers, and where you expect it to go. Is it a buy at these levels for you?
Yeah, I think Tamanna, numbers have been very robust, very encouraging, and I think within the mid-tier IT companies, I think Coforge definitely should do significantly better in the second half also. We have been telling our clients to accumulate it slowly, but I think overall, even at these levels, if one were to buy, overall, I think another bump up of about 12-13% is possible. So I think it definitely qualifies as a good candidate. Another company, Tamanna, which you mentioned, NCC, very surprisingly, a very large order, 6,800 crore order. We don't know the execution schedule, but I think definitely the market should be very happy. For a long stock, the stock has not done that well. But this order definitely is a very big order, and hopefully if it gets executed in the current year or maybe a little over next financial year, that would definitely be a very strong incremental earnings driver.
Okay. Do want to mention Ola Electric Mobility seems to be under a tad bit of pressure this morning. The company set to raise as much as 1,500 crore rupees. That seems to be having a bit of a bearing on the stock, down about 5% right now. And Zen Technologies, you listen to the management on this channel and Ashok Katluri talking about the fact that the second half of this year on the revenue side may not be very promising. It may not be significantly better than the first half, and that's because he expects the order wins to come through in the second half. The stock under pressure, down about 5%. NCC also up about 2%. What would you do with an Ola Electric this morning, Kush? If at all it continues in the current trend and down about 5% right now, would you venture in or would you avoid right now?
No. So Ola's an avoid. There was a brief phase when Ola did become a compelling buy because of the technical setup and the volume breakouts that we saw. But ever since it hit that 65-70 mark, it's again gone into that selling zone. And you wouldn't want to venture a trade, when the stock is again starting to see those selling pressures. So Ola Electric, very clearly an avoid. Just a quick word on NCC, like Avinash did, very constructive technically as well.
Okay, up about 2% right now. To go to our big brokerage call of the day, it's that time of the morning, 9:05, and what my colleague Sharad has selected is Incred, which has upgraded Tata Steel and SAIL to an ad. Sharad, what is Incred saying?
Well, a very interesting report coming from Incred, but I just like to add a perspective to it. This might be the second straight day where we'll see the metals buying happening across the counter, and the Nifty Metal Index might hit its lifetime high levels as well. Incred is also bullish now. They have upgraded Tata Steel to ad rating, and the target price has almost tripled to 224 rupees. Earlier, the street also knew that the European business is seeing a good turnaround. Let's look at Incred. The upgrade has been there to ad, and the target price has doubled. That's at 158. And if you look at JSW Steel, they have maintained the reduced rating, but the target price has been hiked from 776 to 939 rupees. And they have stated that the execution remains very strong as well. Interestingly, overall for the steel industry, Incred is very bullish, especially as the steel prices, they haven't fallen much, and the European prices, they are expected to recover as Ukraine rebuilding starts happening. Interestingly, the iron ore prices, they are expected to rise and may lead to a ban on exports as well. Domestically also, I checked the pricings of iron ore, those price reductions are happening, and today itself overall, if you look at the macro specific news flow from US and China, though that augurs well as well when it comes to pushing the metal prices up globally. And even, of course, overnight copper prices went up 2.5%. So this would be a day for metals as well.
Your top metal pick, Avinash?
I think within the metal pick, Tata Steel and Hindustan Copper. See, copper prices have also started moving up. So Tata Steel definitely, both from a domestic as well as from a overseas market play. I would say that Tata Steel at these levels looks pretty attractive. Valuations are very comfortable, and hopefully, if the US-China trade deal happens much faster, then I think you're going to see global metal prices also rising. So this definitely qualifies as a good, reasonable bet within the metal pack.
And I'm wondering if now's the time, because there is always a slip between the cup and the lip when it comes to Trump and trade deals. But having said that, if you want to take a bet, is now the time to take a bet on metals, and if so, where, Kush?
So again, with the caveat that they are fairly volatile stocks, at least Tata Steel is not a bad bet, but Avinash has already spoken about it. Let me add a couple of other names to it. Nalco, very interesting setup. It's not had a Hindalco-like move on Friday, but it still had a very decent move, medium-term structure, very, very interesting. So yes, for intermediate targets of 242 and about 249 with a stop loss around the 232 mark, Nalco is very beautifully set up. And one stock which is on the verge of breakout, slightly preemptive, is Jindal Stainless. Rising trendline support, but has a strong resistance around the 815 mark. If that is taken out, you could see an ascending triangle breakout, which is a very strong one, and then the stock could head to 830, 845 levels as well. So Nalco currently, in momentum, and Jindal Stainless slightly preemptive, but still good structure.
8 minutes done, and keep in mind, viewers, that we should just do a quick check of the 3 or 4 stocks which are expected to be the best performing ones, or at least the news flow is very solid, right? So Kotak Bank out there, the news flow is solid. Maybe the stock starts off lower, marginally lower. Coforge, E-Clerks, 2 names, NCC the 3rd name. And let's look at the starts there. Coforge 5% higher, is the trade already behind you? E-Clerks 2.5% higher, is the trade behind you? And NCC 3% higher, is the trade behind you? I'll ask Avinash about maybe we've already spoken about the others, but not Coforge maybe. But Kush Bora, is the trade behind you on NCC, Coforge and E-Clerks?
I'm afraid.
On all 3?
Yeah, all three. You don't want to buy on a 3 to 5% kind of a pop.
Okay. Avinash Gorakshekar, 5% for a Coforge. Now, you looked at the commentary, you looked at the performance for the last 3 or 4 or 5 quarters. Is this giving you a chance to invest still, or are there better mid-sized tech names? Also, you were constructive on e-clerks from a fundamental perspective, so not from a trade perspective. 2.5% higher, would you go out and buy an e-clerks this morning?
So I think as far as buying would be concerned, definitely, maybe if somebody has a 12 to 15 month kind of time frame, E-Class still looks pretty interesting. I think Coforge, I would wait for a slight dip to enter. But clearly, I think in terms of the commentary, in terms of the performance, Coforge looks pretty interesting. I think the second half looks equally robust, a very strong order book and a very good management commentary. E-Clerks, I think around 4,500, which is the current price. I think one can start putting a little bit of funds here. But yes, I think on dips, it could possibly give you a better ROI. Neeraj.
I want to pull up Kotak Mahindra Bank, and remember, this is the pre-open session rate, so it'll possibly change, and of course you will see what the opening rate is. But remember, in our commentary this morning, the numbers look good, but there is an ointment in the fly. There is a NIM compression.
Wow.
Fly in the ointment. Sorry.
I thought this is something.
I was wondering which
Monday
fly and what, which ointment.
Yeah. This is dal mein kala. Not even dal mein kala. I mean, it's not all a happy state with Kotak. So, I don't know, beyond a point, better than expected, kahan tak kheench sakta hai, because there is a NIM compression. Growth seems to be lacking in this bank compared to its peers. On charts, how are you seeing Kotak?
Who's made money in Kotak in the last 4.5 years, right? So the only
no one.
No, exactly. No. So the only saving grace or ointment in the fly, right? No, or the only positive rather, is that the stock is holding above the long-term resistance zones of 2050. Now, what that will do is that will act as a near-term support. Every time you see the stock come to those levels, there'll be some buying coming in. But other than that, there has been no outperformance even from a near-term perspective. So if you have a trading bet, you see some kind of a pop, let's say again closer to the 2175, 2200 mark, you might want to, 2200 also if it comes about, you might want to just book profit and stay out. Positionally, HDFC and ICICI still look good. Otherwise, PSU banks are still the way to go. After a week's pause, they've been up and running again. So PSU banks still for momentum play.
But by the way, okay, so fair point on not being able to time this on Kotak Mahindra Bank. But very quickly, April 27th, 2024 was when it hit a low of 1546 or thereabouts. The stock is up about 40% from that point. So if you manage to catch that low, you have managed to make money.
Okay, so since Kush has done a call out for who made money in Kotak Mahindra Bank, please come to our socials and tell us if you did, and if you were the lucky person to catch this low. So that would be interesting. Just looking at SBI Life for a second, looking pretty decent as well. There are constructive notes on SBI Life. Just in the insurance pack, Avinash, is that something you're liking? Their GST hit seems to be less than what was expected.
No, exactly. I think numbers have been better than expectations. I think the stock is up because I think overall the management commentary and the numbers have been slightly better than what the street expected. And I think typically, for the insurance companies, the second half, especially the fourth quarter, is supposed to be a robust quarter. So I think first half has been better than expectations. Second half, we expect that, the momentum will continue. And I think you could possibly see a stronger momentum kind of growth on the business side in the second half. So yes, I think around these levels, if one were to look at a slightly longer term entry into the insurance space, SBI Life as well as ICICI Pru, we are positive on both these companies in the insurance space.
Okay, your favorite insurance company from a technical perspective, I don't know who you insure with, but from a technical perspective?
Yeah, could you qualify that? Has to be SBI and that also I say because you've asked me a question on this sector per se. HDFC and ICICI not going anywhere, in fact seeing a sharp round of downtick in the last 2.5 months.
You're talking about ICICI Pru?
ICICI Pru and HDFC Life,
yeah.
Both of them seeing profit bookings, downward sloping channel movements. The only reason SBI stands out is because it's held ground and it's consolidating. Breakout will come above 1900, 1885 to be precise, but 1900 to round that off. Otherwise, there isn't big momentum. You've got a lot of other plays. You might as well stick to those.
Okay. What are those other plays? All right. What's buzzing this morning? You're seeing steel. Steel is in action. Hindalco. On the Nifty stocks, Hindalco looking good, Tata Steel looking good. So maybe those will be some of the action-packed names. You'll see SBI Life is top gainer, JSW Steel looking good as well. I think Coforge is something that you should look out for, good numbers. Neeraj, what else will you be looking at on first stick?
Yeah, let's see the Nifty open, Tamanna, and then let's see if Indian markets cheer the possible US-China trade deal, where it's actually good for global growth, right? So no reason why we shouldn't. But here come the rates this Monday morning, not as buoyant as 8 a.m. was suggesting, but 45 points in the green. Let's see if in Kush's words, this is a chalava and it actually picks up. It's picking up slowly, by the way. 64 points now in the green. Banks are quiet. I wonder if IT is doing the trick. About 1/3 of a percent, not bad. Metals might be doing the trick as well. Mid caps and small caps lying flat, maybe. Yep, small caps too, absolutely flat. Let's let the Nifty metal 0.6% higher. I think Tamanna highlighted is one of the sectors to watch. Let's get the heat map up on the screen and see what's moving and what's not. SBI Life, a lot of brokerage notes constructive there, by the way. That stock is starting off 2.7% higher. I believe Nuama and Dam Capital have upgraded the stock. Tata Steel 1.3% higher, Tata Consumer, Shriram Finance, Reliance Industries 0.86% higher as well. That is the reason why the Nifty is actually 0.3% higher. There is a heavyweight out there which is putting its punch. Interglobe Aviation, the DGCA data seems to suggest that Indigo has its schedule higher by 10% for the upcoming season relative to the past. So keep that in mind. That is possibly working in Indigo's favor. What is not doing well? Very few, by the way. Stocks, Kotak Bank starts off about 1.9% lower. Growth banks, lower than HDFC Bank, which was lower than ICICI Bank. So Kotak Bank starts off lower, Infi starts off lower, and then a smattering of Bajaj Finance, Max Health, Adani Port, BEL, etc. Nothing too much really. So Tamanna, metals, you got that sector right. Reliance doing well, and SBI Life, the star of the morning on the Nifty.
Just coasting along, not good enough for the street. That's very clear from the Kotak numbers, and which is why that thumbs up was with a big caveat. That's very obvious here. I want to pull up the Nifty contributors before we move ahead and see what's dragging down the markets. Yes, it's Kotak Mahindra Bank is a bit of a drag there. So is Bajaj Finance and M&M. Reliance, they're pulling up the Nifty this morning. Remember that Reliance AI announcement with Meta helping this morning as well. Even Stevens in that sense. Let's pull up the sectoral heat map and look at what's happening. I mean, we were talking about the US-China trade deal. Maybe from an Indian perspective, it's a bit of FOMO, right? I mean, there seems to be trade deals all around. Where is our trade deal? Are we going to be last in line because we were supposed to be first in line? So maybe that is something that's playing out as well on the mind of the market this morning. Nifty Realty looking good this morning, about 1% up. Metal stocks, like we told you, that's an obvious one. Oil and gas sector also looking fine. Crude spiking up, but not too much of a worry right now. Defense stocks, this is the Zentech impact perhaps, and Nifty Bank also maybe dragged down by a Kotak Nifty Private Bank. But all in all, it's not a bad screen. It's not a fabulous screen, but it's not a bad screen for a Monday morning. I want to pull up the India VIX for you for just a second and give us a sense of what's happening over there. Wow. 3.5% up in the green. So there is maybe a bit of concern coming in, and maybe this is the point, right? Why are we last in line on this trade deal? What is happening there? Are we going to find a way to make this happen? Sensex completely flat right now. Nothing much happening there. Less than 0.25% up. Let's look at specific stocks, and it's been a results-heavy weekend. Let's look at some of those counters and how they actually performed at the end of it. I'm looking at Coforge, Zentech, Supreme Industry. Coforge seems to be the winner of the morning. 4.5% up on better than expected growth in what is a tough quarter, and that's what the management is saying as well. You'll hear from them in a short while from now. Zen Technologies is the other one that we're looking at. I mean, this idea that second half will be better is not something the street is buying, though Ashok Atluri did say that. Please go back and watch his interview if you missed it. You'll find it on our YouTube channel. 6% down on that stock this morning. Supreme Industries, so-so. Kotak Mahindra Bank seeing pain. SBI Cards, Dr. Reddy, some of the others that reported. SBI Cards 2.5% down. Quite a few notes, showing some worry there. Dr. Reddy's 1% down in trade. Clearly some pain points there as well. NCC is something I want to look at. Was buzzing in the pre-open order. Some 6,000 crore plus order win for NCC. Execution is of course one question, and we'd love to have the management on the channel and tell us what they think. GPT Infra, another order win play, about 11% up. This morning in trade. Ola Electric is raising money. It's dilutive and they're going to be raising money at much lower than what their IPO price was. So 2% down on that stock. Metal stocks. Let's look at metal stocks. Some of them, of course, shining on the Nifty, but Tata Steel, JSW, Hindalco, all of them up in the green. So is SAIL and NALCO. So metals may be shining, but overall quite a muted start to Monday compared to what the sense was at the start of the show at 8 a.m.
Another mirage, Tamanna, and Kush using the Hindi word, of course, chalawa, to describe what the indicative open points to and what it eventually displays on your screen. But 1/3%, you'll take it. 25,875 heading towards 900. Maybe, just maybe, you could reclaim 26,000 in this week, but we'll speak to Kush about that. I want to point out a couple more stocks from the broader markets, and I'm looking at the 500 right now. Zentech, the worst performer, of course, down about 5%, but you also have something like a CESC, which is underperforming, down 3.4% or thereabouts, in fact 3% or thereabouts. Shipping Corporation of India seeing more money being taken off the table. Of course, it's had a ratcheting ride on the upside. The question that I will ask Kush in just a bit is, should you now jump off the wagon? Has it gone too far? Latent View reacting to numbers. And we haven't spoken about this, so let me take you through the numbers. It's not really too bad. I guess to a certain extent, it is the downtick in profit in the quarter gone by that really the street is not liking, down about 12.7% PAT number, though the revenue uptick has taken place 9.1%, and the margins have actually expanded to 17.8%. That's just a snapshot of the numbers. SBI Cards also reacting to numbers, down about 2% or over 2% at this point, and another stock that is reacting to a performance that was not necessarily along the lines of what the street had anticipated. Kush, I'll come to you on a couple of names then. Shipping Corporation of India, and the other one was? Okay, I lost my train of thought, but Shipping Corporation of India, let's talk about that.
So very interesting moves on this one, Alex. Friday, if you recall, we spoke of how 240 was a resistance, and once that it's in the clear of 240, you could see 275, 300 come, in a very short span of time. Even I did not expect that it'll be on the same day. So Friday it hit a high of 280. Very sharp moves, all the volume back, but very sharp move from a near-term perspective. So some cool off is actually a healthy sign. If it does slip further, closer to 255, 260 zones, that will be a good point to accumulate. Then again, you gun for targets of 275 and 300 with a stop loss around the 240 mark, which was the resistance, and now will start acting as a support. So there's still some steam in SCI, but a mild cool off and buying close to the 260, 255 zone, more healthy.
Okay. What about CESC? Down about 3% at this point, more pressure in the offing. Would you say that it's something that you should take off the table, if at all?
So, like I said, a couple of weeks ago, this was the weekly pick. 187 was the target, came very close to that. 185 was Friday's high. Right now, what you're seeing is profit booking, because the stock had a near vertical rise from 650 odd levels, at the start of October, and went all the way up to 185. So, yes, there could be some more steam left, but this is the last leg of the rally. So, you might want to take money off the table once it hits that 185, 187 zone all over again.
On the winning side, just one more stock that we've not marked so far today. RR Kabel is seeming to have a great morning and a great start to the week. It's up about 5%. So the question that I'm asking Kush is, would you buy at this moment?
Alex, this is a very interesting find, because this is from a very short-term perspective. 1280 was the resistance. It's giving you a breakout of that. Slightly medium-term, 1300. Beyond this, I think the stock has a fair degree of momentum that could kick in. 1335, 1370 are the targets that I will gun for in RR Kabel. So could be slightly preemptive, because we are above 1300, but a closing above this will make it very interesting. Keep your stop losses at 1280. So yes, this is a good move. Could be a start of the breakout.
Viewers, when Avinash Gorakhshekar started talking today, he said that the stock for the morning could well be e-clerks. We spoke about it at the trade setup as well earlier on in the morning, because of the numbers, the buyback, all of that, and the deal wins, right? 30% profit growth, it is showing in the way the stock is doing. Now, Kush Bora rightly said that the risk reward is not in favor if you're buying it 3.5% higher. Avinash, I know we're making too much of e-clerks conversation this morning, but 5.5% higher. What would you believe based on what you've seen in the last quarter and this quarter, that the profit numbers or growth numbers for e-clerks could look high? A lot of our viewers tune in right now. They would want to know what is outlook ahead for e-clerks.
No, I think we continue to be positive, Neeraj, largely because this momentum is going to be maintained, in fact, get better in the second half. And I think once the buyback happens, you're going to see all the metrics like the ROE, the earnings growth, improving. And I think definitely at 4,500 rupees, the buyback definitely looks attractive. My sense is that this can be a good portfolio kind of stock to cook in your portfolio, because I think, consistently it's been moving up, as Push mentioned that, in the last couple of months itself, the stock has gone up. But I think this has been aided by strong numbers, both on the top line and profitability front. So I think this is a very unique play. I think there are not major kind of any headwinds, and the kind of trajectory which the management has hinted, I think clearly the third and the fourth quarter would be equally strong. So, clearly now having gone up by 5%, I would say that, it's better that, it cools off a little and then possibly one starts accumulating it again. But definitely structurally over the next 12-15 months, this looks to be a good opportunity even to make money from these levels.
Keep in mind that amongst others, there are not too many winners today. So, I mean, Alicon or Nelcast and a few others, but the one which, e-clerks kind of stands out on the losing side. Alex is right. There is GM Breweries, yes, but Zentech quite up there as amongst the key losers in the session. Kotak Bank is under pressure though, on the back of the Q2 numbers. And Vansh is joining in with what brokerages are saying. And while optically it may look like some of the brokerages are very constructive or might be constructive here, Vansh, it's not all so and it's not all uniform, right?
Right. So, firstly, let me start off with Morgan Stanley. So, Morgan Stanley has maintained an overweight in the target price of 2,600 on the stock. They believe that the they have liked the broad-based loan growth as well as the moderation in the asset quality. Now, they believe that the NIMs was down as on the back of the unsecured loan mix that has moderated. Also, if we talk about the NIMs, it is the only catalyst left, and they expect a turnaround in the next quarter, and they further expect the Kotak Bank to be a re-rating candidate as the earning outperforms going ahead. Second, we have Investec. They have also maintained and hold, and they have hiked the target price to 2,335 from that 2,275 rupees mark. They believe that the Q2 performance was in line. It's the elevated valuations that limit the upside for the stock, and they also believe that the healthy loan growth has been led by lower yield segments, and the sharper NIMs and the fall in the NIMs have been sharper as compared to its peers in H1 FY26. Lastly, they believe that the credit costs have eased sequentially as microfinance and CC stress has moderated for the company as well.
Okay, let me quickly go across. Obviously, pain point in Kotak Mahindra Bank, and the banking pack also not looking that great. But two sectors that you're watching out for, Kush.
So this is a very interesting development, and if you want to catch a rally early, this is what I'm spotting. Two sectors. One is capital goods, and the other is real estate. Let me start with the caveat that I was a little circumspect on real estate for some time now, but now if you start to see the moves that are coming in, at least in terms of the prices, some of these are very encouraging. Look at something like a Brigade Enterprises. Look at something like a DLF. Key resistance levels being taken out. Steady buying. It's not a runaway rally. But this is healthy and this is constructive enough to tell you that there could be some uptick, that could come in. So, erstwhile defense, a couple of months ago we spoke about how defense, could well rebound. I think Brigade, from the real estate pack is in that space where it could rebound. Something that's already doing well and could go further high from here is the capital goods space. And within that, two picks, there is Cummins and there is L&T. Look at the moves that these two stocks have made in the clear of some of the key resistance levels, again, on the back of good volumes at the top. So if you want positional trades from a momentum perspective, capital goods, if you're playing for a recovery and a favorable risk-reward ratio, I think real estate is your sector. So these two sectors, very interesting developments.
Okay. All right. Gentlemen, thanks so much for joining us this morning. Pleasure speaking with you as always, and important updates that you've discussed with us today. Let's talk about Coforge, one of the top gainers in trade today, and that's on the back of its results. Performance, of course, in line with steady growth led by the travel vertical and strong deal wins across key markets. Now, before we get the management in, let's get the numbers out of the way. Puneet joining in to take you through those key numbers. Puneet, the street certainly cheering the performance in the second quarter.
Well, definitely, Alex. And we saw that roughly about 5.9% constant currency on a quarter-on-quarter basis is a stellar number to say the least. Also, multiple positives on 14% EBIT margins that the company has been able to achieve in this quarter. And also, the concerns that were there in the last quarter with cash flow generation has now been, subsided in this particular quarter. And expectations are that the improvement will continue in FY26. That was a key positive. The other one was 10 deal wins have already been announced in the first half of FY26. That's already compared to 14 that were done in the whole year of FY25. So definitely the trajectory is quite positive for Coforge, and the demand improvement that the management has highlighted as well is another key positive as well. So multiple key positives for Coforge in this particular quarter, and it seems to be that what they've done in H1 is there's still a lot more to come in the second half of this year.
Sudhir, very good morning to you, and thank you for your time to NDTV Profit. I think that's key. Better performance than expected in a tough quarter, because it has been a tough quarter in terms of the atmospherics.
That's correct. I think it's been, from our vantage, exceptionally strong performance. 5.9% CC sequential growth. 14% EBIT, which was 220 bips higher year on year compared to last year. And then everything else that came along with the growth. Balanced growth coming in from almost every vertical of the firm. 5 large deals signed. Executable order book, which is the next 12 months signed order book, at almost 26 to 27% higher than where it was at the same time last year. In what is, as you rightly said, Tamanna, a tough macro is something that we feel very pleased about.
So now this 5.9% quarter-on-quarter CC growth that you talked about, how much of this has been fueled by acquisitions, Sudhir?
Absolutely nothing. This is organic. There was no acquisition. This is 5.9% CC organic growth coming on the back of what was in quarter one, again, about a 5.9% CC organic growth. So there's no acquisition component to this. This is organic growth, and this reflects the balanced nature and the robust nature of the growth cycle that at least Coforge is experiencing right now.
So let's talk a bit about that. You made the point that this is what Coforge is experiencing. How we're seeing something quite different from the commentary that we're hearing amongst your peers and in the sector all around. So what has been working strategically? Can you give us some insight on that?
Sure. I guess the macros for the industry continue to be tough, though on the margins, we do see demand rebounding somewhat, slightly. Within the rather tough macros that we're looking at right now, what's worked for Coforge and has worked for us for almost 9 years, this is the 9th straight year of what should be robust growth, very robust growth that we've delivered, has been a focus on execution and a culture of execution and intensity that's always uniquely been our own. We've always said execution is not just about talking about what we're going to do or sharing plans. It's about getting things done. And I think that ability to get things done exemplified in no place better than the manner in which we've embraced AI within our own operations, and the manner in which we've been able to bring AI to life beyond just pilots for our clients. That's made the biggest difference, and that's really allowed us to continue to plow ahead and deliver the growth numbers that we have despite the macros.
Okay, I want to talk a little bit more about the AI portion of it, Sudhir, because this is important and a pivotal point for the entire space, right? What is the extent of AI integration? What is the capex that you need to put in to be further AI compliant or ready? And what is the monetization right now for these AI add-ons?
Well, if you look at the metric that everyone looks at first, if you look at the revenue per employee at Coforge, that number has gone up extremely smartly. And that's the best reflection of the fact that we've not just embraced AI in terms of our own operations, but it's also reflective of the 4 platforms that we've created in order to make sure that enterprise adoption of AI by our clients goes up. If you look at the platforms that we have, Code Insight AI is a platform that's been extremely successful. Our platform when it comes to reverse engineering. Blue Swan, our own platform, has been extremely successful when it comes to orchestration and automation of workflows. And the third platform, Quasar, that we've always talked about, continues to be a platform that we lead with when it comes to driving transformation. So AI, our ability to embrace it, our ability to not just talk about it, but to actually execute, to actually get it done using our own IP, our own platforms when it comes to reverse engineering, when it comes to automation, when it comes to orchestration, when it comes to being able to look at processes and apply them in the context of clients is what's really set us apart.
And in terms of the order intake, you've seen about $500 million. That's a robust order intake. Is that sustainable? What is going to be the AI bump up to that order intake?
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
What is the deal picture looking like in the European market, Sudhir?
From our vantage, pretty good. This year, as a firm, in the first half of the year, in the first 2 quarters, we've closed 10 large deals. That contrasts with 14 that we closed in all of last year. As I said, the large deal velocity, despite the macros, is picking up. The large deal pipeline, even in Europe, at this point in time, is robust.
We talked earlier about atmospherics or, what the overall scenario is. And we had this blip with H-1B visa, etc. It may be easing, may not be easing. I know Coforge put out a statement that it doesn't really make a difference to you in that sense. But is it a chilling effect of doing business in that geography in the United States?
At this point in time, I think it's a containable effect of working with clients across North America. I would not characterize it as chilling, but containable and contained to some extent is how we would put it. Last year, for a firm with 35,000 employees globally, we applied for and secured 65 H-1B petitions successfully. That's a very small number given the 35,000 people base. We believe that we should be able to pivot towards on-site hiring to replace that small number without any material impact to operations, revenue outlook, or to margins.
Give us a picture on the employee strength, the HR strength, as well as the wage hikes. What is the outlook there? You have a lot of large companies maybe not onboarding as much. What is the picture for Coforge?
Well, given the fact that we are growing and we're growing very robustly and we expect to grow robustly this year and in the years to come, we continue to hire. Our net headcount number over the last few quarters, last few years has always been going up. It's gone up again this year. It's gone up about somewhere between 2 to 3%. The number was about 700 odd in terms of net headcount increase. We continue to hire from colleges. We continue to hire fresh graduates from colleges. And of course, we continue to hire laterals as well. So given the growth that we are experiencing and we anticipate, our hiring continues unabated.
This is a question that I asked TCS as well, and I'm going to ask you as well, Sudhir. In the age of AI, for people who want to join your company and who want to be eligible to work in a company like yours, what are the kind of skill sets that they need to have?
I think the foremost, possibly the only skill set that's a gatekeeper is being curious. We find the current crop of young students that we're hiring from colleges in India. And as I said, Coforge continues to hire to be a fantastic cohort in the AI age. That's largely because if you were to reflect on the skills and the experience that they bring to bear, it's very different from what the earlier cohorts used to bring to bear. Right? These are folks who've grown up in colleges. They've spent their time participating in hackathons. They have a very strong mindset around hunting for solutions and not necessarily counting on certificates as a surrogate to prove their competency. in the age of AI, that curiosity, that urge to find the solution using technologies that are changing, that are mutating, that are still somewhat immature is vital. So for anyone who wants to join Coforge, and a lot of people are because we continue to hire, that curiosity, that hands-on experience, anecdotally experience, having participated in a lot of hackathons and hopefully having won some of them, is what is of primary interest to us.
Mr. Sudhir Singh, thanks so much for taking the time. Pleasure speaking with you as always. Now, we've seen a sparkling rally for base metals with copper prices scaling a 3-month high and also aluminium prices hovering close to 3-year high. The question is, what does the picture look like going forward amidst this positivity and optimism about a deal between the US and China? What does that mean for metal prices and indeed for stocks in the space? We've got Vansh joining in to lay the context somewhat before we bring in our conversation with Aditya Velekar. Vansh, what are the key details to focus on here in your opinion?
Well, thank you for that, Alex. So yes, for Q2 FY26, it's non-ferrous that is expected to perform better than the ferrous segment. If we look at the ferrous segment now, the EBITDA is expected to increase sequentially. Now this improvement will be led by higher sales volume for the steel companies. Also, it would be aided by the lower coking coal prices. In fact, if we talk about the coking coal prices, they have been flattish on a sequential basis. However, we have witnessed a 15% decline on a YY basis on the coking coal front as well. Also, if we talk about the EBITDA, it is to be offset by the lower sales realization for steel companies. Also, if you look at the hot rolled coil prices for the steel companies, now the average domestic steel prices have fallen by 4% sequentially. We have seen a price decline due to the extended monsoon that has come in, and the domestic prices are trading at a 12% discount to the China prices as well. Lastly, if we talk about the price hike, now there are reports suggesting potential price hike post monsoon for steel companies as well. Also, if we look at the non-ferrous segment, what we are seeing is the aluminum companies may post a resilient numbers post their sequentially. Also, earnings are to be supported by the strong LME prices. In fact, we have seen a decline in the alumina prices, that is a raw material for aluminium companies. And in fact, if you look at the aluminium prices, they are trading at a 3-year high, and they have already witnessed a 7.5% gain in the past 1 month. So this is how the overall picture is panning out for the entire metal pack as well.
Okay, thank you for that, Vansh. Aditya Velekar joining us this morning. He's Senior Research Analyst, Metals at Axis Securities. Aditya, very good morning to you. You know, it's a great time to talk about metals. They're completely on fire this morning, and a lot of it on the back of the hope of a US-China trade deal. Where exactly would you spot the winners here? Is this now a blanket positive news for all metal stocks, or which ones do you think set to benefit the most?
Yeah, good morning. So, rather than focusing on the US-China trade deal, I think metals most as a pack, both ferrous and non-ferrous, the entire macro setup currently which we are in, that is positive because we have seen that the labor market in US is slightly weak, and that gives Fed much room to set their dovish tone, and that will be reflected in a 25 basis point cut in Fed expected in this next month and maybe in December month also. So the dovish tone of Fed, the quantitative easing kind of the US dollar weakness, all these macro setup is favorable for metals. That is number one. And then coming to each of these commodities, especially non-ferrous metals like copper and aluminium, the most important factor is the demand drivers are quite strong because of all this renewable energy pickup in China and then electric vehicle. Everywhere these non-ferrous metals are needed. And we have 45 million ton capacity cap, especially for aluminium smelting in China. That is kind of putting up positive support to aluminium prices. And then last week we have seen some smelter shutdowns at the Iceland Century Aluminium facility. And because of that, the LME aluminium inventory at the London Metal Exchange is also at a lower level. So all these factors points that the supply demand is tight, and if any supply disruption happens, like we have seen in copper, that the Grasberg mine was shut down, and because of that, there was supply tightness in emerging in copper. Now, similar we have seen in aluminium that one smelter shut down in Iceland, and then the prices got support. So all these factors are bullish for metals, and the metal prices will continue to hover in the elevated level.
Just last week, you had comments that were made by the Alcoa Chief Executive Officer that caused a spike in the prices of Hindalco and Nalco both. And the assumption here is that you have base metals that will see an uptick even from here because of the applications that they will be in. And your points are well made. But I'm just wondering, if you are to go out and buy at these levels, would you prefer the companies that operate in the base metal space?
Yeah, to answer your question specifically, if we put a sensitivity to aluminum prices, and suppose if from the current spot level of $2,800 per ton, suppose the aluminum prices rise further to a level of $3,000 per ton, then as per our analysis for Hindalco, our target price increases to 930. So, but that aluminum prices has to sustain for a couple of years for our target price to get achieved. And similarly for Nalco, the target price jumps to 275. But means our valuation is based on FY27 EBITDA. So that higher aluminum prices has to sustain up to FY27. So there are some smelters which are lined up in Indonesia, and some smelters will come up in India. So this kind of situation where the aluminum prices will remain high to a level of $3,000 per ton, that is not very sure will that level will sustain. But as of now, currently, if you speak, there is one probability that one big smelter in Mozal, that is Mozambique, which is almost 0.8% of the global aluminum capacity, there is a risk of getting it shut down. So that is why aluminum prices are also finding support. Despite the alumina, that is the raw material used for aluminum, is weak. So the cost support is not there, but the supply demand dynamics is tilting, which was earlier, it was almost neutral, that is balanced. Right. Now that supply demand dynamics is tilting towards deficit kind of a situation. So,
Aditya, sorry, I have a question more fundamental towards the cycle. And historically, I believe steel companies have traded between you could argue about 7,500 to 25,000 rupees per ton, right? Per se. So if I'm wondering if you believe that there is a possibility of this range, which is at about 11,000-12,000 currently, moving up higher, and therefore the next 2 or 3 years we have a up cycle wherein EBITDA margins and actual EBITDA numbers will rise disproportionately.
As far as steel is concerned,
purely steel.
For steel, the setup is slightly different. Means what we are seeing is there is a safeguard duty of 12% on steel, which is supporting the downside to the steel prices. So that is number one. As far as upside is concerned, that we have not yet seen so far. Despite now, if the monsoon is over, we were expecting that there should have been some upside to the steel prices, but that has not come up yet. That has happened because the supply, which has increased in this quarter, has kept in pace with the demand consumption growth rate which we have seen. So the supply has increased by 13% and the demand or the consumption has increased by 9%. So that is what we can talk about the current situation. Now going to future and taking a longer term view, you are right that the valuations are almost factoring in most of this positive news. However, we have to also see that most of the steel companies are increasing their production capacity. So individually, if you take the names, so JSW Steel is going to 50 million tons. Tata Steel also has a plan to increase its steel capacity in India. Jindal Steel and Power is almost at the cusp of its steel capacity expansion. So with this, the operational driver of volume also comes in, and that drives the operating leverage for the steel companies. And with the downside to steel prices limited because of the safeguard duty, the lever will be the operating leverage, right? And as we go forward, Aditya, and as this new capacity,
Aditya, sorry, I'm coming slightly short on time, and I just wanted to focus on steel in particular because of two reasons. One, the points that you made, but two, I just heard Kenneth Andrade say that it is a possibility, according to him, that the balance sheet of Tata Steel could actually be stronger than some of the largest FMCG companies in the next 2 to 3 to 4 years. Is the cycle looking that strong? And therefore, would you buy into any of the steel companies?
I don't think so. The cycle is so strong that
Okay,
we
fine.
could see, that we could see deleveraging taking place at this point of time.
Okay, thank you so much, Aditya, for speaking with us today. Steel in focus, but the way the markets have rebounded is also looking good. Nifty above 25,900. Pull up the intraday and a sharp move there. It's, I think, Reliance, among other things, that is pulling it up. Pull up the Nifty contributors and you'll see that as well. Yeah, RIL nearly 2% up. Kotak Mahindra Bank still weak, but seems to have recovered from where it was. And you'll see that on the heat map if we can get that up for you as well. So, yeah, that's where it is. Some recovery, nearly close to 2% down on Kotak Mahindra Bank coming in. But SBI Life continues to be a top gainer. It's the realty stocks and Nifty Realty which is really firing, 1.5% up on that index. And within that, I'd like to pull up a Brigade, which is doing really well. Brigade, DLF, Godrej Properties. Godrej Properties got a nod for a new development in Worli in Mumbai, if I'm not mistaken. Brigade Enterprise on the back of its numbers. All the 11 stocks in that index now up in the green. Oberoi Realty also doing pretty decently this morning, as is Sobha. So you have Realty pushing up, Nifty IT nearly 0.25% up. Bank Nifty also seeing some up move. So yeah, the implied open took some time to show itself, but you are seeing a strong morning nevertheless. All right, now focus also on the primary market. Lenskart, the eyewear retailer, set to launch over 7,000 crore IPO, opening for subscription on October 31st. But are the valuations really justifying its price band? Mahima joining in with all those details.
Right. So, Tamanna, I'll come to the valuations part very quickly, but just to give viewers a brief about, the IPO details as well. The IPO starts on 31st of October. Overall, the price band is set between 382 to 402. It's a fresh issue of 2150 crores, and there is also an offer for sale as well in this, entire IPO. With regards to where the company stands, of course, everybody knows the brand Lenskart, but it's an eyewear retailer, which of course is technology driven. FY25, it had around 2,700 total stores, of which around 2067 stores were in India. It operates both in, domestically and internationally. There's also international business, which accounts for approximately 40% of their revenue as of FY25. Despite only 25% of the total stores, international revenue is a big chunk for Lenskart. Now, it sells prescription eyeglasses, sunglasses, contact lenses, as well as accessories, and it controls the entire value chain, which is one of the strengths that Lenskart has. Now, with regards to this particular company, there are marquee names that have already invested in the counter. You have names like SoftBank, ADIA, Tamsec, Kedara Capital, as well as recent PTI reports also suggest that Radhakishan Damani has also invested around 90 crores ahead of its IPOs. Let's take a look at the key financials as well. Revenue has grown at a CAGR of around 33% over the last 3 odd years. EBITDA has also grown threefold in the past 3 years. Margins have also improved to 14.6% and has turned profitable in FY25 with a profit of around 295 crores. With regards to where use of proceeds are concerned, 4 different categories. Capex is going to be around 272 crores, lease, rent and license payments around 591 crores, technology around 213 crores, and marketing and promotion around 320 crores. Now, talking about the valuations part, valuations are not cheap at all. Now, if you take a look at, the upper band of the market cap, that's around 69,913 crores. We've considered a 30% revenue CAGR growth for 1 year forward, where the price to sales is around 8.1 times, price to EBITDA at 53.9 times, and a price to earnings of around 202 times, which is not at all cheap. Moving on to the SWOT analysis quickly. Strength, of course, it controls the entire value chain, which is one of the strengths that it has. Revenue has a CAGR growth of around 33% in the last 3 years. Plus, multi-brand portfolio is there for the company and is also expanding its global presence. In terms of weakness, of course, dependence on Chinese raw materials is a big thing for them. So, any disruption in supply chain could impact their overall operations. Of course, valuations not cheap. We already mentioned that. And return on capital capital is low because of weaker margins as well. Opportunities, the Indian eyewear, a lot of analysts are penciling in that in the next few years, at least for the next 5 years, it's going to grow at a CAGR of 13%. There's also growing demand where eye care is concerned, and expansion in international markets gives them a big scope. Lastly, in terms of threats, again, any kind of supply chain disruption from China will impact their operations. Competition from D2C and organized players is already there and here to stay. And lastly, tech advances may overall reduce the kind of demand for eyewear. So this is the overall view, and of course the SWOT analysis as well for the Lenskart IPO.
Okay, one thing is for sure, a lot of excitement about the IPO, and the valuations coming in are quite astonishing, northwards of 70,000 crores. Thank you for that, Mahima. So now you are going to hear from Piyush Bansal on NDTV Profit at 2 p.m. But here's just a small teaser, because I had the opportunity to speak with him and I asked him about Radhakrishnan Damani's investment in Lenskart and what his meeting with him was like. Listen in.
Me and my co-founder Amit, we have had such a huge respect for Mr. Damani. I mean, we have grown up watching D-Mart stores, right? And you'll always find a Lenskart store near a D-Mart store. I'm telling you that little secret. And we have stood in that D-Mart store from morning to evening. And, when we met him just as an admirer, not necessarily to raise any money or request him to be part of the IPO, but the conversation hit off really well. And I think, and it was an honor that Mr. Damani decided to be part of our journey. That's all I can say. But yeah, I don't know if it is of prize validation or anything, but yeah, it's a huge honor for us, and there is so much to learn from him. I mean, he's definitely created. D-Mart is something that we always look up to.
At 12 this afternoon, and this is just a teaser. You'll watch that entire interview at 2 p.m. This afternoon on NDTV Profit. Meanwhile, India's maritime ambitions are setting sail. Big event in Mumbai. Policymakers, global investors, Union Minister Amit Shah and a whole host of dignitaries including Indian leaders, industry leaders, are going to be gathered for India Maritime Week 2025. From green shipping to innovative financing models, the focus is on building a $1 trillion maritime ecosystem. Let me go across first to Charu Singh, who's covering the event. Charu, what's on the agenda?
So it's a very interesting set of agenda, I must tell you. This is the Indian Maritime Week 2025, and there are three major goals of the event. First is green transformation, second is digital transformation, and third is about inclusiveness. What India is aiming to talk about, deliberate upon and discuss about is about the investment opportunities that the world can find in the Indian shipping sector, as well as several changes that can be expected in the energy region of this particular sector. When it comes to the investment part of it, there will be discussions about the InvIT, that is infrastructure trust funds. Now this is going to be regarding how a clean chain of liquidity and assets could be seen to basically pump up the shipping sector of the country. Apart from this, there will also be a discussion about tonnage tax. Now tonnage tax is something that shipping companies usually opt for based on the size of their vessels and the amount of capacity of their vessels. Now this is also something that is going to be discussed further. Apart from this, there will be a lot of discussion about the registration of shipping vessels. Now, we must understand there are two types of registrations, open registration and closed registration. Closed registration is being under the flag of your national country. Open registration is about being in the flag of a country that you are not necessarily connected to. Now, with time, there have been some, evolution with international registrations. Now, there is going to be discussion about this international open registration where a particular shipping vessel is not lost by its national country's fleet. Right. Now, these are the major things that are going to be discussed, and we are looking forward to about over 100 dialogues, several ministers, several think tanks and several industry stakeholders to grace the occasion and give us more and more insight on these topics.
Superb. We're looking forward to all of your reports from there, Charu. At Mumbai is where that India Maritime Week is taking place. We're taking a very, very short break. On the other side, focus on bullion. Rishi Nathani of MCX will be joining us about their new Bulldex Index. What is it all about? All of that coming up after the break.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
रहमान
सोनू निगम के लिए जोरदार तालियां.
Back with India Market Open right here on NDTV Profit. Now MCX, the exchange, has introduced monthly option contracts on the ICOMDEX Bullion Index starting today. Now before we go to Rishi Nathani, who's the Chief Business Officer at MCX, my colleague Vansh Johnson to give more details on what this move aims for India's bullion derivatives market. Vansh.
Yeah. Well, so MCX has launched their option trading on its bullion index called MCX Bulldex. Now this index represents the combined performance of the gold and silver futures. Now this new option product will give easy and cost-effective ways to manage risk and take positions in the bullion market as well. Also, if we talk about the options launch, now this represents precious metal segments via gold and silver futures. This also provides diversified exposure within the bullion market as well, and it offers a versatile risk management tool, and it's lastly targeting investment and hedging needs in a cost-effective way as well. So clearly a very interesting launch to watch out for.
Yes, certainly an interesting launch, and let's get the management to try and talk about this particular piece and what would it mean and what's the rationale behind this. Rishi Nathani, Chief Business Officer at MCX Johnson. Rishi, good having you. Thanks so much for joining in at the outset. Happy New Samvat. What prompted this?
Well, thank you for having me here. We already had a few indices on commodities, and SEBI had taken out guidelines for allowing options on commodity indices, and this is our first step in that direction. So given that there is quite good traction in bullion contracts as of now, I think this is an apt time to launch the bullion index. This index gives investors the choice to invest in a basket of bullion, basically both gold and silver at one shot, at a very affordable, in a very affordable way. So if you understand that the underlying is 1 kg of gold and 30 kgs of silver, which makes it quite a large size, but this option contract, the notional value would be roughly 8.5 to 9 lakh rupees at present.
Okay, I want to understand the rationale, Mr. Nathani, for one more index, because you already have instruments that are currently there on silver and gold. Is this coming from heightened interest, looking at the kind of volatility in silver and gold prices?
So at present, we have individual futures and options on gold as well as silver. So in gold, we have 4 contracts, 1 gram, 5 contracts, in fact, 1 gram, 8 grams, 10 grams, 100 grams, and 1 kg. In silver, we have 1 kg, 5 kgs, and 30 kgs. However, in futures, these are. And however, we did not have any index on any commodity which is traded. And right now, this is the first step in that direction by launching an index of both gold and silver put together.
Who is this targeted at? Is this going to have more institutional players coming in, more retail participants? Is this an option for retail participants who want to, participate in the gold and silver movement, which has been quite dramatic this entire year, actually?
So it is targeted at all types of market participants, whether you're a hedger, whether you're an institutional participant or an investor, because this allows someone to invest at one shot in both gold and silver without having to worry about which one to invest in. Also, the margin outlay would be much lower in case you're writing, or the premium outlay would be lower if you're buying. So in that sense, it makes a very affordable entry into bullion and gives you a basket of the bullion to invest in.
Okay. Now, I'm just wondering, Mr. Nathani, looking at the fact that a lot of mutual funds also stopped fresh input into their ETFs, the volatility in the prices, you've seen silver prices crash nearly in double digits since their highs. How are you going to ensure transparent price discovery, and how do you see those risks?
So the price discovery on MCX has always been transparent. In fact, MCX is the price benchmark for bullion in the country. Most of the physical trade is benchmarked to MCX prices. And since we have a very liquid both gold and silver contracts trading, the price of which is very well established in India. So this index will be taking its price from the underlying 1 kg gold contract and the 30 kg silver contract. So in terms of robustness of pricing, I believe it is absolutely there.
Okay. And these are all going to be cash settlements?
Yes. So our gold and silver contracts at present are, the futures contracts are cash settled. The options contracts devolve into futures and then the futures contracts are delivery settled and the options contracts devolve into futures and then are delivery settled. But this index is cash settled. So one could take an exposure to the index without having to get into delivery.
And what is the advantage of this new index of yours versus what is already there for anyone who wants to invest? If you can address them and just explain what the advantage is. Why should they look at this as an investment option?
So first of all, the biggest advantage is simplicity, because it gives you a view on overall bullion. Second is that to manage your volatility, it helps you manage volatility in a very holistic manner. Third is that the ticket size is much smaller. So getting an exposure to 1 kg gold today would entail roughly 1.25 crores and 30 kg silver would be another maybe 50 lakhs or 45 lakhs. So that's a huge outlay, right? But here you're getting that the same 1 kg pricing and 30 kg silver pricing at an exposure of 8.5-9 lakhs. Then with options, you can always have a limited downside while having an unlimited upside once you buy the options. So in that sense, it is simpler with lower margins, smaller contract size, cash settled, and there will be no devolvement into futures. There'll be no delivery. So for people who want a price hedge, who do not want to get into delivery, this would be an ideal contract.
Okay, thank you so much, Rishi Nathani there, Chief Business Officer of MCX, on a new instrument to hedge gold and silver. I thought this was interesting, Neeraj, looking at the extent of volatility, and if you compare returns on gold in the last 1 year to equity, of course it outshines it by a very, very distant margin. So, which is why maybe some interest today on different ways of investing.
Yeah, the beauty was on the Morat trading day where the opinions on what gold will do versus equities will do were polarized, to say the least.
Yeah. Nevertheless, I think oil is also in focus this morning. Singapore gross refining margins have surged to $8.6 per barrel in the last 10 days. My colleague Somit Sarkar giving us details on why there was a surge. Yes, Somit. Good morning.
Good morning. Multiple oil refiners in India stand to benefit given the fact that Singapore gross refining margin, which is the Asian benchmark for refining margin, have surged to $8.6 per barrel as against the $0.4 per barrel number that we had seen nearly 10 days back. Now, this rise in Singapore gross refining margin will increase the financial or earnings estimate for multiple oil refiners. Now, firstly, why this gross refining margin has increased over the last 10 days. Firstly, it's largely on the back of the sanctions that have been imposed by United States and European Union on Russia, which will limit the impact, the outflow of final products into the market. Apart from that, there have been multiple strikes that Ukraine has done on Russia, which have hit Russian product exports as well. And lastly, there are multiple plant capacity shutdowns, which have led to overall short supply of the final products in the market, which have been also aiding the product cracks in the last 10 days. Now, this higher gross refining margin or higher Singapore gross refining margin will benefit oil refiners like Indian Oil Corporation, BPCL, HPCL, Reliance Industries, MRPL and Chennai Petro as well. And every $1 per barrel rise in the Singapore gross refining margin increases Chennai Petro and MRPL's EPS estimates by nearly 26 to 24%. For IOCL, BPCL and HPCL, it increases the estimates by around 8 to 11 odd %. And for Reliance Industries, it increases the EBITDA estimates by nearly 2 to 2.5% on an annual basis. So basically, this higher gross refining margin, if they sustain now going forward, it will be beneficial for all the oil refiners in the country.
Okay, thank you for that, Somit. All right, let's get into our big conversation this morning. Saurabh Mukherjee, founder and CIO of Marcellus Investment Managers, with us this morning. Very good morning, Saurabh, and great to see you on after quite some time. Hope all has been well. Let's start off with where the markets are right now, and we're speaking at an important time where some of the fears seem to be fading, FII seem to be coming back. The only question then is the India-US trade deal, isn't it?
I think there's more to it than that. I think the India-US trade deal more likely than not will get done. It makes sense for both countries to do it. I've been saying this ever since the tensions broke out. I think the bigger question is, will we see a earnings recovery? Earnings growth has been weak for the last 6-7 quarters. Will we see an earnings recovery? The stimulus that the government has imparted through income tax cuts, GST cuts, the RBI has done its bit through 4 rate cuts. Is that enough to juice up consumption growth and generate an earnings revival? I think the jury is still out on that. My reckoning is we'll have a decent quarter. The current quarter will be decent on earnings growth. I think this is potentially the first quarter of double-digit earnings growth after 7 or 8 quarters. But I think a longer-term earnings revival will depend on job creation, especially white-collar job creation. And that's something I still don't have full visibility on.
I just want to come in a little more detail to the earnings outlook, and that's quite an optimistic note you've struck, Saurabh. That double-digit growth after 8 quarters. Where do you think the pack is being led by? Is it banks that is giving you, the most confidence right now? IT has also performed better than expected.
I think let's start with the obvious stuff. Clearly, the GST cuts have helped the auto sector. There's been spectacular numbers from the auto sector. I've never seen so many cars ever get sold in my life. There's also plenty of jewelry sales. Unfortunately, I don't think the jewelry sales will entirely reflect in stock market earnings beyond say Titan. But more generally, my reading of the Diwali spending was that even consumer durables will have a good quarter. October, November, December will look up for consumer durables as well. And the credit quality issues which were hammering the banks and NBFCs. By the way, even the September quarter numbers suggest elevated credit quality issues for the lenders in our country. I'm hoping that the October, November, December quarters, on the back of GST cuts, interest rate cuts, and income tax cuts, I'm hoping that October, November, December brings some relief on the credit quality issues. If over and above that, the trade deal fructifies in the next 2-3 weeks, then the export-oriented plays will also have a better November, December than they did in September, October. So all in all, the chances look to me to be more than 50-50 that the quarter to December could be the best quarter for earnings growth in 4, 5, 6 quarters. I think last time we had double-digit earnings growth, we have to go back 1.5 years. So fingers crossed, but the signs are looking up. This could be the best quarter for earnings growth after 1.5 years.
Hey Saurabh, good morning and a happy new summer to you. I wonder, Saurabh, if that means that the markets could have a continuation of this bullish sentiment that has come in, independent of what the Nifty does, that's secondary. But can the sentiment stay constructive with earnings growth, or is some bit of trade resolution a necessary condition, even if not a sufficient one?
So I think the continuation of bullishness, I think, is contingent on 3 aspects. My reading is at the margin, the FII sentiment is turning positive. I think you were referencing flows as well. My discussions with FIIs over Diwali suggest that they're keen to put more money to work in India. Back in America, this whole private credit boom seems to be dissipating. And also the realization amongst American investors that post a US-India trade deal, it does make sense to put more money to work in India. So I think the first driver of sentiment will there be sustained uplift in FII inflows? I stay optimistic on that, but I would also hesitate to give a completely emphatic statement, because I think there are many other variables playing in the FII's mind. So pehla issue is FII sentiment. Second is the US-India FTA. Will it just be a token FTA? Naam ke vaste to do something, or will it be a genuine 15% tariff for Indians exporting into America, genuine breakthrough for Indian trade? I'm hoping it'll be a genuine breakthrough for Indian trade. If it is, I think it'll be a significant mood uplifter. And the third is the capex piece. So private capex, the first 6 months of this year, first 6 months of FY 26, private capex has seen a significant bump up. I think it's up 40 or 50%. If private capex sustains in the second half of the year, that too could be a significant mood lift. So FII, the US-India FTA, how substantive it is, and private capex. If these 3 all turn positive, then I think change in sentiment could last for several quarters rather than being a 3-4 week, 3-4 month affair.
Got it. Where, Saurabh? I mean, the obvious options or the announcements might be the data centers and the energy transition. But 50% uptick in private capex when the headlines have been that the one thing that is not coming through is private capex. So where do you see this upshoot in capex?
I'm just reflecting on the data that's already been published. So even I was also surprised to see the Business Standard headline that private capex is up 40 or 50%. I think it reflects a few things. I think, remember the L&T had said that they've got a big boiler turbine genset order for a thermal power plant in India. I suspect that's a mega capex announcement, and I suspect it's linked to a large conglomerate in India. So if L&T's announcement in there, I think this was in the Q1 results, they had said that they've received a big BTG order for a massive power plant in India. I think that's inside the private capex data. I suspect the massive Google data center in Vizag is potentially also inside the H1 capex. So combination of private power plants, private data centers, potentially some factories coming up, that's enough to give the private capex number a boost. Whatever's happened in H1, it's already in the data that it's up 40-50%. Question is, will the private capex piece sustain in H2? Because remember, government capex has to come off. Given the fiscal pressures that are now mounting on the government of India, government capex will have to throttle off. Indeed, it's already throttling off basis the data I'm seeing. So as government capex comes off, if private capex jumps up in H2 at this 40-50% rate, then I think the change in mood in favor of optimism could sustain well into FY 27.
Another interesting space, Saurabh, and we'd love to hear your thoughts, is what's happening in private banking space and the entry of some global partners coming in, whether it's an Emirates NBD and RBL or a Blackstone investing in a Federal, IDBI is up for grabs in some part. Do you think that this is the start of an exciting trend, and how would one hop onto it?
So look, I think this should have happened many years ago. My reading is FIIs, foreign banks, foreign private equity were very keen to invest, have been keen to invest in Indian banks for many years. For reasons best known to our regulators, they haven't been supportive of this until recently. So for whatever reason, the regulators have turned constructive on this, and kudos to them. This is the right thing to do. We need more foreign capital in our banking system. The banking system is undercapitalized in my view, and I think RBL is the first of many banks which needs a foreign investor. So hopefully the RBL NBD deal. Remember there was a DBS Lakshmi Vilas Bank deal a few years ago. Hopefully, we'll see many more of that in the coming months. To my mind, there's at least three zombie private sector banks, three private sector banks who are there sort of operating, but not really with any financial muscle. There are at least three zombie private sector banks. I don't want to name them because it's just not fair. But there are at least
I was just about to ask you to name them because
so some other day.
Yeah.
So I think everybody who needs to know.
That's the quiz of the morning.
Everybody who needs to know who the three zombie private sector banks are knows who they are. But jokes apart, there are people there are private equity firms who want to put money to work. Historically, they've been stymied by discouraging words from the powers that be. Now I think the tide has turned. The powers that be have realized that we need foreign private equity and foreign strategics to buy Indian banks. So let's hope that Blackstone Federal Bank and Emirates NBD is the start of a new trend where plenty of foreign money pours into private sector banks and gives the banking sector a lift that it really needs. Because remember, credit quality will stay under pressure because of the weak job scene, and especially the southern Indian tech hubs. The job losses in the southern Indian tech hubs is going to create more credit quality pressure in the coming quarters. So foreign capital much needed in Indian banking.
And does this place private banks in a more desirable space versus public sector banks right now?
I think the public sector banks are going to go through a repeat of what they went through in that traumatic decade from 2010 to 2020, right? In that decade, they got pulverized in corporate credit quality. This time around, I think the public sector banks will get pulverized on retail credit quality. The deterioration in credit quality that started, say, 3-4 quarters ago, I think we're in the early stages of a downside in credit quality. I think barring ICICI Bank, HDFC Bank, and SBI, I'm not seeing too many other banks being able to deal with this downturn in credit quality, which is why I think we need foreign capital to come in and inject fresh equity into the Indian banking system. They'll naturally do it in the private sector. Government, I don't think, will allow public sector banks to be taken over by foreign bankers. So natural entry for foreign banks, foreign private equity and foreign banks will be via the private sector. And as I said, there's at least three zombie private sector banks which could do with significant infusions of foreign capital.
Got it. Wow. Just the other piece, I mean, these transactions, $7.5-8 billion worth of transactions in banking is one thing, and that's certainly set this flurry. But do you believe that earnings growth for the next 3, 4, 6 quarters could be led by lenders? Because there might be, if the private capex is up 50%, some of it might be done by internal balance sheet, but I'm sure lending will come into play, right? So could lenders lead the earnings growth for the next 4 to 6 quarters?
So if you think about it, Neeraj, as to how the bank nifty is constructed, the bank nifty effectively is 3 banks, right? Although chota banks are there, effectively the bank nifty is 3 banks, and those 3 banks are in good shape. They're in good shape in every sense of the word: credit quality, balance sheet, tier 1. So I think there are more rate cuts to come. The Fed will cut. I think the RBI will have to cut. There's no argument for the RBI not to cut. So as the RBI cuts further, it's also interesting that the bond market is tightening. If you look at the spread of the single A bond over the Government of India 10-year, the bond market is tightening. So it's becoming more expensive for companies to borrow in the bond market. And therefore, I think the top 3 banks in a rate down cycle will pull away market share, not just from their lesser, smaller rivals. I think the top three banks will also pull away market share from the bond market. So we've got a large holding in HDFC Bank for many years. We also have holdings in ICICI Bank as well. We don't have SBI, but we do have the other two. So I'm optimistic that the rate down cycle and the consolidation of market share in favor of the top three will help our clients make money from HDFC Bank and ICICI Bank.
Of capital piece as well, Saurabh. Today we have to wrap this up, but I think in the next few days, Saurabh, we should try and do a piece on what is that one standout theme that could drive conversation, earnings, and everything else in India for 2026. So before the end of the calendar, Saurabh, look forward to doing that on this show with you.
Look forward to that. Thank you for inviting me.
Thank you. And both Tamanna and me, thank you for joining in today and wishing you a new Samvat. But Tamanna, this is fabulous. I mean, some of the data points that have come in, and he's known for putting in some key data points. Private capex up 40-50%. Quite stunning, really.
I don't know if PSU banks are on the verge of a 10-year negative cycle and credit collapse, but let's see. That's one to watch out. Just before we wrap up on the show, look at where the Nifty is. I think you're about 30 points away from the 26,000 mark. It's looking like an exciting morning. Before we go up, yeah, there you have it. Now even less, about 25 points away from the 26,000 mark. Let's see if we crack that in the next hour and so. But for now, from Neeraj, me and the team that put the show together, that's all the time we have. Stay tuned. Ask Profit up next.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru. Okay. I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Welcome, you're watching NDTV Profit. I'm Mahima Vachrajani and with me is Puneet Jhaveri, and of course you are watching Ask Profit, a show that gets all your stock related queries answered. But before we move on to your queries, let's take a quick look as to how the markets are doing. Well, after 2 days of a sloppy trade, we're seeing good gains on the Nifty 50 today, well above that 25,900 levels for the Nifty 50, up 0.7%. The Bank Nifty also almost in tandem with where the Nifty 50 is, up 0.7%. There is I'll try to pull up the Nifty 50 heat map and see as to what are the counters that are actually, gaining and what are actually contributing towards that gain of Nifty 50. There's SBI Life topping that chart with gains of about 3%, followed by Bharti Airtel up 2.3%, Reliance up 2% as well, followed by Shriram Finance, HDFC Bank, SBI as well as Tata Steel. So counters that are fairly doing well includes your banking names as well as some of your metal names and Bharti Airtel. But something that's not doing well, some counters in the red and seeing profit booking includes Kotak Mahindra Bank post the earnings as well as what the brokerages are kind of penciling in. Bharat Electronics down 1%, Adani Ports, Infosys, Bajaj Finance, ONGC, some counters in the red is what we're seeing. Let's try to pull up the sectoral heat map and see as to what are the sectors that are buzzing in trade today. There you go. There's PSU Bank which is seeing gains of about 1.5%, followed by Nifty Realty, Nifty Oil and Gas, as well as Nifty Infra which is seeing gains of about 1.15%. I think the only sector in red is the Nifty Pharma, which is down by about 0.08%. And there's India Defence, which is seeing slight profit booking down by about 0.4%. But let's try to pull up the advanced decline ratio because that will paint a picture as to how the broader end of spectrum is doing. Almost, of course, Puneet, in tandem with where the benchmarks are doing. Right now, we have around 1,400 odd advances versus that of 900 odd declines. So slightly that 1.5:1 ratio.
Well, definitely. And I think we have seen some pullback for a bunch of those names which have given up some of those gains right now. But continuing to be that positive momentum, at least for now, on the broader market spectrum. When you look at the mid-cap 150, that's the other one, because largely we have seen days where the mid-cap index and the small cap has actually underperformed the benchmarks. Today it's up 0.6% for the mid-cap, the small cap 250, down up almost 0.4%. It's down compared to the mid-cap, but still continuing its positive momentum. And finally, let's look at the BSE 500 as well. A lot of individual movers today buzzing in trade. We have something like Metro Brands that's up almost 4.4%. It's continuing its momentum post as results. Something like First Source Solutions is up 5.6% as well. And Coforge, on the back of their stellar Q2 earnings, is continuing its positive momentum as well. But let me welcome in Saurabh Jain. He's the equity head research analyst at SMC Global Securities, as well as Osho Krishan. He's the chief manager, technical and derivative research at Indian One. Gentlemen, thanks so much for joining in. Osho, let me come to you first. A stellar move today again on the benchmark indices. Are you continuing that positive momentum that we spoke about on the banking index last week? And what are some of the key levels that investors need to watch out for, given that a lot of global aspect will be, global events will be something to watch out for this week?
Very good morning, Puneet. Firstly, thank you for inviting me at the show. Well, yes, no doubt the technical setup and even the undertone for our equity market remains very positive. The only concerning factor, or might be not concerning, might be some kind of possibility of profit booking can be seen in the markets, because last week we have seen a kind of a formation of doji candle on the benchmark index, and even Bank Nifty index have seen some kind of correction in the last two trading sessions. So that might give a halt to the momentum that we have seen, a linear momentum that we have seen in the past 2 weeks. But overall, the undertone remains on the positive front, but dip should be utilized to accumulate position. For instance, today was a very positive day. The market has opened on a higher note, and from there onwards, we have seen a very strong and continued momentum. So for Bank Nifty, I am expecting that 58,300 to 58,500 should be acting as a very strong resistance. So once it breaches the zone of 58,500 on a decisive manner, then only we can see some kind of strong momentum coming back in the market. But there has been a strong deviation from the short-term moving average. So I'm expecting that in the coming period, there might be some kind of consolidation in both the key indices. For Bank Nifty, 57,700 and 58,500 is very crucial zone. So I expect that any dip towards 57,700 can be seen as buying opportunity, and 58,300 to 500 can be seen as a profit booking opportunity in the banking sector.
So that's the view with regards to where the indexes are concerned. But viewers who are just tuning in, you can either WhatsApp your queries on the number that's flashing on your screen up there, or call us on the numbers that are flashing down in that screen. But moving on to our first query for the day, Mohit from Ludhiana is writing in and asking about Bandhan Bank. He's got 500 odd shares of Bandhan Bank, bought at the levels of 187. His time horizon, he says, is for the next 2 years. Wants to know if he can continue to hold or not. Saurabh, hi, a very good morning to you. What should Mohit do? Should he continue to hold Bandhan Bank for the next 2 years?
Yes, we are bullish on the banking sector, but as far as Bandhan Bank is concerned, I think the books are not really that good. And if you look at the stock price movement in the last 2 years, the stock has only underperformed the broader markets as well as the banking stocks. Among the banking stocks that we like in the private space are Axis and ICICI. In the public sector bank space, you can go with Indian Bank or maybe PNB.
Got the view, Saurabh, and very good morning to you as well. But the next question is also coming in on WhatsApp. Ravi from Hyderabad is asking on, Amar Raja, and he's holding roughly 50 shares at 1,650 rupees per share. So he is currently sitting on losses. He's asking if he can hold or sell the counter. Osho, let me come to you. On the fundamentals, there's been a weak performance by this battery maker over the last 4 to 6 quarters. Do you expect any kind of revival to the buying price of Ravi at roughly 1,650 rupees per share?
Currently, the count is into a very strong consolidation zone. So at current levels, I won't advise to exit the position from Amar Raja. But overall, the setup remains on the sideways manner. But looking at the recent development, the counter has tested the breakout neckline. So I'm expecting that the zone of 1,000 should be acting as a very strong support levels. And approximately, if we can see from last 4 months, the counter has been hovering in a narrow range around the 1,000 odd levels only. So from here onwards, it's better to stay invested in the counter, although I'm not very much bullish that whether 1,600 will be seen in recent period or not. But definitely, if it crosses the zone of 1,050 on a very short-term point of view, then we can see some kind of revival in the counter. And on immediate basis, 1,350 will be the target that one can expect in this counter.
All right. Okay. So that's with regards to where Amara Raja is concerned. We've got our first caller for the day. Praneeth is calling us from Hyderabad. Praneeth, hi. A very good morning to you. How can we help you today?
Yeah, good morning. I'm willing to take a fresh position.
Okay.
In Coal India or Hyundai. In, which one is better for next 2-3 years and into the long-term outlook only?
Okay. Yeah. All right. Okay, Praneeth. I got your query and I'll take this up with Saurabh then. Saurabh, two different sectors. One is Coal India and the other one is Hyundai. Which one would you pick for a long-term bet?
The autos are expected to do well, and in fact, the Hyundai management has clearly stated their long-term plans. They are slated to come up with the new launches, and these days, automobile demand is also great. from the long-term perspective, Hyundai is could prove to be a good bet. With respect to Coal India, yes, if you look at the valuations, it is trading at a lower end of its historical averages. I mean, on the price to book value side and on the PE side. Dividend yield is also good, above 6%. From 2 years perspective, the strength in the metal and mineral space reflects that from the next for the next 2-3 years, it could also prove to be a good bet. So, idea should be you should invest proportionately in both the stocks.
But another query that's coming on WhatsApp from Rahul Gandhi. He's asking on a specific one on Sterling and Wilson Solar. So SW Solar is the counter that he's asking for, and he's asking if we should enter the stock given that the current share price has seen some downward momentum. And I know, Saurav, we picked this with you, so let me go across to Osho. Osho, the momentum on the fundamentals have been quite weak for this counter. Anything on the charts that suggest that this could be a good entry point for investors?
Technically, the counter is having a very tough time because it is hovering below the short-term moving average. Although the technical parameters are into oversold terrain, but there has been no respite. So better to avoid such counter. If there will be any kind of revival in future, then one should consider the price of nearly 270. If it crosses 270, then one can look for buying opportunity, keeping 220 as a stop loss from medium-term point of view.
Okay, so that's the view with regards to where SW Solar is concerned. We've got our next question from Gautam, who's writing us from Bengaluru. He's got Zentech at the levels of 1624 and he's got 110 in terms of where the quantity stands. Wants to know if he can sell or average down at the current moment. He's not mentioned about the time period, but he's sitting on a loss of around 31,000 rupees. In fact, the Q2 earnings also came out for this counter, and revenue, of course, has declined for the second quarter in a row. But Saurabh, I'll quickly take this up with you. You must have gone through the earnings, if at all. What's the view like from a slightly longer term perspective? Should he continue to hold Zentech?
I think the valuations are quite high. I mean, it's trading close to 50 times to book trailing earnings and high book value. It's a relatively a small company. Investors must be having great expectation from this company because they are doing about less than 200 crore worth of revenue a quarter. So I think the last two quarterly earnings have clearly disappointed. The valuations are still high. I do not find any respite from selling in these stocks. I think it is better to avoid.
Got the view, Saurabh. But we have another query coming in on something like a CMS info system for a long-term view. Teja Reddy is writing into us from Ireland. So Teja, thanks so much for writing in today morning. He's asking for a long-term 5-year view and needs both technical as well as fundamental view on this. So Saurabh, let me come back to you. Any view that you have on this cash management play, at least in the long term, 3 to 5 years?
The earnings have disappointed. On the valuation side, it is not that expensive. I think it is better to wait for this quarter earnings. This quarter earnings are slated to come shortly. Look at the management guidance and then take a call.
Sure. Does this give a good, given the fundamentals have been weak and, as Saurabh has highlighted, anything on the charts that suggests a good entry point right now?
Yes, the counter is actually at the neckline near about the support zone of 340. It is having a very strong support for the counter. So I will advise that one can start accumulating, but in a staggered manner. If there will be some kind of revival from current levels, then one can add even at higher levels of 420. At current levels, one may start accumulating the counter, but in a staggered manner with a small proportion at current levels.
Okay, all right. So that's with regards to where CMS Infosystem stands. We've got our next question on Enviro Infra Engineers. For the next 2 to 3 years, Rakesh from Noida wants to know if he can buy into Enviro Infra Engineering or EMS Limited. And this, I suppose, is from a long... in fact, he's written this is from a 2 to 3 year perspective. So, Saurabh, your view between the two counters, which one would you pick? Or would you probably, invest, in both of them?
I think it is a recent listing, not really in coverage. I mean, it got listed this year only. So, would not be able to comment on this update.
Okay. And I suppose, Osho, you'll not have enough data on the charts as well.
Yes, actually, it's kind of a 1 year kind of a data that I have on the chart. So overall, the counter is into a sidelines manner. So better to, if someone is already holding a position, then better to hold a position. If not, then from a technical point of view, one should wait for the levels of 280 or 290 to get crossover, then can look for accumulating the counter.
Got the view, Osho. But we've seen a lot of these water management plays being in focus. For Enviro specifically, the IPO price was 140. So you've seen a decent return for all investors who got their allotment or bought in early as well. So there you go, 64% returns is what is given from it since listing as well. So watch out for this one going forward. The other one's a very interesting one, and we've had a few of these queries. Rajan Iyer, he's a retired banker, and he got the allotment of LG IPO, and he's of course got 13 shares and asking if he can add 37 more to make it a half century for this one. He's asking he can wait for 3 years and asking for a long-term view. Saurabh, the valuations definitely are punchy, but it's a marquee brand. Would you suggest buying into LG right now or waiting for some correction but continuing the positive momentum on the stock?
I think the valuations are now high on the higher side, and the stock got listed at approximately 45-50% premium. It is a good market brand. Yes, there is expectation that the demand is expected to be good in the Diwali season and the ongoing wedding season also. So yes, the sector and the stock will remain in the limelight. At the same time, because of the the stock is not available cheaply, so I would not recommend to straightly buy more 37 share. Rather, you can buy the same quantity that you got in the IPO price, that too in a staggered manner.
Okay, all right. So that's with regards to where LG Electronics is concerned. The next question is on Utkarsh Small Finance Bank. This is from Ganesh, who's writing us from Karnataka and asking about this particular counter. He's got 4,000 in quantity. Wants to know for the next, he's not written the number of years, but he says from a longer term perspective, can he stay invested in this counter or not? He's sitting on profits of around 800 odd rupees right now. Saurabh, would you recommend him to continue to hold this or maybe book profits and enter into something else that you like in the space?
Not the best of the lot because the balance sheet is weaker. I mean, the NPAs are higher in this bank. That is why the stock is not performing. I would rather recommend him to switch over to company like Bank of Maharashtra.
Got the view, Saurabh, and definitely this one has been in focus. A marquee name, Madhu Khela, has also entered the stock, but weaker results over the last 4 quarters for Utkarsh. Rights issue at 14 rupees per share. So there's definitely a lot of news flow for this one. But the next one is coming from Nishant. He's asking that he'd invested in Gravita India in May of 2025, and it was a stock that was a marquee one at that time. Since then, currently sitting on losses of over 21,000 rupees. He's asking if he can expect to reach the buying price in the next 1 year or should hold longer. Osho, anything on the charts that suggest any kind of revival on this counter?
See, basically the counter have lost the sheen. There has been very less participation that is being seen in the counter, and technically also the counter is hovering below the long-term moving average. So the possibility of having a very strong revival still remains uncertain. But from here onwards, if it breaches the zone of 1800, which is the 200-day simple moving average, then from there onwards some momentum can be expected to be coming back in the counter, but for now it's better to stay sidelines and wait for the 1800 kind of a zone to get breached, and then one can even look for accumulating above 1800 from short to medium term point of view.
Okay, all right. So that's with regards to where Gravita India is concerned. The next question is from Venkat. He's got 1,000 odd shares of Ola Electric bought at the levels of 61.5 a month ago. Sitting on loss of 10,000 odd rupees right now. Wants to know if he can hold or sell at the moment. 1 year is his time horizon. Now, Osho, I'll come to you on this one. Anything on the charts that suggests that he can recover his losses in the next 1 year and probably see some profits?
The possibility of recovering losses in a time frame of 1 year is definitely higher, but looking at the recent development, the counter has again been into some kind of profit booking zone after the rally that we have seen from 40 to 70 kind of a zone. But overall, the setup has now turned on the positive front. So I expect that no doubt in the short term perspective, there can be some kind of persistent sideways momentum in the counter. But from a long term perspective, one can stay invested. Any breakthrough above the zone of 60 can again trigger fresh momentum in the counter, and the counter can even test the zone of 75 to 80 in a medium-term time frame perspective.
Got the view, Osho, and it has been in focus as well today on the back of a fundraise that they're doing of 1,500 crores. While they haven't stated the price or why are they raising these funds, that'll be something to watch because they've already done a lot of capex. So definitely one to watch out for investors. The other one that we're getting right now is on SJVN, another counter that was in focus over the last quarter or so. Sarma from Hyderabad is holding 400 shares at 25 rupees per share. So he's gotten at a very good price for SJVN. And he's asking if he can exit or actually add further in terms of momentum. So let me go across to Saurabh on this one. Saurabh, definitely a counter that recently has not been in the news flow. Would you suggest adding a few more positions at the current market price?
Yes, we like the utility space as well as the hydropower companies like SJVN or maybe NHPC. If you look at their order book, they have great order book, which gives visibility for the next 3-5 years. Some of the capacity additions will be happening in 2026, 27 also. So there will be earnings will get a boost from both in terms of revenue and the profitability. I think it is better to hold this stock, and if one wants to accumulate, you can go ahead.
Got the view, Saurabh. We have another caller coming in from Chennai. Mr. Reddy is dialing in with a stock query. Mr. Reddy, a very good morning to you, and thanks so much for joining in. What's your query?
Hello.
Yes, sir, we can hear you. Very good morning and welcome to Ask Profit. What's your query?
Very good morning, sir. Very good morning to everybody. Sir, actually, I have studied this embassy results. They are turning out to be from loss making to profit making. So I have already collected around 700 shares around average price 110. So I want to collect more. Looking at the results, what do you suggest?
And Mr. Reddy, did you buy into this counter very recently, or when did you actually buy into the counter?
Recently only, sir. Recently, maybe from 3-4 months.
3-4 months. Okay. And can you hold the counter for a long-term view since you are looking
to accumulate? Yes. I am an ex-serviceman. I can hold for 3-4 years, no problem.
Saurabh, let me come to you on this one. Embassy developers, do you expect positive momentum for this REIT play?
Not really in coverage, but if you look at the latest earnings, there has been serious degrowth which has happened on the operation side. I think better to wait for this quarter earnings and look at the management for the guidance.
Okay, all right. So that's the view with regards to where embassy developer stands. But the next question is from Devender, who's writing us from Hyderabad and asking about GE Vernova TND from a longer term perspective. He's not given the quantity or the price at which he's bought. So probably, planning to buy some quantity. Saurabh, your view quickly on GE Vernova TND?
Capital goods space, we like the capital goods sectors and the company like GE Vernova. I think the activity will get a boost in the second half of the financial year, and one will see improvement in the earnings. So, in my sense, I think it is good to hold.
Okay, all right. So that's the view with regards to where GE Vernova TND stands. We've got our next caller. Siddharth is calling us from Nellore. Siddharth, hi, a very good morning to you. How can we help you today?
Hello, good morning, ma'am.
Good morning, Siddharth. Go ahead with your question. I can hear you, Siddharth.
I have been holding Trident shares 6,000 at 62, ma'am.
Okay.
Currently, I am in loss. Can I hold them for next 2 years, or can I shift to Adani Power with the amount whatever remaining?
Okay. How much time period are you looking for? Can you repeat that?
2 to 3 years, ma'am.
2 to 3 years.
I can hold, ma'am.
Okay. Okay, Siddharth, got your question and I'll take this up with Saurabh. Saurabh, he's already sitting on a loss of 1.4 lakh rupees, and considering this is in the textile space, until things are certain about where the US tariff stands, things are going to be volatile with regards to all of these textile names. But your view, should he book losses right now for 1.4 lakh rupees and maybe shift to something like an Adani Power, or should he wait for a while?
I think all the negatives have already been priced in the textile stocks. The best now, if we see some kind of a truce within India and US in terms of trade relations and the tariff duty goes down, then one can see huge buying activity again emerging in the textiles sector. Because if you look at the valuations, they are quite cheap. In case of Trident, it is trading approximately 3 times to book value. The company is also good, posting good profitability also. So I think there is no point in selling when there is a lot of rumor in the markets that the duty will settle close to 15-16%. I think you should sit for a while.
Got the view, Saurabh. But our next question is actually coming in on Engineers India. Ram from Chennai is asking a very interesting one because he's bought it at 80 rupees per share. Currently, stocks at over 200 rupees per share. So he's sitting at a handsome gain of 1.2 lakhs. He's asking if he should exit the counter right now and buy something like Bharat Electronics is what his query is. So, Osho, let me come to you. First, on Engineers India, do you expect that it's a good time to get out of this particular quanta? And your view also on entering any of the defense plays like BEL amongst others, is that a good idea right now?
See, overall, for Engineers India, I am expecting a decent rally in the counter in the short-term point of view. So I am expecting that one should stay invested in Engineers India. The time it breaches the zone of 220, then it has the potential to retest 250, followed by 270 from a medium-term point of view. So overall, stay invested Engineers India. While if one wants to accumulate fresh positions in defense counters, then BDL and HL, both the counters are looking very positive. And one can look for accumulating these counters from the defense space, but not to exit Engineers India and switch to defense counter. Better to start fresh accumulation in the defense space.
Got the view, Osho. But we have another caller coming in from Chennai. Miran is dialing in for a stock query. Miran, very good morning to you. What's your query?
Yeah, I've been holding Petronet LNG for about a year actually. I have around 5,000 plus shares at the rate of 324. So do I need to hold it for a period of long term or do I need to sell it actually? Right now it is on 280. I would even like to average it, but I'm not sure whether it goes down or it goes up actually.
No, fair point, Miran. Saurabh, let me come to you. On Petronet LNG, Miran is currently sitting at a loss of over 2 lakh rupees. Do you expect that any kind of positive momentum, buying price is roughly at 324 rupees per share right now?
See, there has been some operational weakness seen in the case of Petronet LNG. And if you look at the valuations are comforting. I would not suggest him to exit out from Petronet LNG, but he was saying that he wants to buy more. Then I would like to suggest him. There has been continuously buying in the metals and mineral stocks. So I would suggest him to go with the Nifty Metal Index ETF called it's ICICI True Metal ETF. If he wishes to buy, then he can go ahead with this buy.
All right, so that's with regards to where Petronet LNG stands. But Saurabh and Osho, it's time for the rapid fire segment, first rapid fire segment of Ask Profit. You both know the format, so keep your answers as short as possible. The first question is from Sabyasachi, is asking about Premier Energies. It's bought at the levels of 1,054 and 200 is the quantity. Wants to know if you can sell or hold. Osho, your quick view on the charts?
One should stay invested in the counter. It has given a fresh breakout, so I'm expecting a strong momentum in the coming period.
Next one's on Blue Jet Healthcare. Animesh, who's writing into us from Kuala Lumpur. So thanks so much for that. Animesh is asking for a 6-month view on the stock. He's bought it at 661 rupees per share. Osho, your quick view?
For now, the counter is into a sideways momentum, so I expect that once it breaches the zone of 700, then only can look for accumulating this counter. For now, stay sidelines from this space.
Okay, Oil India is the next one. Akshay from Bengaluru has bought at the levels of 427. Wants to know the short-term outlook. Osho, your view?
Again, stay invested. The counter is on the verge of fresh breakout, and I'm expecting a short-term target of 455 to 60. So stay invested, and even one can start accumulating more at current levels.
Oracle Financial is the other one. Satpathy is asking if we can hold for the next 2 to 3 years. Saurabh, your view?
It's a hold.
Okay, Canara Bank is the next one. Karthik from Bengaluru is holding at the level of 87.6 and 166 shares is in portfolio. Wants to know if you can hold or sell. Saurabh, your view?
Hold for long term.
The next one's, something which Saurabh has been speaking about, energy and utility companies. Vikram Solar, Tata Power, Adani Power, Suzlon, Reliance Power. Any that you can hold over the next 3 to 6 months. Osho, anything out of these 5 names?
Power sector is looking positive to me. So CG Power, Tata Power, both are looking positive, and one can look for buying opportunity in these two counters.
Okay, BEM is the next one. Ahmed from Delhi has been holding this counter since IPO. Should he continue to hold? Is his question. Saurabh, your view?
Hold for long.
The next one's coming in again similarly on LG Electronics. We already answered that, so I'll go to Eternal. Our viewer has bought it roughly 1,000 shares and is sitting on a loss of 12,000. Not mentioned the buy price, but Saurabh, your view?
It's a notional loss on such a huge quantity. Better to exit. Go for buying in the metal or banking stocks.
Well, that's the end of the first round of rapid fire. Osho, we'll let you go on that note. Thanks so much for joining in and giving us your perspective. Saurabh, stay on. A lot more queries on the other side. Stay tuned for Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV.
Welcome back. You're watching Ask Profit here at NDTV Profit. For you viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. We take the next question, which is from Mehnuz Malu, who's writing us from Mumbai and asking about Tata Technologies. He's bought 1,000 odd shares at the levels of 900, was bought from a longer term perspective, and wants to know from here on for the next 3 years if this is a good bet to continue to hold. Saurabh, already sitting on losses of around 2 lakh rupees. Would you recommend holding for the next 3 years, or would you recommend partial loss booking, or what's the strategy way ahead?
Well, buying in the IT sector is a tactical kind of approach as of now, but Tata Tech is not the best of the lots. The company, the management has disappointed the markets in terms of their earning visibility and the earnings growth. So, I mean, the company has seriously disappointed. In the IT pack, what we like is maybe you can go and buy HCL Technologies. With respect to the Tata Technologies, I would not either recommend to sell, but I think you should wait for these quarterly earnings. And again, if disappointment comes and the management guidance look weak, then better to exit.
Got the view, Saurabh, and definitely the ER&D players under pressure over the last few quarters, to say the least, as well. But we are also being joined by Ajit Mishra. He's the SVP Research at Religare Broking. Ajit, very good morning to you, and thanks so much for joining in today. Let me straight get in with a very interesting query. Manish from Gurgaon is asking on Shriram Finance, and he has very two pertinent questions that he sent us. Can he expect a pullback to make an entry in the stock? And the second one, short-term outlook only till 25th November of 2025. So definitely he has plans in the last week of November. But Ajit, would you recommend getting into the stock right now or wait for some kind of pullback for a better entry point?
Yeah, good morning, Puneet. Valid question because the stock has moved up sharply, means from 660 to 730, almost vertically. We have seen this kind of move, and the stock is trading at the record highs as well. As per the option position, what I can see is that 1730 is where the call writers are there. Means we have roughly around 5.4 lakhs of OI around 730 levels. So there could be a bit of a consolidation or some profit taking around that area, and which could help the stock to witness some bit of consolidation or maybe a dip towards 720, 715. So he may wait in case if we fail to hold or cross this 730 hurdle, and then wait for a dip towards 715, 720 to enter fresh. In that position, 690 on the closing should be stop loss, and I'm expecting he wish to hold it for the next expiry. So yes, possibly we can see the stock considering the kind of consolidation that we saw in the last 1.5 years, possibility of inching towards 800 plus mark, in the coming weeks. So as long as we are maintaining above this 690 levels, you can continue to hold for longs and buy on dips as well.
Okay, buy on dips on Shriram Finance is the technical view that Ajit has, but one counter that has kind of remained in focus on the back of its Q2 earnings that did come out on in the last week was India Mart Intermesh. Now overall things have been improving for this particular counter. We are seeing gains of about 2.7% today also in trade. There are leading indicators that are continuing to improve. There's unique business inquiries which has been growing, but the question really here is whether how much of those inquiries are actually getting converted. Repeat customer rate has been improving for them. Overall collections have been growing at a stable rate as well. Now, overall we've seen a good traction and steady traction in score metrics as well, and unique business inquiries are rising as I mentioned earlier as well. And we spoke to the management about all of this. We spoke to Dinesh Agrawal, who's the CEO of India Mart Intermesh. Listening to what he had to say.
Expecting these inquiries to actually pick up in the second half of FY26?
No, I think as we have started to do some experiment on advertising, and these have grown by moderate percentage, I would say, and they will continue to be in the same range going forward as well.
And the rate of repeating customers, that is improving. Could you just spell out, what could be the rate of this growth going ahead? What will be the outlook for the repeating customers? Because that's a very important point or a chunk in your business model.
Yeah, so as the number of unique business inquiries grows up, because the improvement in the platform is slowly started to result into some buyer-seller experience improvement, and that is reflecting into the repeat customer growth also.
Exactly, and your ARPU numbers, they are up say almost 7% on a year-on-year basis. Are you expecting these numbers to go up, and if yes, what would be the range?
See, typically if you see, our ARPU numbers have been growing between 6 to 8% historically, barring some quarters here and there, but I guess that's the guidance we have given, that our ARPUs we have been able to consistently increase at 6 to 8%, and that would continue to be the case.
And overall standalone collections, they were given rising by almost 8% on a year-on-year basis. Dinesh sir, the higher realizations, will this trend continue going ahead, or are we seeing a kind of a plateauing of these realizations? Because I think Q3 is largely a lumpy quarter as well when it comes to realizations historically. So what's your view on that?
Yeah, so if you see, we have been slowing our net customer addition, and that is causing our collections to be in this range of 8 to 10%. And we will probably see if we can move up to the double digits in the second half. But that's what I can say right now.
And lastly, sir, the question remains is of AI. Looking at the AI front, a lot of data you have been capturing, and since our last conversation, you spoke about usage of AI and LLM models also in your business model, and it's required. So what's the status of progress happening in this sector, and actually is it actually benefiting you in cost reduction strategies?
See, I think overall, longer duration, if you see, maybe 2-3 years down the line, the cost reduction will definitely come. But currently, we are experimenting with so many models and with so many different areas that are actually going to increase the cost because of the investment in the AI that is going right now. So, for example, you might have seen in many cases that calls are getting automated through AI, and that's a big area of our operations because between buyer seller and India Mart, we do about 3 crore calls every month. And if some kind of an automation can happen between all of them and the insights can be generated, that could be huge advantageous to the buyer and seller as well as to the customers of India Mart. Similarly, we have been doing a lot of category based management and trying to understand each B2B category and trying to create their specifications and units and values so that the seller's listing can be created in a manner that are perfectly suitable for a B2B marketplace. I think in that area, a lot of insights coming from these calls and PDFs can be useful going forward. So that should also improve the overall experience of the marketplace.
Interesting. So the experience is something which we'll be actually watching out for as well. But interestingly, Dinesh, so the question remains is the B2B space that's actually now opening up and more competition is also coming, especially with India and China's relation also improving, and a lot of Chinese websites are also getting access for Indian B2B suppliers as well. Do you see that as a competition, or do you see that the industry as a whole will be going up? What's your view on this? It's an industry specific question.
I think industry will gain from any collaboration. I guess we are not allowing China to kind of come and sell here their B2B products. And even if that happens, we will probably partner with whosoever wants to do any business in India. We will be welcoming them to advertise on India Mart. And so I guess overall for an industry, the more trade relations open up for all the countries, that will be beneficial for the overall growth of the business.
All right. So I'd just like to add one question. So is there any JV or a tie-up in the offing with a Chinese player in this e-commerce space?
Nothing.
Well, that was the management of India Mart, but let's continue with our stock queries and keep sending them to us on WhatsApp. You can also call us on the number that's flashing on the bottom of your screen. But we have another one coming from Gautam from USA, and he's a regular viewer. So Gautam, thanks so much for tuning in again. He has been holding roughly 522 shares of Tata Capital since its IPO. So it's a recent listing. And there's not been much change in the share price as well, given the current circumstances. He's asking for a 12 to 18 month view and asking if you should sell out of this counter and get into something like an AB Capital. Saurabh, would you recommend this particular trade?
I think it is a relatively recent listing. I think the management is good. It is a Tata brand name. If you want to stick with it from the long term, it's perfectly okay. But I would rather suggest to go with the full-fledged banking sector, and rather than the NBFC or something like that. I would suggest better to go with the SBI kind of a thing, or maybe something like Canara or Indian Bank.
Okay, all right. The next question is from Rohit, who's asking about Reliance Industries. He's bought 125 shares at an average price of 1220. Wants to know from the next 1 year perspective, should he continue to hold or not? Ajit, I'll come to you on this one. Slightly longer term in terms of where charts are concerned from a 1 year perspective. Can he continue to hold Reliance?
So Mahima, it's been almost a year or more than that. In fact, we are seeing this consolidation continuing in Reliance, though we have had phases where the stock managed to inch higher, but it couldn't sustain. So we believe that this kind of range bound move has prepared the stock for the next leg of the up move, and the moment we cross 1560, 1580 area, means the previous record high zone, then probably we are set for the next leg of the up move. since he's bought it at very lower levels and he's making decent profit, he should continue to stay put. And the 1320, in case if the view is, let's say, for a shorter duration also, that should be your trailing stop loss in case if you wish to see that whether the stock manages to perform or not. And the moment we cross, let's say, the record highs area, then 1750, 1800 something also that you might see in next 12 to 18 months.
Got the view, Ajit, but the next one's coming in from Siresha, and she's writing to us from Uganda as well. So another international query that we're getting on Coal India. She's bought 213 shares at 482 rupees per share. So it's seen some pullback from that level. Roughly a loss of 18,000 is what she's sitting on. She's not mentioned the time frame. So let me go across to Ajit very quickly. Ajit, do you expect the share price momentum to come back to the buying price of Siresha of roughly about 482 per share?
So probably yes, because we have had a very strong consolidation phase, almost like 7-8 months now, and the upper band of this consolidation exists around 405, which is closer to her buying price. So the moment we see this breakout from this level, then probably we can see the fresh momentum, which could help the stock to inch toward 440 or maybe higher. So she should definitely stay put with 380 as a stop loss.
Okay, all right. So that's with regards to where Coal India is concerned. The next question is from Bindu Hari, who is writing us and asking about Equitas Small Finance Bank. Now, he's bought 280 odd shares and sitting on loss of around 9,000 odd rupees and wants to know as to what should be the next course of action for him. Ajit, quickly on the charts, should he hold or dispose of his holdings?
So it's an underperformer, means we saw some rebound also, but we are very closer to the immediate resistance. The prudent approach is to exit from this and participate in the PSU banks or the private banking majors, which are aligned with the market trend. So, SDFC Bank, SBI, Canara Bank, Bank of Baroda, these are some of the names which he can consider.
Slight mistake on my end. It's not Equitas Small Finance Bank. It is ESAF Small Finance Bank. What's the view with regards to where charts are concerned for ESAF?
ESAF, honestly, Mahima, I'm not tracking, so I won't be able to comment on this.
No worries, I understand. Saurabh, any view that you have on this particular small finance bank?
Again, not best of the lots, weak balance sheet, would suggest to avoid.
Got the view, and Saurabh has been highlighting banks is something to watch out for from his side. But HAL is the other stock query that Arijit Saha from Kolkata is asking. 4,700 shares, 4,700 rupees per share he holds. And very close to the current market price, and 25 shares what he's holding, and asking for a long-term view. Saurabh, BL as well as HAL have been the crowd favorites. Do you expect the momentum to continue on HAL right now?
Only thing which I would like to say is that they have a great order book, but the conversion to the revenues has been slow. I mean, we are clearly disappointed with the kind of growth that this company is giving. But yes, from the long-term perspective, considering the good order book and the visibility, yes, it is a hold.
Just to follow up to that, Chandra is asking the next one, and his query is on picking in the defense sector. He's asked for 3 names: Data Patterns, BEL, or Garden Reach Shipbuilders. Which one would you pick, Saurabh? Or if not these 3 names, your favorite bet in the defense space?
I think Bharat Electronics would be the better choice out of the 3.
Okay, all right, okay. So that's the view with regards to where some defense names are concerned. The next one is from Chandan Jain, who is writing us from Hubli, Karnataka. And yet again, a long-term question for you, Saurabh, and from the banking space. He's asking about Federal Bank. He's holding at the levels of 155, bought 215 quantity. Wants to know if he can continue to hold from a longer-term perspective or not. Your view on this?
A good bank, if you look at the growth, they are growing at a higher than the industry average. Neat and clean balance sheet, lower NPS, higher provision coverage ratios with good net interest margin. It's a clear hold.
Saurabh, just a follow-up. How do you view the current, warrants that, they've got a foreign investor now as well. So with that context, does it actually make it better right now if you're holding the counter?
Of course, yes.
Got that. But we also have another caller coming in from Hyderabad. Dheeraj is dialing in with a stock query. Dheeraj, very good morning to you, and thanks so much for dialing in. What's your query?
Query is regarding CG Power, sir.
Okay.
I purchased 140 shares, sir.
And did you purchase that very recently?
Today, sir. I purchased it today, sir. Today morning.
And do you want a long-term view or a short-term view?
Short-term view, sir, for the next 3 to 6 months, sir. What sort of targets could I expect, and if it gets lower, at what levels could I add is my query, sir.
Got that. Ajit, let me come to you on this one. CG Power, your view, as well as what could be a clear stop loss for this counter?
Puneet, he has added at at a good level where we have already seen decent profit taking from the recent highs, and we are very close to the immediate support zone also. 710 is basically the area where we have the immediate support, but the major support comes around 685. So that should be a stop loss since his view is next 3 to 6 months. For the next leg of the momentum, we need a close above 760 mark. The moment we see that, probably 840, 850 means the record high is something the stock might test. So as of now, he can stay put, and for adding more around 710 area, he can consider adding more.
Okay, all right. So that's with regards to where CG Power stands. The next question is from Meet Srivastava. He's asking about IRIDA. He's bought at the levels of 218 and he's got 112 stocks in quantity, sitting on loss of around 7,000 rupees if I'm not wrong. He wants to know if he can average out or continue to hold the quantity that he already has from a longer term perspective. Also thinking of switching to something like an Adani Green. Saurabh, your view on this one?
I think you can hold IRIDA. The valuations have came off from the highs, but yes, the stock can consolidate for some more time, but it's a good hold from next 2-3 years perspective.
The other counter that's in focus is Jindal SAW, and our viewer is asking if he should buy into this counter right now. Ajit, what do the current levels suggest in terms of buying into something like a Jindal SAW right now?
So Puneet, we are seeing decisive correction, means the stock is trading at the 52-week low, and today also we seeing that the pressure is intact. The stock is trading around the day's lows as well. The only thing that we have in support is close to around 168.69 is where we have the support zone of moving averages on the quarterly charts. So maybe that could be the area where we might see a breather. But since the trend is down, and we usually recommend sticking with the top performing name and the market trend is positive, I would recommend to avoid Jindal SAW for fresh long positions.
Okay, all right. The next question then is on Metro Brands. G. Krishnamurthy from Chennai is writing in. He's bought around 400 odd shares of Metro Brands. Wants to know if he can continue to hold from a longer term perspective or not. Saurabh, I'll stick with you for this one. Overall, companies continue to maintain its guidance of 15% growth CAGR. Is this the right way to play the footwear retailer theme?
Yes, of course. And in fact, from the seasonality point of view also, I think third and fourth quarters makes a good chunk of profit for the companies like Metro Brands. It's a good marquee player with good brand recall. I would suggest to hold.
Got the view, Saurabh. But the other one's also on something like a Finiotex Chemical. And our viewer, G. Krishnamurthy from Chennai, is asking if he can continue to hold the counter. He's bought at 275 rupees per share, so a slight dip from those levels, and 1650 rupees, 1650 shares is what he holds. Any view that you have on this one, Ajit? Because the chemical space, some counters, most of the counters actually have been underperforming. Your quick view on Finiotex?
So Puneet, if you can help me with the symbol, because I doubt that it's
Ajit, it'll be FCL.
Okay, FCL. Okay. So here, this stock has been struggling for almost 3 years now. Means broadly, if you see that 380 to 220 is the overall band. Of late, after retesting its lower band, we are seeing a bit of a stability, but still trading below the major averages. So there is no sign of reversal yet. For any meaningful recovery, we need a close about 270. So for fresh longs, definitely avoid. For existing positions, your stop should be now at 235. And use recovery toward 270, 280 to reduce your positions.
Okay, the next one is from Dr. Upan Singh, who's writing us from Bihar. He's asking about IRFC. He's bought 102 odd shares at the levels of 194. Wants to know if he can hold or average at the current levels. Ajit, your view?
So IRFC, like any other railway counters, struggling in a very tight range after this sharp decline, and there's no sign of recovery yet. So if the view is short term, definitely it's an avoid. if somebody is holding it for the long-term view, 110 is the base where we saw that stock taking support on multiple occasions. So that should be the stop loss.
Got the view, Ajit. But viewers, it's time for a second round of rapid fire in this particular show. Ajit as well as Saurabh, you know the drill. Keep your answers as short as possible on buy, hold or sell. The first question from Wahida, she's asking on Dixon Technologies at the current market price. Saurabh, your view?
Book some profits.
Okay, Vodafone Idea is the next one. Vishnu from Hyderabad wants to know from a 2 months perspective we can continue to hold or not. Ajit, your view on the charts?
Hold 8.5 stop loss.
Another one on the chemical side, Gujarat Fluorochemicals bought at 3,100 6 months ago. Ramalingam is asking you should continue to hold. Ajit, your view?
Hold with stop of 34.50.
Okay, Bajaj Housing Finance is the next one. NT Raju from Bengaluru has bought at the levels of 126. Wants to know if you can hold or exit. Saurabh, your view from a long-term perspective?
Hold for long term.
Ola Electric is the other one. We covered the fundamental view. Ajit, your technical view. Our viewer has bought it at 48 rupees per share. He's asking for the next 6 months on this one.
Seeing recovery, but it's not sustained. So maintain the stop at 48 is buying price and use recovery to reduce.
Z Media is the next one. Hence, I think is asking about this particular counter. Is not mentioned the time period, but Saurabh, any view on this media counter?
Better to exit.
Urban Company, a recent listing. Any view that you have, Saurabh, on this one? 177 is what our viewer has bought it at.
Good franchise, hold for long term.
Okay, Geo Finance is the next one. Deepashri wants to know if she can continue to hold or not. She's holding 1600 odd shares. Levels are not known. Ajit, on the charts, what should she do?
Hold with stop at 300 and above 320, wait for 335.
A smaller counter, Nirman Agri, is what our viewer is asking on. Ajit, any coverage by any chance?
I've never heard this name before, so it's a kind comment.
No worries. Suzlon is the next one then. Sai Akshit is asking from a long-term perspective. Is bought at the levels of 40 rupees. Should he continue to hold or not? Saurabh, your view?
Hold for long.
Hold for long. All right. With that, it brings us towards the end of this edition of Ask Profit. In fact, we've answered 51 queries today. So that's a big win for sure. Thank you so much, Saurabh and Ajit, for taking us throughout the show and taking out the time, of course, and speaking with us at NDTV Profit. With that, it's time to wrap up. But do stay tuned. KYC on the other side.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And the company on KYC's radar today is ProStarm Infosystems. This company was of course recently listed. Not much data regarding the company, but yes, we have seen the overall research happening and there's a lot of questions regarding the stock itself. Recently the stock was listed. Anushi, I think it was the June month when the stock was listed, right?
Around a 19 to 20% of a listing premium is what we had seen that time. Yeah.
Well, the question remains is why are we actually getting this company?
Right.
There are key concerns, of course, for the investors and maybe the prospective investors. The first question is how are the order book trends or the client confidence looking like? That seems a decent question to start with, but then of course, as we peel through the onions, there are some questions which will be raising some eyebrows. How will the company stand against its MNC giants? And of course, we'll be discussing about the company as well going ahead. But the new foray, battery energy storage system, that's like the mantra of the entire industry right now.
All of these companies.
Everybody's talking
everybody's
about,
going into this space.
Yes. So let's see how much it's truth and how much it's executable. Higher debt levels. After IPO also the debt levels are at the higher levels. So we need to ask, where's the progress of this debt reduction? So these are some key questions, I think, which we'll be actually looking out for. And of course, lastly, what is the actual moat of the company? Company is doing 2 or 3 announcements. Where does the company actually stand? But let's just give our viewers a flavor of what the company is all about. So of course, the company, they had run advanced UPS systems, lithium-ion battery and end user computing. The numbers, the jargon, it's very technical. We'll try to decode it for our viewers in a simpler manner. And this is a big announcements coming in. They have around 750 customers, 1 lakh installation and 3 operating manufacturing facilities, and maybe 1 facility will be coming online in some months as well. Key competitors, these are very big global names, Anushi. Schneider Electric, Vertiv, Delta Power Solutions, their size is also very huge. But there are certain questions. I think I would like to just ask, what is end user computing? A lot of viewers are asking me, Sharad, what is it, this company all about? There are so many new things coming. Can you just decode that jargon?
Right. So, we've already spoken about the power side of the business. This is another area that the company has been increasing its contribution to. It's around a 94 crore of a market that we are looking at in comparison with about 2 crore last year. What it essentially does, it delivers end-to-end IT hardware solutions. So this includes all your notebooks or desktops or all-in-one systems as well. So it's basically reading side of a setup that we are looking at. So that is on end user computing. But just a little bit about the IPO as well, if you're talking about that, we already spoke about it, that they marked an entry in June 25 and they came out with a total issue size of about 168 crore. This is an entirely fresh issue that we had seen. Proceeds to be utilized towards funding working capital requirements of the business, along with that for repayment of debt also. Now that amounted to something around 18 crore or so. And of course, the other would be to look for more inorganic growth opportunities as well. So we'll be quizzing the management about the last two questions, especially about the debt repayment, also about how they have deployed these IPO funds so far. But let's take a look at the FY25 business mix as well. So if we are just drawing that on board, manufacturing power solution products, that makes up to 35% of the mix. Third-party power solutions and other products also 32% of mix coming from here, while solar EPC contracts and value-added services see about a 6% of contribution. Now with most of their order book shifting towards the BESS side of the business, it's interesting how this would change going forward, right, Sharad?
Correct. And if you look at it, the numbers, if you are adding up and if you're thinking it's 100%, it's not 100% because other services are also there, other revenue segments are also there. That's why it has been put up. So we are seeing a variety of businesses the company is doing under one head. Now, of course, the question arises is the manufacturing plants. I would just like to, go faster. Pune plant, they are having a UPS system, while they have a second plant for the solar hybrid inverters. And lastly, there is a lithium ion battery pack as well. So futuristic manufacturing plants, 3 are operational, 1 is in the offing. But let's get back to our show. The rating parameters, Anushi, that's the most important thing which our viewers actually look for. And if you look at it, we are having income statement, balance sheet, cash flow, return ratio, shareholding, street trade, valuation, and outlook. And out of these 8 parameters, we will be giving the numbers so that you get a clear picture, a 360-degree analysis of the company, and later on the management will also be coming in. So we start firstly, Anushi, what do you like to say about the income statement? What are your views on it? They look prima facie decent?
Yeah, so what we are looking at is an overall decent set of numbers in terms of where the revenue growth is concerned. It's a 26% of a CAGR growth that we are looking at over the last FY22 to 25. If you are taking those fiscal years in account, while margins also in these particular fiscal years have ranged between that 12 to 14% of mark or so, the question would be, what's the kind of sustainability that we'll see in terms of the margin profile, considering the first quarter, we did see a dip in terms of how the margins have panned out. Net profit, a 36% of a CAGR growth that we're looking at. So considering the previous fiscal's performance, we've given this one a thumbs up, right?
Well, yes, but of a balance sheet, I do have some apprehensions, Anushi, especially if you look at the debt numbers. That number has not reduced, and of course, we will be quizzing the management is after getting the IPO proceeds, when will the debt start going down? What's the timeline? But the numbers have spiked up. It's almost up 50%, 67 crores of borrowings coming in. Not much to look at the book value, but the cash and bank, that's an area of concern for me. If you're looking at a big size, you need a good, decent cash and bank balance as well. It's a high working capital intensive business. More loans will be coming in, but the liquidity ratios need to shore up. It's such a big size of a company. You're just having 2 crore cash and bank balance. So that raises some questions as well. From my side, Anushi, it's a neutral.
Right. So for cash flow, we have, accounting for all that we spoke about, we've given cash flow a thumbs down, because if we just see the previous 3 fiscals, a negative cash flow is what we are looking at. Now the business wants to utilize towards, is expanding in terms of how they want to utilize their working capital requirements. So if there is improvement in terms of the management commentary on that, that is something that we should be watching out for. But considering the EBITDA and the net cash flows also, it's almost negligible that we are seeing. So far, for now, we've given cash flows a thumbs down on that basis.
Well, of course, so it's basically even Steven still now. We look at the financial statements. But return ratios, Anushi, that's on the higher side. I would like to just point out the ROC numbers. That's for FY23, it was 34%. It's 28% and 25%. So it's kind of actually going down. Now, of course, we will be quizzing the management. Is there an extra balance sheet pressure? Whenever these numbers come, there is a pressure on balance sheet, whether it's debt or it's over expansion. That is something to look at. ROE numbers also, you look at it. It was 40%, 32%, and now you see there is a slight downtick of 30% odd. Net, the return ratios, however, still, if you look at the industry average, it's still on the higher side. And let's give some time to the company as well. It's just, just been June is the month which Anushi was talking about when it was the listing. So we should need a much more better data to actually understand and give us our ratings. But initially, for the time being in the industry itself, whatever limited data we have given a thumbs up here. Anushi, what would be there for the shareholding patterns? I know it's just 2 quarters of actually seeing the data, but something is there, right?
Yeah, before I just go to shareholding, a quick point about return ratios is also that we are looking at this dilution because of increase in the equity capital as well. Now, since there was IPO in picture, so the base has increased. So from now on, how the ratios would be sustained is something that we should be looking out for, because if you just look at prima facie, the 25% to 30% number, that seems on the healthier side, as Sharad just spoke about, that versus the industry average. But quickly coming to the shareholding part, we just have 2 quarters of information as of now. While promoter stake remains healthy at 73% odd level, FII and DII stake has gone down considerably from 4% to almost 1% of a ratio is what we are looking for FIIs, while DIIs have also offloaded their 2% stake to about just 0.7% now, while the public shareholding has increased to about 26%. So more time awaited for this particular piece of information going forward, right?
Well, yes, Anushi, but the most alarming part which I saw is both the institutions, their stake has come down below the 1% mark. That means it's technically an exit. And of course, as we go forward, there will be a lot of months where lock-ins will be coming in.
Right.
So we'll have more of these exits likely. And if that happens, we see the retail position going up. And whenever there's a lot of retail position going up, it becomes a distribution kind of a move. And that is why we are I think for shareholding, you have given a down, thumbs down as well. But moving on, the second last parameter to focus on, that's the street cred. Anushi was speaking about the recent IPO performance. And if you look at the company itself, on listing day itself, it came at 120 rupees. That's more than 10-15% odd listing gains as well. Currently, since listing, the stock is up 56% and there has been a sustained buying and support. Anushi is coming from the retail segment. That's a very interesting thing. So net, I would give a neutral rating on this because the timeline is not there. So that's why I would suggest let's keep it neutral for the company. But there is a last parameter which you look at. What would that be?
Well, let's talk about valuations. Is this the right time to buy or enter? That's the question we should be asking. Now, if you just look at the price multiple, 25 times versus its peer, which is Servotech Renewable that we are looking at, there's a vast difference that we are looking at, 25 times versus 84 times. Now, what is the kind of growth picture, the cash flows, the debt profile, all of these have to be accounted before we just look at this one multiple in particular. But for this metric, we've given it a thumbs up, right, Sharad?
Well, correct. And I think let's revise the entire report card. What our special show is there, what our rating numbers are there. If you could just get our ratings in income statement, we had given 1 positive, it was balance sheet largely neutral, cash flow on the negative side, we've given a thumbs up for return ratios. And going ahead, let's look at the shareholding portion, that's on the negative side. Street Kit largely neutral, but valuations still favorable as compared to its peer. Outlook largely you could say it's neutral. And I'd just like to point out the new segments they are entering, that is something Street will be watching out for. Currently the KYC final rating, that comes in at 4.5 out of 8. So the company needs to prove more, they need more time, and of course they are doing so many things at a single time. So of course the time will say, and how the prices move. But overall right now, Anushi, the retail is holding up the stock.
Right. Well, so that is what we are seeing for ProStam right now. But with that, let's welcome in the management as well. Ram Agarwal, the CEO and whole-time director, is with us to talk to us about the results that we are looking at. Thank you so much for taking out the time to speak to NDTV Profit. I just want to start off the conversation. You recently had your IPO, you had the proceeds. Now, what we are seeing is that in the last 3 fiscals, there have been negative cash flows. Will this improve from this FY26 period onwards? My first question is regarding that.
Yeah, namaskar. See, first of all, thanks for having me here. I would like to say that our negative cash flow improves in last 1 or 2 financial year, and it will substantially come down by next financial year because we are working hard on it, and it will definitely will improve further.
Okay, so just want to take this in account that what is the kind of debt picture that we are looking at, because if you just see the FY24 to 25 value, we've in fact looked at an increase in terms of where the debt number is concerned. So just want to understand your overall plans for debt reduction. You already had a plan of around 18 crore of debt reduction in your IPO proceeds as well. So how have you deployed those IPO funds? Can you give us an update on all these key parameters?
See, our debt ratio has come down substantially. As on today, our cash fund-based limit used is only 7 to 8 CR. Our major fund debt is used against non-fund-based, that is bank guarantee. It is around 75 CR as on date. Whatever IPO receipt we have used, we have paid 18 CR for one term loan debt, and all other fund has been used for our regular cash flow, and some has been parked for using against this acquisition and the capex investment.
Well, that's pretty interesting. You mentioned the debt and of course the overall interest rate costs and how things will move ahead. Anushi had asked. But one more question remains is, and your company largely the revenue numbers, when we and Anushi were checking the investor presentation, that was ranging between 80 to 85%. So the company has a huge exposure to the government segment. Now there are problems of execution comes, payment comes. So where is company positions in that, and how is company actually helping itself out or safeguarding itself when it comes to the B2G orders?
See, I'll tell you one thing. Our product is a last mile product. It's a capex product. So we generally bill at the end of the project. Generally, it is happened at the end of quarter, at the end of the financial year. So in the balance sheet, the number goes up immediately. But if you see the last 2-3 quarters, the collection is happening. Yes, there is some delay in the execution, in the collection of the government, but there is no any bad debt. First. Secondly, going further, we are working hard on increasing our business portfolio, and if in this current financial year you will see substantially rise in the private sector. We are focusing more on the product side, where to increase on B2B business in the current financial year, and overall the number at the end of the quarter, at the end of financial year, you will see a good change in the proportion of the breakup of the sales.
Ram sir, if you could just give us the breakup, roughly I think it's 15%. So will that touch around 25 to 30% at the end of this year? If you could just quantify.
Yes. Minimum. It should be minimum. I can't give the exact number, but it will be
range will be fine.
Above.
20% above. Fair enough.
Agarwal, just want to get, because with this overall capacity additions that you have in plan, what's the kind of outlook that we should be building for FY26 in terms of top line as well as margins? 26% of a CAGR is what we've seen in the previous 3 years. Is that expected to sustain, or do you see a further uptick also with the addition of more of these segments going forward?
I tell you, I can't give the actual numbers to you. I have some limitation. But if you see our last 3-4 year growth and our top line and bottom line, if you compare those for last 3 to 4 years, I can say you that next 2 to 3 years will be much, much better. We are working very closely on the reverse integration in our manufacturing facility, and lot of new product is coming up in the UPS and inverter, which will add up a new revenue model, new revenue segment for us. So it will overall increase in the size of the manufacturing capability as well as the manufacturing product sales in our overall portfolio.
Okay, and what about the margin profile? Because in the previous 3 fiscals, it's been in the range of 12 to 14%. But in the first quarter, it came down to 7%. So just want to understand in terms of the shift in terms of margins.
Quarter-wise, I can't comment. There are many factors where quarter-wise I can't justify. But when you compare the financial year number, it will be totally different. And I'm with very confidence, I can tell you that it will be better than last year.
Okay.
That's a pretty interesting focus on that. But of course, main thing which of course the investors have been asking us is to ask about the order book. So suppose this order book status, what's the actual breakup like coming in, to give us more clarity? And also before that, can you just explain us what this end user competing segment means? There seems kind of in the investor community that what this business is actually there, because significantly now the orders have started coming in this segment. So could you first, just for our sake of our viewers, just define this segment, what it actually is, and then we'll go ahead with the order book story.
See, end user computing is nothing but an e-governance project of the state and central government, where we have our own product like power conditioning equipment. We call it UPS, inverter, whatever. So earlier we used to quote to the partner where they bid for the project, and in some cases where we are qualifying, we are justifying our presence, we are bidding directly with in few projects just to gain credential, and it becomes a business factor for us in the future. Last year, if you see, we have done one end user computing project where our margin was very low. But because of that, we are getting qualified for a large project in the current financial year, where our bottom line is fairly good. I can't disclose that. It will come up in the financial year number, but it is much, much better than last year. So it is just to add on a vertical. We are not going out of our domain, that is power sector. Here, UPS plays a key role in this IT computing sector. So we are taking the other product and doing the integration and giving a one solution to the government, where we are leveraging our infrastructure, our service network, our capability, everything. It's not just a supply, it's a commissioning, installation, commissioning, and the end use service for the 3 to 5 years. It gives us revenue for 5 years also, as an AMC.
So this new segment gives you a revenue visibility of 3 to 5 years. Viewers, please note this, because a lot of queries had come for this business itself. But order book, that's what our last discussion was, Ram sir. And order book stands at roughly 284 odd crore rupees, and annual status is roughly 11 crores. Now these new order inflows, what is the guidance looking like? And if you could just break it down by sector to sector.
Give you the actual number as on date.
Yeah.
I'll give you actual numbers on date.
Sure.
Actual number order in hand is around close to 1100 crore, where we are likely to bill minimum 300 crore in this financial year, minimum. And out of this, apart from this 1100 crore, we are having our bidding, which is under evaluation, is close to 1000 crore. So our numbers are very pretty on better side, on upward side, and at the end of the financial year, we are very hopeful we will have better top line and bottom line compared to last 3 financial years.
Okay, so that's on the order book that we are looking at. Now coming to the main segment, that's the battery energy storage system. A lot of the industry players are, increasing their focus towards this particular segment. Want to firstly understand what is the competition scenario like? You're already setting up huge capacity plans in Haryana as well. So firstly on the competition side of it, and second, when will this start, contributing to the revenue? If you can help us with the utilization levels and that as well.
I will discuss BESS as an overall. BESS in India is totally a new subject for everybody. Anybody doing a tall claim, I can't comment on that, but it is a new subject for everybody in the market. Even for us, it's a new, but being as a power industry, as an electronic industry, we are into for last almost close to 20 years. So as a power electronics manufacturer, we have a better stand in this BESS overall. So in our Haryana manufacturing plant, we are focusing on manufacturing 1.2 gigawatt capacity. If you talk of the business, in a business case, how much business we can do from the manufacturing facility, there's a possibility of doing 1200 crore billing from this Haryana facility once we start using the facility more than 50% or close to, you can say, 80%.
Well, please continue, sir. Yeah.
This is what we are targeting from our Haryana plant as an OEM of the BESS. Secondly, the project what we are having in our hand, that is Bihar government and the Karnataka government. This is under the active processing. We are the designing and all agreement, everything is done. And we are targeting by next financial year, it will be commissioned and our revenue will start coming in.
Ram sir, I just have a follow-up question on the BSS segment. The revenue will start coming in, say, in the next 18 to 24 months if the plan gets commissioned in 12 months. So it's a wait period of 24 to 36 months?
No. We have mandate of doing within 18 months, but we have a target within self-target to do it within 12 months.
Okay, so there's an internal target for BSS. Okay, sir, this is a strategic question for you because I have been reading about your peers. Your peers are basically global players. Schneider is also there. All these players are there. But what sets you apart? Especially the question I'm asking you is because you're an Indian company, you're an inborn company here. Credentials at times matter also. You are getting almost 90% of your orders only from the government itself. Private market space, when you go, there will be more competition from the foreign majors. How will you differentiate yourself?
Tell you. There are two types of sectors in the market in India, tier 1, tier 2. I term this slide as a tier 1. We term our Indian companies in tier 2 sector, and we are among the top 3 in the tier 2 sector. As an Indian company, as a company size, we are too small compared to this giant. But as a product, we are competing, we are capable of competing with them. We are matching all technical parameters, specification of the product. And I'll give you a few examples. Like recently, we have taken one order from Delhi Metro, from airport, from defense. This is something where there is an entry barrier for the Indian company. Only the multinational company can enter into this segment. But we are well placed now. As we have access to the technology, we are digitizing our complete internal procedure, internal activity, our operations. And the last mile reach is the most important for us to get further go aggressive in the market compared to MNC, because those people work so they are dealer partner. We want to go all out from our own network what we have today.
Right. So just considering all of these capacity additions that are happening, and we'll see that flowing into your top line from the next 2 years onwards or so, I want to understand what's the kind of capex plan that one should be looking for from your company, and would there be more fundraising for these capex requirement?
Yes, we are having a very good increase plan in the future. Yes, capex planning will be there, fundraising will happen, and by when it will, I think by next financial year definitely. So once this plant is active in Haryana, and once we start getting the rollout, I'm sure we'll go for the further expansion, for which definitely capex will be required.
Well, thank you very much, Ram sir, for taking out your time and talking about your company's growth plans, and best of luck for the future. Well, moving ahead, that's all, folks, for KYC today. And thanks for tuning into our show only on NDTV Profit. Stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से
Hello and welcome to Markets at 12. I'm Nisha Poddar. On to the latest in the Vodafone Idea AGR dues saga, and the CJI has said that the matter has been adjourned and the government is willing to hear Vodafone Idea's views. Before we get you the word from an expert, well, our colleague Danish Anand, who's been tracking the developments very, very closely from the courtrooms, joins us with all the details of this court case. Tell us, Danish.
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores. And considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who is representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees. So for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw H.D. Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mukul Rohatgi, who was representing Vodafone Idea, he agreed to this offer and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
That's right, Danish. Thanks so much for getting us all those initial details coming in from the courtroom action. It's a very important development, been in the waiting for quite some time. And take a look at Vodafone Idea stock, up 10% in trade. It has really spiked up. But another counter which has also done well, which is dependent on Vodafone Idea's prospects and business, is Indus Tower. Take a look at that counter as well, inching towards a 5% uptick on that as well. All right, to talk about the implications of this and what this story and this development means for telecom, and especially these two counters, Piyush Pandey, who's a telecom analyst at Centrum Broking, joins us now. Piyush, good to have you on NDTV Profit. First, your views on the court action and the Supreme Court's verdict today from the hearing. How positive is this development? Relief, yes, but not a complete relief in terms of how much relief is coming in, and the government, discussion has to begin now.
See, broadly, this decision was broadly expected, on expected line. And see, anyway, say, the intention of the government is to maintain a 3+1 structure. And 3+1 structure, and Vodafone had close to 20 crore customers. So in a way, with the current balance, it was difficult for Vodafone to expand its operations. And so broadly on expected lines. But now it's up to government, what kind of relief they are able to provide in terms of interest and quality of these AGRs.
Right. So, Piyush, given this development, how would you rate the Vodafone's stock at the moment? What could be the target? At the moment, it has crossed the 10 rupees per share mark with the uptick today. How would you consider the uptick going forward, and what would be the fair value given this positive development?
Of course, this is a positive decision, so that is driving, I would say, uptick in the Vodafone stock. But I would say any upside depends on the actual decision of the government. So we have to wait to see the amount of relief Vodafone actually gets, and that can say sort of decide the further upside in the Vodafone stock. But having said that, I think another way to look at it is say Indus Tower, which would also be key beneficiary of this decision. So that can be another way to play this decision. Yeah.
Right. And Piyush, the other counter which has also done pretty well because of this relief coming in from Vodafone Idea is Indus Tower. And we know how dependent is Indus on the business prospects and well-being of Vodafone's financials. How do you see that particular counter? It's up close to 5% in trade at the moment.
Yeah, so broadly, Indus Towers, of course, it remains highly dependent on Vodafone Idea. And with this decision, we expect that Vodafone would be able to increase its capex to drive its 4G and 5G rollout. And any further improvement in operations or the capex program will be positive for the Indus Tower. So I would say Indus Tower can be a better play for any sort of relief on this Vodafone Idea.
That's right. That particular stock really euphoric because of the relief in Vodafone Idea. Hold on now, Piyush. We also have Balaji Subramanian joining us, who's the Vice President Research at IIFL Capital. Balaji, always a pleasure speaking to you. What do you make of this relief coming in from the Supreme Court for Vodafone Idea, even though the amount per se or the amount of relief is still not really concretized, but the court hearing and the verdict definitely is a very good news for Vodafone Idea.
Hi, good day. Thanks for having me on the show. I think this is a very clear positive development because it gives the government a free hand in terms of whatever it can do to offer relief to Vodafone Idea. because all these years the government was government had its hands tied at the back because they had to work within the ambit of the 2020 Supreme Court judgment. But now what changes is that with an order, effectively the Supreme Court has put it in writing that they would be fine with whatever steps the government is taking. So the way I look at it is that first of all, there could be a moratorium on the AGR and spectrum payments. There could be a potential extension in terms of the timeline of the AGR payment, which as of today stands at 31st March 2031, based on the original Supreme Court verdict. And most importantly, the government might also decide to waive off the interest penalty and interest on penalty, which accounts for nearly 60,000 crores of the 80,000 odd crores liability that Vodafone Idea faces right now. So I think if the third one were to pan out, then it will be a really big relief for Vodafone Idea, because their cash flow commitment towards the government would meaningfully go down. So I think it's a clear positive, and it will also help Vodafone Idea in terms of completing their debt raise, which they have been talking about for almost a year and a half now. So once that comes in, they will continue with their rollout. That means that Indus Towers will benefit from the additional rollouts of Vodafone Idea. So in a way, it will set a virtuous cycle off for both Vodafone Idea and Indus.
That's right, Balaji. And in fact, government is a big stakeholder in Vodafone Idea as well. And any relief would be most welcome for this particular company as well. But considering Vodafone Idea, how do you see the prospects and the right fair value of this particular counter going forward with these developments?
I think from a trading standpoint, the stock should, I wouldn't be surprised if the stock goes up by a fair bit even from here on, because if I were to take a situation where the interest on penalty on the AGR dues is waived off, then 60,000 crores, as I mentioned, is a little over 5.5 rupees per share. So that is pretty meaningful. But that said, I think they still have certain other issues that they need to sort out, because even after doing a fair bit of capex, they are still losing subscribers. And because of that, despite the tariff hikes that were taken last year by the industry, the flow through for Vodafone Idea from those tariff hikes was the least. And they also have a pretty sizable spectrum debt. So let us not forget that the AGR dues are only about 35-40% of their overall dues, and they have a sizable spectrum debt as well. So I think things are, still not all that hunky-dory for Vodafone Idea, but at least, I think the near-term solvency issues and the cash flow issues should largely get sorted out because of, whatever can potentially happen based on today's developments.
That's right, Balaji well pointed out that this is not the only factor which is really plaguing Vodafone Idea. There are many other aspects, and especially operational as well as subscriber reduction. That is also a very big worry. So whether this relief can help them combat other difficulties is a big question. Before we let you go, when we are talking about the whole telecom sector, how soon are you expecting another tariff hike? Because that will create some euphoria in the sector, and that's the biggest trigger also coming up next.
So if you look at the tariff hikes, there have been some subtle tariff hikes. All telcos have removed the 1 GB per day pack. I think they removed it about a month and a half back or so. So that is a slight nudge towards getting customers to pay more. And but I think you still need an outright tariff hike, especially considering the cash flow challenges that Vodafone Idea is facing. And let us not forget that Reliance is also has also spelled out that they would like to do an IPO of Jio platforms by the first half of next calendar. So I think all that points towards a tariff hike in a not so distant future. Of course, predicting an exact timeline is quite difficult for anyone. And but I wouldn't be surprised if something happens in the next 3-4 months or so.
All right, Balaji, thanks so much. Always a pleasure speaking to you, and lots of important takeaways and points. Of course, how much of relief coming in for Vodafone Idea with discussions with the government is one thing to watch out for. Second, of course, when tariff takes place in the telecom sector. And third, of course, how will it really give relief to Vodafone Idea in combating other operational issues that it is facing, and also the debt that it has on its books. So it needs to be seen. Let's shift focus on Adani Group of stocks, and Adani Ports is currently trading 0.3% down. It has recovered substantially from the low point of the trading session. All right, so the big news that we are really focusing on today. Washington Post has made some serious allegations on the Indian government, stating that the government has pressurized Life Insurance Corporation of India in funding the Adani Group with investments worth $3.9 billion, which includes, remember, $500 million worth of bond subscription for Adani Ports for debt refinancing, is what they stated. LIC has vehemently denied these allegations, calls them baseless, and also states that there is a due diligence process for investments which have no interference from the government. LIC's 36,000 crore rupees invested in Adani Group is just 1% of their total assets under management, which is well within their norms. Now, allegation number one by Washington Post, and it states and alleges that LIC's about $500 million of subscription of Adani Ports bond was for debt refinancing. The fact from publicly available data is that it was used for buyback of bonds maturing in 2027 and 2029. Important to note here that LIC gets additional profit of 950 crore rupees by way of its investment with 1.26% added spread over 15 years. So the question is Adani really dependent on LIC for its funding requirements? Well, LIC accounts only 3% of total debt, and 50% of the leverage of Adani Group really comes in from the overseas investors, and a wide base of that. Here's a list of, remember, the marquee investors which have participated in Adani's bond issuances. Now to the big question also on why LIC was the sole subscriber to the bond issuance at Adani Ports, and is it unusual? Well, the data suggests that LIC has been a sole or a very large investor in several of the large corporates in the country, including Reliance Industries. Another allegation by Washington Post suggests that several major American as well as European investors have shied away from investment due to bribery and fraud charges. Fact is that several marquee names like BlackRock, Rabobank, and many others listed here have invested in Adani Group in this particular year. LIC, as a large investor in equity markets, has minority stake in several of Adani Group stocks. A lot of these are either market trade by the investor or shares also received by way of value unlocking and listings over the years by Adani Group of companies. So the Washington Post allegations fall flat when we dug deep into the publicly available data of the listed companies of Adani Group of companies. So this is the big story that we are tracking today. All right, now to take it forward, let's take it straight across to some of the experts who are joining in. Sri Ram Subramanian, who's the MD and founder of InGovern. He is joining us now. Mr. Subramanian, when we talk about the corporate governance standards and the spotlight which has been put on LIC's investment decisions, how do you read this particular allegation by one foreign publication?
Good afternoon. Firstly, let us look at the data, which is LIC's investments in Adani Group companies. If I go back and I have the data which can be pulled up within seconds from the BSE and NSE website, LIC's investments in stocks of Adani Group, all the 7 listed companies, date back even to 2016 and much before. So from that perspective, it is tough to say that the government of India pressurized LIC to invest in Adani Group stocks. Secondly, LIC did subscribe to the rupees 5,000 crore bond issue by NCD issue by Adani Ports in May 2025. 5,000 crores, there was a single investor, which is LIC. But does the 5,000 crore matter to LIC or matter to Adani Group? One, was it market pricing? Firstly, this was a 15-year NCD issue at 7.75% coupon. Second, it's a AAA NCD issue, so rated by CRISIL. So, be that as it may be, even if the government had pressurized, 5,000 crores is not a big amount for LIC's portfolio itself. For the assets that it manages, it's not a big amount. Two is Adani Group had put out in the stock exchange as an announcement that it is using the 5,000 to refinance its US bond issuances. And as you had pointed out, probably some of them were maturing in 2027 or 26. And so from that perspective, if you see the way the rupee is going, any US denominated bonds need to be refinanced with rupee bonds. And if they are priced market, this one and AAA rated, Adani Ports, by the way, is a free cash generating company. And Adani Ports, by far, manages almost 30% of port traffic in India. Second, it also has assets apart from India in other geographies. So from that perspective, it's a marquee asset. So there is no risk to the bond investment of 5,000 crore, even 15 years. Second is, does LIC have holdings in other groups, not just Adani Group? Yes, you have not put out that data, which is LIC has large investments, much beyond even what it has invested in Adani Group with other groups, be it Reliance, be it ITC, etc. And generally, LIC's investments, LIC is almost like a permanent investor. In that sense, it invests in companies which have a horizon, and their investment horizon is 15 years, 20 years, 30 years. So from that perspective, there is no need to question LIC's investment. What Washington Post has put out is excerpts of notes, analyst notes of LIC, which almost is like a very crude this one. Any analyst writes out those analyst reports. Anybody investing in equities or bonds, even including my analyst or any fund manager writes out those notes. And LIC is just Washington Post is just putting out those as purported this one of any misdoing at LIC. So LIC has a process, and I think they have adhered to it.
Right. So very well made. Some of the important points which we have been also covering. Aditya Shah, founder of Hercules Advisors. Aditya, how do you see the stock market reaction to that? Adani Ports in particular had dropped close to 1%, but has substantially recovered from the low point of the trading session. How do you see it going forward and the stock reactions?
I don't think that this is particularly a news of importance from my perspective. From an asset perspective, most of Adani Group companies are doing well, and LIC has an AUM of about 55 lakh crores, and it is obvious that they are going to invest that kind of money in top corporates in the country, Adani being one of them. So I don't think that there is any surprise here that Adani has invested in equity as well as debt side of the business of Adani. There's no surprise here. From an asset perspective, it's a good asset to own for a huge, humongous group as Adani. Second point is, mind you, LIC's promoter is the government of India, although there is a Chinese wall between the government and LIC taking independent decisions. But the promoter is the government of India, and even if there are some investment decisions taken, of course, the promoter and the majority holder does have the right to direct. Mind you, in this case, there is no direction from the government of India. So I don't really understand what is the furor all about. LIC has been a marquee investment over the last 20-25 years and will continue to do so. It has investments in Reliance, it has investments within the Tata Group as well. So I don't think this is a news, this is a non-news. And I think those investments are a good thought out decisions from LIC.
Right. And Swapnil Kothari, senior lawyer, Supreme Court. Swapnil, from the legal point of view, this is an allegation not on Adani Group but per se, but it's actually from a foreign publication on the government of India and its interference in another publicly listed company where it has its holdings. How do you see this from the legal point of view, from the government side?
Well, I think, Nisha, let me tell you, this doesn't hold any water in a court of law, for the simple reason that when it's a mere reportage at the end of the day, it may have its sources. The sources could be something as infinitesimal, something very small, or it could be something big. But at the end of the day, LIC has done its due diligence. It has a board which takes these decisions, which makes these investment decisions, and this could possibly a fraction of what LIC would invest in other companies also. So LIC could say that, look, we invested 2 rupees here, but we've invested 10 rupees and 15 rupees in other companies, and nobody has pointed a finger at that. Now, if, for example, if there is an external influence, so be it. So what if somebody from the government has told me that you invest in Adani? It could be a simple financial advice given from the government functionary to a government-backed organization like LIC. So for that matter, it's a mere reference. Now, if people have made money, which I believe from whatever I've been told is that LIC has made a ton of money for its policy holders and for its shareholders from this particular investment in Adani. So if there's a win-win situation, unless there is some sort of a quid pro quo, some sort of a cashback or a kickback, which the officers have had for making this investment, then it gets tainted with illegality. Other than that, it's a mere reference. Now, in many public sector units, the government has play. So there is an interplay between government functionaries and the management of the PSU. So if I'm just giving extrapolating an example. So are you saying that whatever the decisions PSU is making at the behest of the government functionaries, so everything is wrong? The answer is no, it doesn't function like that. The court of law will not even entertain this kind of a petition or an application should there be such for saying that this is tainted with illegality, because as I see it, there is no illegality just because there is a particular foreign reportage in Washington Post which has said that this has happened at the behest. You go further than that. You tell us more that why it has happened. What was the kickback? Were any big houses built, or was there some cashback in some form? Then yes, then we could say that there is money laundering, there is corruption, so we could go into prevention of corruption or corrupt practices and all those kind of detailed legislations which look at all these kind of things. Other than that, this is nothing but water over duck's back, and I would not worry. LIC should not even worry about it, and the kind of rebuttal that they put up on their site was absolutely adequate. And if I may say further, I was there on NDTV Profit the other day, 2 days ago, on this particular issue itself, and I said that these kind of reports should not be dignified with a response, except the one that LIC put. Do you go further into this? You try to sue, you try to say that what are you doing, why did you write this? This is only going to dignify the reportage. It should be just passed off as another report in a newspaper. And of course, Washington Post is a great newspaper with a great standing, but it's just one of those reports that comes once in a while, and we have to ignore it.
All right, Swapnil, very, very strong comments there coming in from Swapnil, and also that it needs to be backed by data is what he mentioned. Now, Jane Gupta, the former executive director of SEBI, joins us on the phone line. Mr. Gupta, what do you make of the allegations by Washington Post? The stock has had little impact of that particular reportage, and LIC has gone ahead and called these claims and allegations baseless. How do you read into it? And also, because Adani Group of stocks are listed, LIC is also a listed entity.
See, I just see it very simply that we should now learn to live with all type of allegations without giving any weightage to them. Time and again it keeps on happening, and they do not understand or they do not believe in our system. And the issue is very simple. LIC is such an organization where a single person will never be able to take any decision. As far as I know, it has a investment team where there are multiple layers, and only after it passes, any investment proposal passes all those multiple layers in checks and balances, then only investment happens. That is one. The second, I have already explained in many other interviews, that LIC doesn't look into investment like a normal investor or even mutual funds look at. for the simple reason LIC assets and liability is they do it for 10 years, 20 years type of thing. So it may appear that today LIC buys the share and it may go down tomorrow, but when it's a long term, and there have been, if you recall, 7-8 years back, there were a lot of allegations against LIC that they are buying shares of the PSU bank and other PSU companies. And everybody criticized. But I have said that LIC is not investing to reap the benefit next year. LIC is benefiting for the 10 years from 10. All those investments have turned into gold mine. The issue is very clear that I can make an allegation against you, you can make an allegation against me, but what is the substance in that allegation?
Right.
And the issue is this, Adani and LIC, State Bank, everything has been going on for 3 years, and I think it is time to bury all this for together and not pay attention to any article coming here and there.
All right, Mr. Gupta, you're calling the articles baseless and not pay much attention to baseless allegations. But final word to you, Aditya Shah, while whether the allegations are proved or not, any allegation has an overhang. How much of that overhang do you see on the listed counters of Adani Group because of consistent allegations coming in?
I don't think, as I said, I don't think this allegation has any merit. The government of India is the promoter of LIC, and of course, the government of India does not interfere in LIC decisions. But but government of India does have the power to do so. LIC has an investment committee which takes all investment decisions, and the board has the power to look at decisions as well. So from my perspective, does not hold any merit. This will not have absolutely any hangover on the stocks, and the stocks will move on. This will also not have a hangover on the LIC stock as well. All of that will also move on. So it's basically a non-issue from my perspective. Absolutely nothing to think about here, and move on.
Right. Thank you so much, Aditya Shah, Sriram Subramanian, J.N. Gupta, Swapnil Kothari for joining us with your take on this big news that we are tracking of Washington Post allegations on Adani Group. With that, it's a wrap on this show, but keep it with NDTV Profit. Thanks so much for joining us.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Hiral Dadia and with me is Mahima Vachrajani. An interesting day of trade. I mean, it's the first day in a way for the week and everyone's just come back from the holidays and good moves that we're seeing in the markets as well.
Right, absolutely, Hiral. And I think after the kind of sloppy trades we saw a couple of days in the last week, I think this is a good sign to see Nifty well above that 25,900 levels. And that's reflected in the benchmark indices as a whole, right? You have your Nifty 50, which is up 0.7%, almost at its day's high point. There is Bank Nifty also, which is trading around 0.7% higher.
And what's interesting is we've hit that 26,000 mark already in opening.
Yeah.
How long it sustains at 26,000 and the factors that will aid the markets is the crucial point over here, because you're talking about earnings right now, you're talking about FIs which have come back into the markets as well. So that is a key positive. In fact, let's just pull up, the contributors in terms of the gainers on Nifty 50 and then we look at the heat map. Reliance Industries, now they've done a deal with Meta and that is what is giving it a booster dose in today's session. In fact, all the other OMCs are also trading in the positive. Bharti Airtel trading in the positive. HDFC Bank, SBI as well seeing gains. Kotak Mahindra Bank is very interesting because in spite of a couple of factors which are positive for the bank, there are factors which are not working and that is what has put pressure. In fact, analysts are seeing a very limited upside when you talk about, a re-rating candidate, and that's the reason why you're seeing that kind of pressure in terms of Kotak Mahindra Bank as well. Bajaj Finance, BEL, M&M are few of the other losers in trade today. Let's look at the sectoral heat map as well to understand which are the sectors that are providing this kind of impetus. Real estate seeing some good moves. PSU Bank Index is trading in the positive. Infra, oil and gas, metals continues the upward journey. Defense is seeing some bit of pressure today. And I think it's a Zen Technologies which is adding to that kind of pressure on our defense as well. Nifty Pharma, media also down in trade. What's interesting is media is trading under pressure in spite the government looking at a hike in terms of ad rates by almost around 25 to 30%, which will be considered. The approvals are still pending, but that sector is ruling under pressure. So that's the sectoral heat map. Mahima, it's interesting to see what's happening in the broader markets as well, because a lot of individual counters which are seeing those spurts on the back of earnings, on the back of order wins as well.
Absolutely. If we can try to, in fact, pull that up, BSE 500, the entire list, that will give us a whole picture as to, what's indicative of that advanced decline ratio. There's Hatsun Agro locked in upper circuit on the back of the earnings, where there's a huge jump that we saw in the net profit, almost 71%. Of course, revenue also saw a good uptick of 17%. Of course, we're still waiting for the operational metrics to come out once the press release is out. But that's with regards to where Hatsun Agro is concerned. There's Gujarat Fluorochem, which is down around 2%. There's Eclock Services, Poonawalla FinCorp, Welspun Corp, and MRPL, all seeing gains anywhere between 4 to 5%. But some counters that are under pressure includes your SBI Cards, post its earnings. There's Galaxy Surfactants, Bombay Bumrah, Gujarat Fluorochem, and Cohen's Life Sciences, all down by about 2% each. So that's with regards to where some of these names are concerned. Even V-Mart is down by about 2%. So that's the whole and soul of where the broader end of spectrum is concerned here.
So interesting moves in markets today. In fact, let's get in Mahesh Oza, market expert as well. Mahesh, welcome to the show. Always a pleasure to speak to you at NDTV Profit. We've scaled that 26,000 mark in intraday trade already today. What are the factors, according to you, that will support markets from here on? And are you saying that this would be a good time to make investment bets as well?
Good afternoon here. So thanks for inviting me in this. I think still we are in a phase where market is going to bullish on each level. Until unless 25,600 level break on closing basis, I don't think any worry for a market for a longer term or a medium term horizon. I think US deal could be a great bull run for market, but yes, it will take time. So I think a lot of trigger in market, if you are looking for a earning are good for the company, Nifty 50 earning. So that is also positive. And if you are looking from a consumption projection, that is also good. So I think many trigger are for bullish for market. So I think any dip until unless any negative trigger come from geopolitics, that could be a part for market. But yes, overall, I think the market is bullish, and we can see in next 3 to 6 months more upward journey.
Right. So that's with regards to where the indexes are concerned. But shifting focus to life insurance space, SBI Life Insurance is in focus after posting better Q2 earnings versus its estimates. And Vansh joins us with more details as to what's causing that rally in the counter and how has exactly Q1 fared. Vansh?
Well, thank you for that, Mahima. So yeah, results have been better than the estimates in spite of a dip in the profitability. In fact, if we look at the annual premium equivalent, that is the AP, we have witnessed a double-digit growth out there. If we talk about the net premium income, we have seen the net premium income is up by 22% at 24,800 odd crores. Also, if we talk about the VNB, that is the value of new business, it has also witnessed a double-digit growth out there. Also, if we talk about the VNB margins, we have seen the VNB margins were better than the estimates, and this was led by the favorable product mix by the company. There has been a higher share of non-par products which has aided these VNB margins as well. Also, there has been a strong performance in the individual and group protection segments, and in fact, if we talk about the 13-month persistency ratio, it has also improved for the company. Now it stands at 85.37% versus 84.24% sequentially as well. If we talk about the numbers, what we have seen, the annual premium equivalent is up by 10% on a YOY basis. The value of new business is up by 14%, and the VNB margins are up by 100 basis points on a YOY basis as well. Lastly, if we talk about the outlook for FY26, now the company has guided they are expecting a APE growth of 13 to 14% for FY26. They are expecting to maintain that VNB margin guidance in the 26 to 28% range, and they are also expecting the GST changes. They have also guided that the GST changes has compressed their margins by about 80 basis points, and they are further expecting the product mix improvements to offset the GST impacts. In fact, if you look at the brokerages, now the Macquarie has maintained a neutral on the stock with a target price of 1,720 rupees. They believe that the VNB expectations and regulatory overhang will remain an important factor to watch out for. Citi has maintained a buy with a target price of 2550 versus 2500 earlier. And lastly, Benson has maintained an outperform with a target price of 2190. They believe that the muted growth and strong margins with a better outlook is what they are liking on this particular stock as well.
Okay, all right. So that's the overall view of how Q2 has fared for SBI Life. Mahesh, I'll quickly come to you on your view with regards to where SBI Life is concerned, and of course for the sector as a whole where life insurance companies are concerned.
See, the overall, if you're looking from a sector perspective, I think the sector is poised for a longer term growth, and day by day, people of India is doing insurance. So we are not any negative for insurance sector. If you're looking from a SBI Life perspective, I think 2,200, 2,250 level could become in medium to longer term. So we are positive on SBI Life, as well as if you're looking from a HDFC Life, that is also a counter where we are looking for a positive strength. So though both counter are relatively strong compared to other, so I think still some upside is left in SBI Life.
Okay, so that's with regards to SBI Life. In fact, that's the stock which is seeing gains of 3.5%, whereas you have a HDFC Life, which is at the day's lowest level. So moving on. Kotak Mahindra Bank announced its quarterly numbers. Now, what's happened is, in terms of brokerages, there are some bit of positive views coming in there. There are factors which are not working, and hence that stock is down nearly over 1%. Vansh joins it with all the key details. Vansh, what are the details in terms of what's not worked for the Kotak Mahindra Bank? 2, few of the positives that one needs to watch out for. And 3, what brokerages make out of it?
Well, yeah, thank you for that, Hiral. So firstly, let me start off what's not working with Kotak Bank. Now, it's the higher provisions that has led to the profit growth being hurt. And in fact, if we talk about the microfinance, now the microfinance continues to see losses. We have seen a loan book contraction out there. Management has guided that the microfinance has peaked out in Q1, and it's expected to be better from Q3 onwards as well. If we talk about the credit card book, we have seen that it has fallen 14% on a YY basis. In terms of unsecured loan, it constitutes 9.2% of the book compared to 9.7% in June. And lastly, analysts see limited re-rating upside for this particular stock as well. If we talk about some of the positives for this stock, what we are seeing is the asset quality has improved sharply. If we talk about the gross NPAs and net NPAs, we have seen the gross NPAs and NPAs have inched down sequentially. Also, if we talk about the slippages have been lower, and higher recoveries has aided the improvement for this counter. Strong advances growth across portfolios, CASA improvement helped cost management. Also, if we talk about the cost of funds, it has reduced amid deposit rate cuts among categories as well. Also, if you talk about the cost of saving account deposit, it stands at 2.89% versus 3.32% sequentially. Again, a positive standing out for Kotak Bank. Lastly, if we talk about the NIMs, we have seen a contraction in NIMs. Now, this is on the back of the decline in yields and the change in the asset mix as well. Also, if we talk about the outlook, now the outlook for Kotak Bank stands positive. The repricing of deposits will reduce cost of funds in second half of FY26. They are also expecting the NIMs to expand over the next 2 quarters, and the credit cost they have guided that it's expected to be better in the second half of FY26. Also, if we talk about the microfinance, is expected to do well in coming quarters. They are expecting personal loans to see significant reduction in credit cost. And lastly, in terms of the retail commercial vehicle, the business is likely to witness continued stress as per the management commentary as well. If we look at the brokerages now, Morgan Stanley has gone ahead and maintained an overweight with a target price of 2600 on the stock. They believe that the NIM is the only catalyst that is left, and they expect a re-rating in the next quarter as well. Lastly, if we talk about the Investec, they have also maintained a hold rating on the stock with a target price of 2,335. They believe that the Q2 performance was in line, and they expect, and what they are seeing is the elevated valuation that is limiting the upside for Kotak Mahindra Bank as well.
Okay, thank you so much for that. In fact, post the earnings announcement, Kotak Mahindra Bank's management held a press conference stating that the bank's credit cost has come down to 79 basis points, in line with their expectations. They added that both credit cost and the microfinance book are expected to see further normalization going forward. Let's quickly listen in.
On asset quality and risk metrics, GNPA and NPA remain stable. Credit costs have come down from 93 basis points to 79 basis points, in line with our expectations. As indicated last quarter, personal loan credit costs have normalized, and we now expect a downward trajectory for both MFI and credit cards. We do remain cautious on retail CV stress. Overall, we expect our credit costs to now gradually moderate in second half of the financial year.
Okay, so that's with regards to Kotak Bank. Mahesh, how are you looking at a Kotak Mahindra Bank and seeing the way other bank earnings have come in from a HDFC Bank to a ICICI Bank, all your private sector banks? What is the trend that you're looking at and what would you advise investors to do? Because good strength coming in on Bank Nifty as well today.
See, from Kotak Mahindra perspective, I think next 2 quarter will be watchable. I think next 2 quarter could be improved. Number can come from Kotak side. I think 2,400 should be a level for medium to longer term horizon. If you're looking from a 6 to 9 month horizon, that could be ideally target for Kotak. But yes, if you're looking from other bank, I think ICICI is well placed. SBI looking attractive from these level also. I think SBI can do well from these level. I think 1,000 plus level we can see in near term as well. From HDFC perspective, I think the this time number is very good. So I think HDFC is also looking good. So from banking perspective, large cap still looking attractive. SBI looking more attractive. PSP looking more attractive to me.
Right, so that's with regards to where some of these banking names are concerned. But a slew of counters are in focus on the back of their earnings, of course. There's eClerx Services, SBI Cards, as well as Supreme Petrochem. All of these are buzzing on the back of Q2 numbers. My colleague Sharad joins us with more details as to how Q2 has fared for all of these counters. Sharad?
Well, for SBI Cards, it's of course a weaker set of numbers coming in. Stock also taking a beating, almost 2.5% down. But if you look at the numbers, net interest income decent, it's up 15%, net profit up 10%. But if you go into the details, that's where the margins are there, which is impacted, and higher operational expenses are there. And that is why we are seeing operational numbers going below the street estimates. Now, the company itself expecting cost of funds to remain stable, and lastly they have stated that the revolver mix that will remain sticky in the near term. It's an operational parameter which we look for in insurance companies, and that is also, you could say, on a neutral to negative footing. eClerx Services, good set of numbers, revenue up 7.5% throughout the day's trade. We looked at this stock, it was one of the top gainers in the Nifty 500 index, and now also it's trading more than 6% up. Margins have significantly jumped up, almost 23 odd percent, and the cash flow generation, that is something which the street is cheering, because strong cash flow generation numbers have come. Company also announced a share buyback, and that will be roughly a 300 crore share buyback, priced at 4,500 rupees per share. So that also comes in at a decent level of discount as well. And interestingly, promoters will not be participating in this buyback. Supreme Petro Q2 earnings, if you look at it, the numbers, that's down almost 27% year-on-year basis. EBITDA also we saw a downtick, and overall weak set of earnings coming in, and management in their investor presentation, they did state that extended and heavy monsoons impacted the overall demand for cooling devices, and destocking by processors. Some global supply chain issues also aided in the fall of styrene monomer and polystyrene prices. These are the raw material prices, to simplify for you, and overall net led both volumes and margins all were impacted. So you could say there is a mixed set of numbers coming in the broader end of the market.
Thanks for that, Sharad. In fact, Sharad, stay with us. I'm going to come back to you with one of the profit intelligence pieces that we did on Friday. But before that, Mahesh, any view with regards to where the three counters, SBI Cards, eClerx and Supreme Petro go, all the three reacting to numbers, what would you have to say on these three?
I think eClerx looking attractive to me from technical perspective. I think eClerx is going to 5,000, 5,200 plus. But from these level, I think any cool down nearby 4,500, 4,550 can be ideally opportunity for accumulation. From a longer term perspective, I think still some steam left in eClerx. So we are optimistic some more upside from eClerx side. From SBI card perspective, I think any downside nearby 840 to 860, then that would be ideally good range for accumulation. And next 2 quarter can be a improved number could come from SBI card also. So I think any dip in SBI card, that could be also adding opportunity. From Supreme Petro perspective, I think we have to wait and watch.
Okay, so that's what we're looking at in terms of the three stocks which have reported numbers. I'm going to go back to Sharad. Sharad, Gujarat Fluoro, SRF, Naveen Flora, and all of these counters, let's just pull up the charts, and you are seeing a reaction that's coming in today's session, and this is under pressure. What was the key reason? Because Friday is something which you did pick up, wherein China's R22 refrigerant gas market prices are down by almost 40% in the month of October, month on month. Is that what is creating this kind of pressure today as well?
Well, there are two reasons for it. First one, in our profit intelligence on Friday, October 24th, we had actually found this important channel check which we had got ahead of the street, and we had stated it earlier. Because of the raw material prices, the refrigerant gas prices, they are on the downtick, and the destocking is happening. And of course, some broking notes also came today itself. Today is SRF's number as well, so the stock would be volatile in the day's trade, and that or profit booking also we are seeing in certain quarters. These are intentionally, you could say, a very short-term trade kind of a moves which we have seen. Of course, technically these moves will be very volatile. Navin Fluorine also, you see, it's at the day's end of the trade, but of course street is expecting there might be a profit beat here. So these stocks will be very volatile. Companies' commentary will be very important, especially the guidance front. Are they actually feeling the heat of the important prices movements which are happening, or destocking issues which are there? And remember, these stocks have run up already from their from the lifetime high. So there is a small correction from the top as well. So we can see some technical moves in these counters.
Thank you for that, Sharad. Very quickly, Mahesh, any view on any of these chemical players? Because you have R22 refrigerant gas market prices which are down nearly 40% in October. The impact they're saying is expected to come in from the third quarter of FY26. What would you advise investors to do who are holding these counters? Or would you say there is limited downside risk now, and probably this could be a time to collect?
Yes, definitely. I think it's time to accumulate in any lower from these level. I think because already 40% down we have seen. Now we have to wait and watch for some stabilization in stocks. After that, what we can accumulate in a slower pace from these prospects. I think Gujarat Fluoro can be accumulated if any downside from these levels. That could be ideally 3,200 to 3,400 range. That could be ideally good range for accumulation from a medium to longer term perspective. From SRF perspective, I think any downside nearby 2,850, 2,900 can be ideally a good opportunity. But from these level, I think wait and watch. We have to wait and watch for some more days. I think 5 to 7 days after that, any stabilization, then we can look on the same.
All right. Okay. So that's the view with regards to where some of these chemical names are concerned. But, moving on, like I mentioned, there are a slew of earnings that have, already come, and the earnings season is running through thick and fast. And there are more earnings to keep your eye out on. And Jasmeet joins us to give us more details on Latent, Coforge as well as Zentech. Jasmeet?
Well, Ray, thank you for that. Starting off with Latent Technologies, a mixed set of numbers. Though this was 11th consecutive quarter where the margin saw an uptick and revenues nearly up 9% in this particular quarter. And the financial service sector, which drew the overall growth, it's nearly up 30% in this particular quarter. While companies saw a huge amount of deal wins and closure of a lot of deal ramp-ups in terms of retail and CPG segments as well. While in terms of the recent acquisition, management noticed that the Decision Point acquisition is adding a lot of synergies in terms of retail and CPG sector. If you look at the numbers, revenues have a 9% while the margins have expanded by 50 basis points. Starting off, the next one is Coforge. If you look at the key numbers, they are a good set of numbers by the company. Talking about the key takeaways from the result, the numbers are in line with the estimate, and the growth was led by the travel segment. Now, in terms of the CC growth, it stands at 5.9% versus 8% in the previous quarter. Now, deal wins stood flattish in this particular quarter at 514 million versus the same of in the Q1. Now, in terms of the large deal wins, the company has signed 5 large deal wins in this particular quarter, and the deal wins signed in H1 is greater than what they have signed in the complete of FY25. So we see a lot of deal ramping up for the particular company. Now, in terms of headcount, company has added 700 odd employees. If we look at the overall margin, has expanded by 273 basis points, and net profit is up by 18 odd %. Lastly, we have Zentech Technologies. We see that the company is noticing a lot of slowdown in terms of deal ramp up and product closures. We see that revenue has declined for second consecutive quarters. Now, in terms of the other guidelines given by the management, is they see a ramp up of the regular vendors happening, but on a slower phase. Now, in terms of margins, they have expanded for this particular quarter. This was on the back of lower utilization and the lower costs that management faced because of lower order inflows. Now, in terms of R&D expenses, we see a downtick in this particular quarter. Now, in terms of number, revenue is down by 28 odd %, but we see the profit to be down by 4.6%, and margins have expanded by 420 basis points.
Okay, Jasmeet, thank you so much for bringing us those details. In fact, we spoke to the management of Zentech as well as Coforge about their growth outlook going forward. Listen to what the management had to say.
We have really excelled not only in soft kill, but remote control weapon station from our partner, our subsidiary AI Turing, the system itself from UTS. All this converged, and we can see the pride not only in Zen Technologies but even in the armed forces that Zen has actually delivering products that are absolutely world class. So to your question, that it is absolutely just delay, procedural delay, nothing, and we don't feel any sense that there is going to be any change. I think the growth is expected to be as strong as ever, and I have been talking about on a cumulative that we'll be hitting 6,000 crores. That still I think that still holds very, very strongly in my mind that the next 2 years, this year may be muted, but next 2 years are going to be very strong.
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
All right, so you heard from the management, but let's also hear from Mahesh Ojha as to what he thinks about these earnings. Mahesh, Zentech, Coforge, what is your reading with regards to where all of these stand? Zentech especially because this is the second quarter where earnings have been disappointing. And if an investor is stuck in one of these counters, what he or she should do?
I think from Zentech perspective, we are neutral view. We have not earlier. We have also not recommended Zentech. But if you're looking from a longer term perspective, I think one should, if anyone having, then they can wait further for a upper side. But yes, I think from these level, I think so. One should, if anyone to fresh investment, then they have to wait and watch for further. So I think after improved number from 1 to 2 quarter after that, but we can re-rate further for Zentech. From Coforge perspective, I think it's a very good number, and I think outlook is very positive. In near term, I think we can see 2,000 plus level, and after that, but we can review quarter on quarter result. I think the 2,200 plus level could be come in 1 year horizon. But yes, from sector perspective, we have to wait their quarter result and further any updates. So from Coforge perspective, we are positive. Zentech, our view is neutral.
Okay, so that's with regards to Zentech and Coforge as well. But moving on to an NDTV Profit exclusive, construction giant L&T is set to sign a deal with Maersk for shipbuilding and repair works in India. My colleague Agni Dev joins us with all the exclusive details that he has been picking up so far. Agni, what do you have for us? Then let's see what the stock is doing in trade as well.
Larsen & Toubro is set to sign an MOU with Maersk about shipbuilding and ship repairing here in India. Now, while the financials are very fluid in nature right now because it will be a non-binding agreement, L&T expects an inflow of around $400 million over the few years that it takes to build container ships for Maersk and to repair existing ships for Maersk. Now, sources have been also telling us that the ships will be repaired and built out of their Tamil Nadu plant, and the MOU can be expected to be signed anytime in the coming week. So this is a developing story. We have reached out to L&T for their comments, so do stay tuned for more updates.
Okay, so thank you, Agni, for that. In fact, Mahesh, what would you make of this deal that L&T is looking to sign? I know it's an exclusive. It is a source-based story, but if this happens, what would you advise investors to do with an L&T, and what's the kind of impact you're seeing in terms of business?
I think it's a positive impact, but if you're looking from L&T perspective, in last 1 month, we have seen many positive news for L&T. If you're any one investor and holding from a 1 year perspective, I think they can hold. We can see 4,700, 4,800 easily in 1 year horizon. After that, we can review further. From current perspective, we are very positive on Larsen.
Okay, so that's with regards to where some of these names are concerned. But with that, it's time to slip into a very short break. But viewers will be right back on the other side, so do stay tuned.
the NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller citizen towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
You're watching Profit Buzzers here at NDTV Profit. Now, we've been discussing about the Vodafone Idea AGR dues saga, and we've been tracking the story very closely. And on to the latest update, the CJI has said that the matter has been now adjourned and the government is willing to hear Vodafone Idea's view. Danish Anand joins us with more details as to what's the update.
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores. And considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who is representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees, so for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw HG Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mughal Rohatgi, who was representing Vodafone Idea, he agreed to this offer and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
Thanks, Danish, for that. You know, it's a good relief coming in there. And finally, you're seeing Vodafone, which has actually hit a 10 rupee mark. Mahima, so I think traders are really happy when it comes to Vodafone.
For sure.
And you have an Indus Tower, which is really seeing some good gains in today's session as well. Because the moment they get a relief, Indus Towers does become a key beneficiary as well. And the stock seeing gains of 4%.
Absolutely. And I think a lot of retail investors have their money, probably stuck in Vodafone Idea.
Retailer's favorite is Vodafone Idea, and crossing 10 rupees is very...
Is a big
and I think we should get in Somit also to add one bit of his view on this one as soon as he comes down. But clearly a strong move coming in on both these counters.
All right, let's in fact get in our expert view as well. We are also joined by Amit Bhuptani, who's the TNE research analyst at Nirmal Bang Securities, joining us now. First I'll take this up with Mahesh quickly. Mahesh, this update that has come in, of course, is a big relief for Vodafone Idea, and that's implied for Indus Towers as well. How are you reading this, and what's the way forward? How would you as an investor look at the counter?
Impact is positive as we have all seen, but government need to take balance act on the same. So we have to wait and watch for government action because they have also Bharti Airtel AGR dues. And so what their action would be, I think a balance act need to come on these levels. So government action will be watchable. But yes, from current perspective, it's a positive relief for Idea as well as Birla Group.
Okay, all right. In fact, Hira was talking about Somit, and he tracks this very closely, and he was just saying that retail favorite is Vodafone Idea and HNI favorite is Indus Towers. So what's the reading out there?
Well, yes, that has been the case always. Both the stocks are tradable, and that's what we indicated on Friday also on our segment, that there are positional buy calls that have been taken on both these counters on the back of this announcement. And if you look at the share price movement from Vodafone Idea, it was up 10%, but right now it's up just 2-3 odd percent at this moment. So most of the gains or most of the positions that were already built into Vodafone Idea have been taken out, and that's the reason we are seeing this kind of a downtick in Vodafone Idea from the day's highest point. But also do remember that this benefit that Vodafone Idea might get is not on the entire AGR amount, it's just in the part of the AGR amount. So the actual benefit of that won't be much big coming into for Vodafone Idea. So it is a positive a positive news that has come in for the company, but the financial benefit of the same will not be that big as what the street is expecting at this moment.
And any number crunching that you've done so far as to what could be the overall financial benefit to a Vodafone Idea? If I remember correctly, I think 400 to 500 odd crores
yes, on an
was
annual
the number
basis.
on an
Around
annual basis is what you had
yeah,
indicated,
exactly.
right?
That is, by that much amount, their annual payout would go down. That's the only financial benefit at this point of time what we're understanding could happen to Vodafone Idea.
I think it's more of a sentimental overhang also which goes away, and that's the reason
Indus
why.
Towers is definitely positive.
Positive, absolutely. So that's the view. In fact, Amit Bhuptani, traders' favorite is Vodafone Idea, FI favorite, HNI favorite, I would say, is the Indus Tower. Do charts also support the move today in today's session?
Definitely, if you look at the overall setup, Hiral, from last 1 year, we are continuously seeing that Idea is trading continuously in the range of 6.5 to 10 levels, and 3 times it has given a top out at 10.6 level. So triple top has been created at 10.6 level, and today's session also we are seeing that from that level only the liquidation is being witnessed. So once if counter again goes about 10.6 level on the stable basis or on the closing basis, then we will expect the fresh momentum to be continued towards 13.5, 14 levels. So currently setup seems to be in a positive front. Whomsoever is holding this long position should place the trailing stop loss at 8.7, and new long positions can be created with the support of 8.7. Only the major perspective which we are witnessing right now is a breakout about 10.7 level. Above that, we will witness a strong buying momentum in this counter.
Okay, so that's an interesting view coming in there. Now, 2 segments that we want to talk about right now is Reliance Industries with the kind of strong moves that the stock is seeing in trade today, and this is on the back of the Meta deal. And apart from Reliance Industries, you have OMCs also, which are buzzing in trade today. But let's start with the Reliance Industries, which is one of the biggies, Amit. Strong moves, little over 2%, and that's what is supporting the markets as well to some extent. What is working, and how big a positive is this?
So there are a couple of announcements for Reliance. In fact, one announcement and one news that has come in for Reliance Industries. The news part is the fact that the Singapore gross refining margin, which is the Asian benchmark, that has jumped to around $8.5 per barrel. 10 days back, this number was at just around $0.4 per barrel, and this move definitely benefits the O2C segment of Reliance Industries in a big way. On a consolidated basis, every $1 per barrel rise in the gross refining margin increases Reliance Industries' consolidated EBITDA by around 2 to 2.5%. So that's one positive announcement, positive news. And the announcement is the fact that Reliance Industries, what they had said in the annual general meeting, they have reiterated that, and they have formed a joint venture. In fact, they have formed Reliance Enterprise Intelligence Limited. This is a joint venture with Facebook, where Facebook will own close to 30% stake, while Reliance Industries through its subsidiary will own close to 70% stake. And in this joint venture, they will invest close to around 97 to 100 million US dollars, and the amount will be used or will be used to develop and commercialize enterprise AI solution, is what the management has said. Meta will bring its advanced AI research infrastructure and Llama models to support this effort. And Morgan Stanley actually came out with a note where they are saying that they estimate that Reliance Industries will spend close to 12 to 15 billion US dollars into this AI infrastructure and develop a 1 gigawatt of data center. And this will also help the company towards the new energy plan, because 25% of the new energy that will be generated will be used towards this data center. So that's another positive. They're expecting an ROC of around 11% to be generated from this AI plant, and they believe that going forward, Street would value this AI arm at 2 times the price to book. Obviously, right this moment, it is just initial capital that has been come in, but going forward, when more and more projects come in, or there's a valuation that has been derived, around 2 times price to book is the valuation that Street might give to this AI arm of Reliance Industries, which is with a joint venture with Facebook.
Okay, this is going to be interesting over here. In fact, when you talk about Reliance Industries as well, after the earnings, the question was, what's the kind of upside that one should be watching out for from here on? Amit, first up, what are the charts indicating? A 2% up move today. Is it a good buy still at 1,480? Or would you wait for some bit of a correction to come in to look at the technical side of it?
If you look at the setup seems to be on the positive front. Many patterns have been created on the daily chart, monthly chart. Overall, if you look at the setup on the daily chart, flag pattern formation has been created, and on the monthly chart, downward trend line. And with that, we are seeing that inverse head and shoulder pattern is also being created. Currently, as per the data structure and as per the pattern, we are seeing that 1490 is the initial resistance for this counter. Once it goes above 1490 level, then around 100 to 150 points more momentum gain will get open for the upside level. So currently, if any dips are coming, you can add on the position, and at this point of time also, rate is not wrong at this point of time to add the positions. The counter is looking very much strong.
All right, sticking with the OMC's theme, in fact, Singapore gross refining margins have also surged to that $8.6 per barrel in the last 10 days. And Somit was also indicating that in his previous link as well. But what does this actually mean, Somit, for other OMCs as well?
Well, as Reliance Industries benefits, other oil refiners like oil marketing companies and Chennai Petro and MRPL also stand to benefit out of this. Now, why Singapore gross refining margins have surged in the last 10 days from $0.4 to $8.6 per barrel? Firstly, it's because of the sanctions that have been put on Russia, which will limit the exports of final products into the market. Apart from that, Ukraine strikes on Russia has also impacted some of the exports that Russia used to do. And along with this, lastly, the planned capacity shutdowns that has also led to a shortage in the market of products, and that has been aiding the product cracks at this moment. And that's the reason Singapore gross refining margin have surged so significantly in the last 10 trading sessions. Not in fact trading sessions, 10 sessions. Now, what does this do? It benefits Indian Oil Corporation, BPCL, HPCL, MRPL and Chennai Petro as well. And every $1 per barrel rise in the Singapore gross refining margin or the gross refining margin for individual oil refiners, for Chennai Petro and MRPL, their EBITDA increases by around 24 to 26%, and for IOCL, BPCL and HPCL, their EBITDA increases anywhere between 8 to 11%. But apart from that, it's Chennai Petro which has also come out with their Q2 numbers, which were quite strong ahead of what the street was estimating. EBITDA at 1100 crore rupees as against 730 crore estimated. Average gross refining margin at $9.1 compared to what Singapore gross refining margin was on an average in the second quarter at around $4.1. The debt to equity has also come down, which is again positive. And what does this do is that this also confirms the fact that oil marketing companies, which will also be reporting their numbers, in fact IOCL will be reporting numbers today, could also go ahead and report a strong beat compared to what the street estimates were. And that's the reason why all the oil marketing companies are gaining in trade.
All right. Okay. So that's the reason as to what's causing the rallies in those oil marketing companies. Amit, I'll quickly come to you on, these names. Any of these that you think where momentum is there to stay and probably a fresh entry or fresh buying can be made?
Fresh knock can be initiated in BPCL. On the weekly chart, we are seeing a pendant formation is getting broken out in this counter. So we are expecting around 370, 380 levels can be expected in the BPCL. And Chennai Petro is also looking positive from upside level. We are seeing some consolidation, some liquidation is taking place. But once again, Chennai Petro goes above 804 level, then the confirmation will come for this counter to reach towards 850, 860 levels.
Okay, all right. So that's the view with regards to oil marketing companies. But let's shift focus and focus on the auto space. Ola Electric Board of Directors have approved a proposal to raise funds up to 1,500 crore rupees. The company is considering to raise the amount by issuing equity shares or convertible securities. To give more details on this fundraise, we are joined by Puneet now. Puneet, why do you think is the reason as to why they are raising this hefty a fund of around 1,500 crores?
Well, definitely, and that is the key concern, right? Because the company had mentioned just in the last quarter that they don't actually need funds given the current capex for both the auto vertical as well as the cell one as well. But very interestingly, they've just approved the proposal right now of 1,500 crore fundraise. They've not yet issued how this fundraise could happen, but all eyes are set of largely this being an equity fundraise. The other key aspect, just assuming at the current valuation of between 50 to 52 rupees per share, the dilution could be roughly about 6.4%, given the 1,500 crore amount that is already known to the market. So that'll be something, the other key aspect to watch out for. But again, the key question is why the fundraise as well. One possible reason could be that the company currently holds a gross debt of about 2,000 crores, and at the end of Q1 they did give out a 5-year plan of when the obligations are due. So that could be one key reason. But they do maintain a decent enough cash balance of 3,200 crores. So actually, in terms of the capex, that's the other key part. They had mentioned at the end of the last quarter that auto capex will be roughly 300 crores, while the cell capex will be roughly of about 1,000 crores, and almost 70% of that will be financed through a term loan which they have already secured. So the puzzling aspect is what will be the use of this fundraise. When you also look at what Bhavesh Agarwal said at the key at the end of Q1 was precisely this, that there is already a lot of cash that the company holds, and in terms of 3,196 crore, and they don't expect more to be needed for operating needs. So this possibly could be for the battery energy storage system space as well, could be another possible reason. But very interestingly, the Q2 result is going to be a lackluster result to say the least. Almost a 47% year-on-year dip is what's expected in the company's revenue for Q2. So that'll be the other key aspect to watch, because they had mentioned that starting Q2, the auto business will be EBITDA break-even. So that'll be the key update we'll be watching out for. But Goldman Sachs is estimating a weak Q2 earnings for the company. And with the market share under threat now sub 15% for the month of October, that'll be the other key questions that the management will have to answer for.
Thank you for that, Puneet. Puneet, one more aspect that we need to look over here is in terms of the pricing. Mahesh, how are you looking at it? Why is the stock trading under pressure with cuts of over 3%? Because here we're talking of a fundraise that is happening via a QIP. I would say the IPO price was around, say, 75, 76. Fundraise, even if it happens at par to the current market price, you're talking of levels of around 50. Is that a concern that the market is sensing right now?
They are losing markets here, and as well as they are facing some FIR related to employee. So that is maybe the reason of some downside pressure. And if you're looking from a fund raising perspective, I think this is a longer term positive perspective. So market is looking from a market share perspective. So that they are losing some market share. The market is very concerned for this.
All right. So that's the view with regards to where Ola Electric is concerned. But this week too is going to focus on a lot of IPOs, a lot of buzz in the primary markets, with of course the biggest one coming in as Lenskart. Overall, to give viewers a perspective of the IPO details, it has a fresh issue of around 2,150 odd crores. The price band is set between 382 to 402. The minimum bid size, of course, is 37 shares, and it starts on 31st of October and ends on 4th of November. There's also an offer for sale for around 12.75 crore equity shares. Just to give viewers, of course, everybody knows the brand of Lenskart, but of course it's an eyewear retailer which is technologically focused. FY25 had around 2,700 odd stores, of which 2,067 odd stores were in India itself. International business is very strong for them because it accounted for almost 40% of their revenue in FY25 versus only 25% being in terms of where store contribution stands. They sell prescription eyeglasses, which is almost 80% of their total revenue, sunglasses, contact lenses, as well as accessories where eyewear is concerned. And the best part is that they control the entire value chain from design to manufacturing and to delivery, and of course the retail as well. So the entire value chain is managed by the company. Now marquee investors like SoftBank, ADIA, Tamsec, Elara Capital, as well as per a recent PTI copy, Radhakishan Damani has also invested just before the IPO, around 90 odd crores is what he has invested. With regards to where the financials are concerned, revenue has seen a growth CAGR of around 33 odd % in the past 3 odd years. Overall, EBITDA has tripled for the counter in the last 3 years. Margins have also improved to 14.6%, and the company has turned profitable in FY25 at around 295 odd crores. With regards to where use of proceeds is concerned, 272 crores will go for capex, 591 crores will go for lease, rent and license payments, around 213 crore will be investment for technology, and 320 crores for marketing and promotion. So that's with regards to where Lenskart stands. Of course, valuation has always been a concern around these new companies that we've been talking about, and valuations are not cheap for something like a Lenskart as well.
The question, Mahima, is going to be, are there going to be takers of a Lenskart? Because valuations, now people are realizing that as soon as the valuations are expensive at the time of an IPO, usually you will see that happening where the subscription is either low or you'll see only listing day gains. That's about it. So what happens here is anyone's guess, and it's going to be interesting to see. In fact, NDTV Profit's managing editor Tamanna Inamdar spoke to Piyush Bansal ahead of the IPO. You can catch the full conversation with Piyush Bansal at 2 p.m. only on NDTV Profit. So that's with regards to Lenskart. But a very quick view from Mahesh Ojha. Mahesh, would you be a subscriber of a Lenskart, taking into consideration what's happening in and around valuations? Because that is what people are unhappy with right now.
Definitely, valuations are high, but if you're looking from an innovation perspective, Lenskart is doing very good. So, and they have turned profitable before the just IPO. That is also a concern. But yes, if you're looking from a longer term perspective, if you're looking from a 3 to 5 year horizon, then one can apply easily. But if you are a very short term investor, then we have to wait and watch for listing. After listing, we have to take decision. But yes, from longer term perspective, anyone can do in the same.
Okay, all right. So that's the view with regards to where Lenskart Solutions is concerned. But moving on, India's maritime ambitions are setting sail in a big way. Policymakers, global investors and industry leaders have gathered for India Maritime Week 2025, and my colleague Agnidev caught up with Sanju John, the head of marketing of maritime equipment systems at L&T Precision Engineering, on their Navy portfolio. Take a look.
Hello and welcome. You're watching NDTV Profit. We are here at India Maritime Week 2025 and we are here at L&T stall. Now when you think L&T, you think they construct things for India. But what exactly do they construct? Well, a slice of that is here in front of you. And to explain that, we are joined by Mr. Sanju John, who heads marketing for the marine equipment and systems for L&T Precision Tech. Mr. Sanju, thank you so much for joining us. So without further ado, can you take us through what this hunk of a model here is?
Yeah, so good morning. What you see is the platform support vessel. Which the L&T has designed and manufactured. So this is a ship which has got dynamic positioning, which is very important when you deal with rough seas, and it has also got hybrid propulsion. So we also manufacture various other types of ships for the Indian Navy, for the Coast Guard, and also for various other entities who want ship, and that is for the commercial purposes. So we also do the refits for foreign naval ships. And apart from shipbuilding, we also have various equipments like the unmanned systems, which are used for various mission critical operations. And we also are the only ones in the country who has the indigenous water jet propulsion system, which we have designed, realized and also handed over to the customer. Apart from that, we have various other equipments that we manufacture, like the propulsion shafting systems, the launchers, and also various other systems that are required on the strategic platform.
Right. So on the strategic front, what we saw was something called AMOG. Yeah. Now, looks very interesting. So can you quickly take us through what AMOG does?
So AMOG is an equipment that is used in order to take up operations underwater without any human intervention. So this is an uncrewed autonomous system which we have manufactured and which is ready for the customer to use. So this has the capability to be fitted with any type of sensors depending on the role that this particular equipment has to undertake.
And Sanju, quickly, my last question to you. You're here at India Maritime Week 2025. What does L&T hope to display here and, be part of the global maritime story?
See, we are one of the largest defense players. So we want to collaborate. What we want to showcase is the technical prowess that the company has. And we are open to collaborate with people in order to give the best tech for this country.
Okay, that's an interesting conversation that Agni is having with L&T Tech's management, clearly talking about the business outlook that they have when it comes to the maritime side of it. But thank you, gentlemen, Amit as well as Mahesh, for joining us on the show and sharing your views. Completely out of time, but that it's a wrap on this edition of Profit Buzzers from Mahima, the team that put the show together, and myself. Please stay tuned to NDTV Profit. Lots more lined up on the other side.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई. In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, if you look at the markets, the Nifty 50 after one day's blip has started its upward momentum yet again. For a brief period, we were also above the 26,000 level. When it comes to the Nifty Bank Index, that's up more than 350 points. And when you look at the sectoral indices, other than Nifty Pharma and Nifty Media, all the other sectoral indices have been trading in green, Anushi.
Right, so that's as far as where, the benchmark indices are concerned. We're looking at a 0.6% of an uptick in terms of Nifty Bank. In fact, for the sectoral index also, if we look at Nifty Realty right at the top, we're looking at gains of over 1.5% for the index. Even Nifty PSU banks not lagging so far. We're looking at a 1.4% of an uptick there as well. Well, what's not doing so well in this is Nifty Media, seeing about a 0.6% of a downtick along with Nifty Pharma as well. But apart from that, if we just take stock of what's happening with the broader markets, let's pull up the advanced decline ratio over there. And we are looking almost at 1:1 of a ratio is what we are seeing converging in that final half an hour of traders. What we are looking at about 1260 advances in favor of about 1100 declines or odds. So in terms of how the broader markets are doing with the Nifty mid cap 150 mirroring some bit of those moves in line with benchmark indices, 0.6% of an uptick is what we are looking at for mid cap 150, while for small cap 250 if we see, we're looking at a 0.5% of an uptick. But let's talk about stocks which are in focus. If you just pull out the small cap top 50 gainers, we have first Source Solutions right at the top. We're looking at an 8% of an up move over here. Eclog Solutions as well, we are looking at a 6% of gains, and HBL Engineering again back in action, seeing about a 6% of an uptick there as well. Well, what's not working out so well is a Zentech, and this is on the back of its second quarter results also that we are looking at. Now for the order inflows, it's a 6th consecutive quarter wherein the orders have been on the muted side. It's above a 600 crore plus of a figure that we are looking at, but delays have continued to affect the top line of the business as well. Along with that, we also have Ola Electric in focus, 3% of a downtick there as well, along with Jindal. So if you just talk about a couple of stocks which are buzzing on account of higher volumes, GPT Infra is right at the top, seeing out 10% of an uptick right now. It's based on the 165 crore of an order win. Along with that, even Bharat Wire is locked in the upper circuit. 20% is the kind of up move that we are seeing. Along with that, PSP projects also seeing about a 16% of an uptick. In other couple of stocks which are in focus is Bharat Rasayan, and this is on the back of the bonus issue. 1:1 ratio is what we are looking at, along with the stock split announcement as well. So Bharat Rasayan in focus. Along with that, we are seeing some bit of that profit correction for Catex Garment as well. And Utkarsh Small Finance Bank also, we are looking some bit of pressure there as well. So these are a couple of stocks which are in focus in the broader markets. But let's talk about a management in particular. Fredune Pharma is in focus after the company launches Jane biscuits for its dogs. But to give more details on this and what the company is essentially doing, Varsha joins us with more details.
Thank you so much for that. Interesting things is happening when it comes to Fredune Pharma. So they are basically moving from an OEM to branded products, and by 2029 they have a target of their own branded products. That will also help for higher margins. They've recently launched a very interesting product that is Jen biscuits for dogs. Overall about this company, if I were to talk about, they are into pharma and allopathic formulations. They've also expanded into dietary and herbal supplements and nutraceuticals as well. Talking about the next growth triggers when it comes to Fredune Pharma, so they are building one of India's largest single location plants within the next 18 to 24 months. Pet care, nutraceuticals, mobility is expected to grow at almost 35 to 40% CAGR. Order book, as of now they have 200 crores of order book, which is provides a visibility of next 2 quarters supporting growth momentum. Onto the outlook, they do have a target of 800 crore plus of revenue and part of 90 crore in the next 3 to 4 years. And new age business is the next growth driver when it comes to Fredune Pharma. But to speak more about this and what are the growth opportunities when it comes to for next 3 to 4 years, I'm here joined by Mr. Fredun Medhora, who is the Managing Director at Fredune Pharma. Welcome, Mr. Medhora. Just, a very interesting product that you have launched is Jan biscuits for dogs. Correct me if I'm wrong, I think you would be the first company who will be launching this product. Just wanted to understand the overall market for this product. What is the revenue potential that you are targeting, and when this product would be, what's the geographical scale when it comes to this product?
Yeah, thank you. The product is actually a replacement. There are certain sects in our country and our communities who do not want to give non-veg food to the products, to the dogs, and they end up giving substandard products, and sometimes they are not very good for the animal. So we researched upon it, and we came up with products which are to the community principles, but also good for the animal. It is not a replacement for food. It is not a replacement for their daily diet. It is just that instead of giving a so-called veg product which is not good for the animals, you have a supplement which is actually beneficial, and we have got great response. In fact, it's going to be in the market by mid next month, or across various cities where the demand is required, such as Mumbai, Nagpur, Nasik, Bangalore, Hyderabad, Kolkata, and in fact, right now, the kind of demand that we have got, even just from Mumbai, we will be busy manufacturing it for the next couple of months non-stop.
Right, sir. I do understand in India, definitely there is a market for this product. But when it comes to export, is there an export market as well, is what I wanted to understand for this product specifically?
No, we don't intend to export this product. This product is categorically for India. There is no need. There are proper food supplements available in various countries where there are not such dietary restrictions in the households. So there is no need to export. In fact, the local market we anticipate will be substantial enough to support products like that. In fact, we are coming out with another range of products similar to this, which improves the immunity, which improves certain functional requirements for the animal, such as eyes, coats, furs, etc., which are through the requirements of the community, but at the same time good for the animal rather than giving a generic biscuit.
Lenskart is finally making its market debut with an IPO which will open this Friday for subscription and close on November 4th. The price band is 382 to 402 rupees per share, and this is a mix of an OFS as well as fresh capital. That means an exit for investors as well. Total issue size is 7,278 crores. Out of this, a fresh issue is 2,150 crores, while the offer for sale is 5,128 crores at the upper price band. Now, what is the vision of Lenskart? What is the strategy? And what is behind its massive growth? To speak on all of this, I'm joined by Piyush Bansal, CEO and co-founder of Lenskart. Piyush, thank you so much for your time to NDTV Profit. My first question, why are you raising money? You're a net cash positive company for the last 3 years.
See, we are still, as you know, we are expanding stores, Tamanna, and firstly, thanks for taking our time. But yeah, we are expanding stores. We have to still, we are very early in our journey in India. If you understand, I know it may seem like that we have 2,000 stores, but if you look at the size of the problem and what we have achieved so far, we only have single-digit market share right now. And I think the problem of myopia is really growing in the world, in India and Southeast Asia. We today have about 750 million plus people in India who need glasses. Only about 35% of them are wearing glasses right now. But this good part is this number is getting better, and every year the adoption is increasing. And similarly in Southeast Asia, I would say the penetration is only about 35%. Myopia rates in adults in India right now has risen to about 70%. In Southeast Asia, it's gone up to 80-83%. So from, if you look at that size of the problem, we are still very early in our journey. We are still going to open a lot of stores both in India and internationally. We need to continue to build the brand in India. We need to continue to build the brand internationally. So I think I would say we are still early in the journey. I know we are generating cash flows, but we have a lot of investments coming up.
So then is the purpose to give an exit to some of your investors, and you have some storied investors, some very big names, Piyush?
Not really. If you look at it, none of our investors are really exiting. In fact, to get this IPO done, we had to do kind of a pro rata distribution for our investors. In fact, a lot of our early investors, you'll see, are quite eager to participate in the IPO again. So it's not really an exit IPO for anybody.
Yeah. In fact, there are new names coming in. One of them is Radhakrishnan Damani. Now, what an endorsement that is, Piyush. Any reaction to that?
Me and my co-founder Amit, we have had such a huge respect for Mr. Damani. I mean, we have grown up watching DMart stores, right? And you'll always find a Lenskart store near a DMart store. I'm telling you that little secret. And we have stood in that DMart store from morning to evening. And, when we met him just as an admirer, not necessarily to raise any money or request him to be part of the IPO, but the conversation hit off really well. And I think, and it was an honor that Mr. Damani decided to be part of our journey. That's all I can say. But yeah, I don't know if it is of prize validation or anything, but yeah, it's a huge honor for us, and there is so much to learn from him. I mean, he's definitely created. DMart is something that we always look up to.
Yeah, no, it's a validation for sure if Mr. Damani comes in and invests. Now, let me talk a bit about the growth of the company. You've seen revenue grow at a CAGR of 33%. You've turned profitable finally in 2025. Now, are these metrics sustainable in your view?
It's difficult to, I won't comment on the future projections, but yeah, I think, like I said, what's happening is that there is more awareness coming for eyewear right now. More and more people are getting up and getting their eyes tested. Kids who are going to school, I think there's a lot of awareness in the schools to get their kids' eye tested. So there's definitely that big gap in people who need glasses and wearing glasses, and that realization is kicking in. And also at Lenskart, eye tests are absolutely free, and we are working very hard to democratize that. About 2 years back, we used to do 6 million eye tests. Last year, we did 16 million eye tests. Right, and if for us to really make an impact, this number has to be in hundreds of millions. So I think if I look at it, I can't comment on the future growth, but I would say there is a lot to be done in this category still.
Yeah. But now that you're going to be a listed player, analysts will look very closely at things like margins. You have margins at 14.5%. Is this sustainable?
Margin, I think. Margin is a reflection of the value that we create for the customers, right? I think largely we have to keep getting better at our customer experience, and with scale coming into the picture, there should definitely be operating leverage that would kick in the business, just like in the last 3 years. But yes, I would still say there is a lot of work to be done here and a lot of value to be created. The category is getting very exciting now. It's getting its adoption for the first time. पहले तो खाली चश्मिश कहते थे लोग. अभी at least you see celebrities wearing glasses, you see youth adopting glasses. So I'm quite excited about the times ahead in terms of possibilities that we can do with eyewear. I mean, smart glasses is another big area which is just at the cusp of exploding.
Yeah, I like that. Chashmish is no longer a negative thing, says Piyush Bansal. Now, just talking a bit about the business a little more, Piyush, do you see the revenue mix changing going forward? I mean, 80% is still coming in from eyewear. You talked about fashion. Is that where you're heading to?
I think glasses are fashion, look at it, right? 70-80% of the world is becoming myopic, right? In an office today, 7 out of 10 people need glasses. So from a mixed perspective, I do see that more and more people are going to get glasses. Now, whether we want to wait, and glasses are as much fashion. I mean, I feel these glasses add a lot of fashion to me right now. So I think it's a mindset that we have been used to, where sunglasses are fashion and eyeglasses are not fashion. But as far as I can say about Lenskart customers and people who are buying, glasses are more fashion than what you can imagine, even sunglasses, because you wear this all throughout the day. So I think the growth is going to come in the prescription category.
Okay, so growth in the prescription category, also growth through international business. You're present in Japan, you're in Southeast Asia, you're in Middle East. Already revenue contribution from your international business is about 30%. Do you see this growing?
We expanded internationally largely because it is very core to our mission to democratize eyewear. And if you look at Southeast Asia, myopia rates are even higher than India, and the gap between what the solutions that are available in terms of quality, affordability, they are not today, I believe, there to match the demand. And even the same problem like in India, we have only about 35 opticians for 1 million people. So they need similar level of solution, and that's why we expanded. In terms of look, it's difficult to comment in the short term. I think if I look at, I usually like to see business in the long term, from 5 to 10 year journey. International is going to be a key part of our journey. I mean, we are not doing this as a trial right now. We are quite excited about revolutionizing eyewear, particularly in markets where myopia rates are very high, including Middle East, Southeast Asia, and Japan. How this mix will change, I think it will keep changing momentarily depending on which market we are accelerating first right now, which market right now is going through, some fundamentals in terms of setting up supply chain. But largely, I would say international is going to be a core part. I mean, we are trying to build a global brand here.
Yeah. So what are the new geographies you're looking at? Or are you going to focus on these areas? Is United States, Europe, and some of these areas also on your map?
Right now, we are not looking at new geographies. I mean, we are already present, focusing on India and neighboring areas of Southeast Asia, Japan, and Middle East, and we expect to continue to focus on these areas.
You keep mentioning through this interview, Piyush, that India is the myopia capital, that rates of myopia are growing. I'm sure this is something that you have researched into. Why is that?
I'm glad you asked this question. So first, I think if you just look at the digital penetration, right? I think the amount of time we are spending on digital screen, I believe has a, impact on, vision deterioration, and because muscles get really tired. And the second, I think we are not spending as much time outdoors. And what happens is, if you're not spending as much time outdoors, your eye muscles are not getting practiced to see far distances, which is myopia, which is short-sightedness, which is that you're not able to see far things better. So I think largely, and that is on the rise, I think, and also post-COVID, I've seen a massive rise in this. There could be some other angles, but not proven. But I would say digital penetration and shorter sleep cycles, spending a lot more time indoors is the reason for increasing myopia right now.
All the things, Piyush, that we are supposed to not do and are not supposed to be good for our health.
Our lives cannot run without digital screen right now. This interview, this conversation is on a digital screen. So glasses ain't that bad, right?
Well, that was the management of Lenskart, giving us an outlook what the growth will be for the next 2 to 3 years. Do remember, the IPO will be opening on October 31st and closing on November 4th. But, back to Fredun Pharma, Mr. Medhora is with us. Mr. Medhora, now, speaking about the financials, you have a target wherein you have a target of doubling your revenue and PAT, which is at 20 crore in FY25, you want to take that PAT to 90 crore in the next 3 to 4 years. If I do some back calculation, the PAT CAGR comes at around 49%. And in the last 3 years, your PAT CAGR has been around 45%. Now, just a shorter term view, if I want to ask about, so will you see a PAT growth of around 45% for FY26 and FY27 as well?
Yes, we should be growing consistently. The margins from the new age businesses that we have started, the nutraceuticals, the dermaceutics, the pet care, those will start kicking in the next 18 months. So you would see a considerable growth in the PAT. Any good growth is long-term, and growth needs to be sustainable. So we are going to invest heavily in terms of adding new geographies and demographics as well. So definitely we are going to have this growth. We are on target to achieve the PAT that we have given the guideline for, and the new age businesses are operatingly doing well. They have achieved efficiencies. We are going to get further efficiencies extracted from the operations as time goes by, and as we are able to generate further sales in the current geographies also that we are positioned in. So we are on target for what we have given the guidance for.
Hi, Mr. Medhora. This is Anushi as well. Just want to understand on that part, with the new age business contribution inching upwards along with the export business, what would be the margin profile that we should watch in the next 2 to 3 years?
So the new age businesses have a intrinsically higher gross margin, of course. The pet care after distribution margin is around 45%. The nutraceuticals is around 40%. The mobility gross margins are around 35 to 40% post distributor margins. So as we are slowly inching over new geographies, those margins seem low right now, but intrinsically they are higher margins. So they will all start connecting within the next 4 to 6 quarters.
Also, you are entering into a new age business. Considering the kind of expansion that you would be doing, any fundraising plans that you have in short term or even for the next 2 years?
Currently, we did raise about 153 crores, where the management themselves put in some money, and most of our infrastructure requirements are already sorted. So there will be not much investment in long-term assets. The infrastructure to go up to 1,000 crores of revenue is already in place. And apart from our own manufacturing locations, we have 37 locations across India where we manufacture our products from. So in terms of sustaining the growth, in terms of sustaining the product basket, and in terms of sustaining the margins and profitability, we are on track in terms of our infrastructure needs as well.
Understood. And if you could give us details on your current order book?
Currently, we have an order book of about 290 crores. Most of the order book right now is from our vintage business and the new age business as well. The vintage business is the kind of the exports and the kind of manufacturing we do for our own brands and for certain other multinationals. We have orders in hand for about 290 crores. So the foresight for that is also in place. We have our own registrations. We have about 700 registrations globally, and we have about 1,250 in the pipeline. With that 1,250, growth for about 15% year on year for the next 7 to 9 years is kind of assured.
And this 290 crore order book, what are the execution timelines?
The execution timelines are in the next 4 to 5 months.
Okay, well, thank you so much, Mr. Medhora, for joining and sharing that outlook in terms of what's the plan ahead for the next 2 to 3 years.
Thank you so much for having me.
Okay,
thank you.
That was the management of Fredun Pharma in focus for you. But let's talk about GPD infra projects also quickly. Now, if you're looking at this particular counter, we are looking at an up move currently of over 9%, and this is on the back of a 165 crore order that they have received. So let's just talk about what's happening over here. The company has bagged an order worth about 195 crore from Terminal Industry, Polyus and Perur. It's an international order that we are seeing in picture. Just on this order, the volumes are up over 38 times if we just compare it with the 30-day average. If you take the order book in consideration, it's in the first quarter, the order book stood at about 3,600 crore on odds. So while the first quarter results, the revenue was up around 29%, while margins saw some bit of that pressure at 11.8% as compared to 13.3%, while net profit was up around 40%. So GPT infra projects in focus on the back of order wins. There are a handful of other counters also which have reported a couple of order wins in trade today. But that's all that we had on this edition of Small Cap Buzzers today. So thank you viewers for tuning in and watching that edition of Small Cap Buzzers. But do stay tuned. India Market Close coming up next.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई. In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome. You're watching India Market Close here at NDTV Profit. I'm Mahima Vachharjani and with me is Sharad Dubey. Let's take a quick look as to how the markets are doing. Well, it's a fairly good day for the Nifty 50 as well as the Bank Nifty. The Nifty 50 up 0.6%, although closed above that 26,000 levels, but right now we are around that 25,950 levels for the Nifty 50. The Bank Nifty above that 58,000 mark, up around 0.6% as well. So almost in tandem with where the Nifty 50 is. Let's try to pull up the Nifty heat map and see as to what are the counters that are contributing to that gains of around 0.6%. You have your SBI Life, Grasim, Eternal in green today after seeing profit booking for a couple of days post its earnings. You have your Bharti Airtel, Reliance, Hindalco, Tata Motors, all seeing gains anywhere between the 2 to 1.5 odd percent. So these are the counters that are actually keeping the Nifty going, but there are counters that are putting pressure still. There's BL, which is seeing profit booking down 1.6%. Kotak Mahindra Bank on the back of the numbers that have come in, and of course brokerages views with a mixed view coming in, down by about 1.5%. Infosys down 1.4% as well, followed by Bajaj Finance, Adani Ports and ONGC down by about 0.7% each. Let's try to pull up the sectoral heat map and see as to what sectors have done during the day. Nifty Realty topping that chart, up 1.7%. So clearly that momentum in the Nifty Realty has started to kick in. You have your PSU banks, which is up 1.6 odd percent, oil and gas up 1.4%, Nifty Infra also up 1.4%. Your Nifty Metals doing very well in trade today, up 0.9% as well. But the only counters in the red includes your Nifty Defense, which is down 0.6%, followed by Nifty Media and Nifty Pharma, which is down by about 0.14 odd percent. Let's try to pull up the advance decline ratio, because that paints a picture as to how throughout the day the broader end of spectrum is done, and that gap has narrowed down. So now you have around 1,255 odd advances versus that of 1,151 odd declines. So almost a 1:1 ratio is what we are seeing with regards to where advanced decline ratio is concerned, slightly skewed towards the bulls, of course. Let's try to pull up the broader markets and see as to what they are doing. The mid-cap 150 at its day's high point, up 0.7%. So largely mid-caps are doing well and slightly better than the benchmark indices, and your small cap 250 is up almost 0.6% as well, also almost at its day's high point, in line with what the benchmarks are doing. Let's quickly try to pull up the BSE 500 before I go on to Sharad for the strategies that he's keeping an eye out on. You have your Hatsun Agro locked in upper circuit. We'll talk about this stock as the stock of the day as to what's causing that rally in the counter. You have your Ratnamani Metals up 11%, FSL, Eclerc Services, Welspun Corp, all seeing good gains. And on the flip side, you have your Galaxy Surfactants, Gujarat Fluorochem, Britannia, SBI Cards and Cohen's Life, all seeing a downward trend. But Sharad, what are the trends that you are seeing in the benchmarks and what are the trends that you're picking up?
Well, Mahima, the entire thing is both Nifty and Nifty Bank, both of them are actually showing a good strength in their charts, and they're actually sustaining. They're near their, we could say, intraday high levels as well. But let's focus on Nifty. That they have touched the 26K mark, the intraday basis, and this is happening for the second straight time in the month of October. October 23rd, we saw the numbers actually going up, that 26,000 levels mark. And today also we saw that it's touching that 26,000 mark and then coming back as well. So we are seeing, of course, the market is trying to push the 26K mark, and the closing will be very important. And sentimentally, it will be very important, especially when it closes above the 26,000 mark. The key support levels that stands at roughly 25,850. Key resistance that I have taken at 26,000 levels. The range is very small as we are going ahead in the day's trade as well. And Nifty Bank, that's near 58,000 levels, a strong support coming in, but only drag, that is Kotak Mahindra Bank, and that is actually pushing down the Nifty Bank numbers as well. That's why my resistance level is on the lower side, 58,100, while the support stands at 57,700. But there are key factors also which you should be watching. Of course, we might see some profit booking also in the latter part of the day, as the European markets, they have opened in a flat to weak opening, as there are important global cues which are being tracked. The first one being, of course, the big tech earnings this week happening in US, and Feds meet on Wednesday as well, and it's expected that there would be a 25 bips rate cut as well. India VIX actually went up almost 10% intraday high in the day's basis, and this is actually important for the option players as well. Realty Metals, PSU, as Mahima has pointed out, their buying has seen, but certain segments in small cap indices are slightly underperforming Nifty, but net it's even Stevens. Chart setups look good, and if there is a fall, buy the dip strategy would be good for both the indices. But Mahima, we spoke about indices. Let's talk about stocks. What is the stock of the day and what's the rationale?
Right, so I think arguably the stock of the day has to be Hatsun Agro. The kind of rally we saw before the numbers came and after the numbers came, the stock is locked in upper circuit right now, up 20%. And this is because the earnings have come on a very strong foot. Q2 earnings have been very strong in terms of both the top line as well as bottom line. Revenue growth has been highest in over 12 quarters now. Even if you take a look at the profitability numbers, the profits have come in at a growth of 73%, and this is highest PAT growth in the last 5 quarters. And this is the reason as to why the stock is locked in upper circuit. Last quarter, we'd seen that the numbers had not done very well and the stock was hammered, but today it's come way beyond the guidance. Margin expansion also has improved because of operational efficiency as well as better gross margins have come in. Slightly lower than the guidance here, but we'll take a look at those numbers as well in a bit. Increase in expenses has been lower at 14.7% versus that a revenue growth of 17.3%, and that has caused the kind of uptick in your EBITDA as well as margins as well. Of course, there's reduction in finance costs that has also kind of led to the growth in the bottom line as well. Now, let's try to pull up the numbers quickly. Revenue has seen a growth of around 7.2% at that 2,428 crores. EBITDA came in at 325 crores, up 35% almost. Margins came in at around 13.4% versus that of 11.6% earlier, and net profit up 70.3% at that 110 crores. Now this, as compared to where the guidance stands, revenue has come in at a growth of 17% versus the guided growth of around 15%. So that is something that the street has liked, but margins slightly below the guidance at 13.4% versus that guided range of around 14 to 15%. But hopefully the second half fares better for the company and will achieve that guided range of anywhere between 14 to 15%. So I think these are the reasons as to what's causing the rally in Hatsun Agro, which we've chosen as the stock of the day.
Well, Mahima, there is a rub-off effect also coming in stocks such as Parag Milk and Dodla Dairy. All these stocks just pull up. All the dairy stocks are buzzing in trade. And of course, there's a rub-off effect from the earnings impact being seen. And the next 2 quarters is seasonally strong for dairy companies as well. And milk prices also are on a decent levels. And interestingly, there's an IPO coming as well of Milky Mist. So that's what we are seeing. There is some re-rating happening in the street as well. And we'll give you a detailed analysis on the dairy sector as well. There's one more person who will give a very detailed analysis, and that is Amit Goel, partner and co-founder at Blue Oak Wealth. Very good afternoon, Amit. And market chart setups really look strong. And of course, we had given that setup to our audience. But Nifty Bank, what are the key levels to watch and where does this stand? Because do remember, there's a lot of important global cues lined up this week as well.
Yeah, hi, good afternoon, and thank you for having me on your show. I do agree with you that the market is trying to, give some smart pullback, given that it has given away a lot of its gains in the last 2 trading sessions. And today it looks like it is trying to, form a bottom for the near term. So what I would want to do on the broad indices is I would still have a long bias, and any dip towards the, towards the low of the day or even yesterday's low, which is around 25,770 or 800 levels, one could look at, creating fresh long positions, at least from the derivatives perspective, maybe a bull call spread or something on those lines for the next month's expiry. because the bias happens to be on the long side itself.
Okay, Amit, what about your top picks for the day? What would you go ahead and buy, and are those buy calls?
Yes, Mima. My top pick continues to be Reliance, and I do also have Eternal. Let us first speak about Reliance. I've been, from a chart perspective and from a technical standpoint, I was looking at a breakout on Reliance from a chart consolidation level around 1420. So my initial target of 1450, 1460 has already been achieved. However, I do see a continuation of this momentum technically, and anybody looking to create fresh longs here can consider doing it, keeping a very strict stop loss. Now, since the the stock price has already moved up, I would like to move up the stop loss to around 1440, which is the gap level if you look at the charts, and create fresh positions at the level at the current levels for eventual targets of 1540, 1560 levels. This is on Reliance.
Okay. And Amit, what about Utkarsh Small Finance Bank? I mean, there's a strong pullback coming in. The stock is down around 5.6%. Anything specific with regards to where technicals are concerned? Has the bottom been found, or there's still further downside that you're seeing? What would investors who've invested in this counter do right now?
I mean, this stock has faltered to deceive, really, so in a manner of speaking. Most of the small finance banks and MFIs have struggled in the last 3-4 quarters, fundamentally as well as technically, and they have given up a lot of their gains. Utkarsh was also, from the highs of giddy highs of 48, 52 levels, is now trailing nearly half of it at around 20, 22 levels. It has given some bit of a pullback last week. However, if you look at the chart and if you look at the kind of pullback that it is showing today, till it crosses the high of last week, I would not hazard a fresh long position here, because the chart continues to be weak. And until and unless it breaks out of the high of last week, which is 22 odd levels, creation of fresh positions would be a little risky on this counter, simply because the momentum happens to be on the downside.
Amit, you did mention about Eternal. Any specific levels that you're watching out for this counter? Because post earnings, we saw that the stock did take quite a hit, right? Post that, today it's seeing gains of about 2%. So what are the levels that you're watching out on the charts?
So as a technical analyst, one would look at the primary trend, which happens to be bullish, which happens to be on the upside for this counter. And I agree with the results. The stock has seen some bit of profit booking. However, if you look at the pattern which is getting constructed right now, it is seen as taking some bit of support at the current levels. And I'll keep a very strict stop loss of the reversal low, which is the last 3 trading session low, which happens to be around 324. And if somebody is looking to take an aggressive bet here, can take a bet in this stock with eventual targets of 344 or 350 levels. I dare say it could even go back to around 356 levels, given the chart pattern outlook.
Amit, the question is for realty space. The realty has been the top sectoral gainer in the trade as well, and I think me and Mahima had found this trend also around 15th of October, around 2 weeks ago, that it's under owned. Nifty Realty Index that time was 13% down. Now it's down 9%. Some value also emerging, and of course Q3, Q4 is seasonally a strong quarter for realty companies as well. Do we see a positional up move in these stocks, or would you like to wait it out?
So incidentally, even I have been a proponent of realty and IT as a contra bet. IT, mid small IT, large IT, and realty as the counters where one could create some sectoral rotation or some positional bets on contra basis. And I dare say that it is trying to give those kind of pullbacks also. It has turned out well. Stronger of the counters seems to be Prestige. Good number. Expected numbers also are likely to be strong. The kind of price moves it is giving is also very strong. However, there has been a smart run up already. So any dips on this counter around 1620 levels could possibly be a good entry point. But given the situation right now, I would not want to enter fresh longs, simply because the run up has already been very strong. and there could be some bit of profit booking in these counters.
Okay, all right. So that's the view with regards to where some of these realty names are concerned. But the primary market remains in focus, Sharad, right? You have three big IPOs coming in. There's Okla, there's Lenskart, and there's also Studs Accessories, which is coming out with its IPO. The price band for this one is set between 557 to 585 per share. It opens on 30th of October and ends on 3rd of November. It's going to be a pure offer for sale for this particular IPO, and of course for viewers, I'm sure they would have seen the helmets of Studs, but they design, manufacture and sell two-wheeler helmets and bicycle helmets under the Studs and SMK brands. So that's with regards to where the Studs Accessories is concerned. Of course, we'll speak to the management as well. Siddharth Bhushan Khurana, MD in Stud Accessories, joining us now. First of its kind, IPO. What is the thought process and the details of IPO, Mr. Khurana?
This is like the first of its kind in India, at least, and I think second globally helmet company to get listed. And before, I think, let me tell you more about the company and also about the IPO and the listing, right? So we are into manufacturing of motorcycle helmets, accessories, and sporting helmets. So that's what we do under two brands, which is Studs and SMK. And it's a historic, Studs is a historic brand, was established in 1975, and SMK was established in 2016, which is our premium brand. In terms of, because we've been in the industry for about 50 years now, so it's a pure OFS, and obviously we've worked for 50 years and we seen some rewards. So there are no other objects of the offer. It's not a primary, it's a pure OFS. And the promoters and other selling shareholders, they're selling about 19% of equity of the company.
Well, a very interesting company actually coming in, and this is of course the two-wheeler space. You're actually dealing in helmets as well. Siddharth, what are the growth plans for the company going ahead? And of course, you have already mastered your core business. Is there any diversification plans there? And if it is there, what would be these companies, or maybe the products which you are trying to venture into new places?
So first I'll talk about the growth, and historical growth I'll talk about more. So if you look at, as you said, the margins have been growing decently, and going forward, the strategy would be more around exports. Domestic market is growing, and the recent GST news for the motorcycle sales is going to help the motorcycle industry. So we expect the domestic industry, we have been growing decently, and for the export side, I would say that going forward, export is a bigger growth strategy for us, and it's a larger addressable market. The total addressable global market is about $2 billion, and that's where I think the most of the growth strategy in the future lies around. And on the domestic side, I think as I said, the recent GST change on motorcycles, not on helmets, but motorcycles, is going to drive the motorcycle market. And obviously, we are a derivative of motorcycles in any case.
Okay, Mr. Khurana, exports form 22% of your total sales. To what extent do you see them contributing? What's the strategy going forward for the growth of this business, and what are the tailwinds that you're seeing?
So I think on the export side, as I said, right, the total addressable market is $2 billion on power sports helmets. When I say power sports helmets, it's scooters, motorcycles, and EVs. So, and then there is other market like our other verticals, which is sporting helmets and which is accessories business. So there are also large markets in export. So I think in exports, the addressable market is quite large, and that's where we're seeing the growth coming out of, as I said, right? And the strategies around growth, we are growing in a lot of countries. Historically, if you see, our last year growth is close to about 30%. And historically, we have been growing decently in exports. So I think in exports, it's more of a market share gain than the market itself growing substantially. The market is expected to grow at about 6% as per the industry reports. But I think our growth strategy, our price to quality ratio on the products and the acceptability of the products in these markets, like our bigger markets would be markets like Colombia, markets like Australia. We find a lot of traction for the brand, and the brand is getting more and more known there. On the domestic side, you said yes, there is competition. So it's a three-player who are substantially bigger in the market, which is us, Vega and Steelbird, as you said. And I think the market itself in India is growing. So I expect as the motorcycle market grows, we, as I said, are a derivative. So that's how it looks like at the moment on the domestic side.
That's interesting. Mr. Khurana, what are your capex plans as it is in OFS? So what will be the expansion strategy going ahead?
So we are establishing a new manufacturing facility right now. We're calling it as Manufacturing Facility 5. And this new facility is expected to start in last quarter of this year. But the revenues will really start flowing in from the next year for that facility. And this facility is being built in 2 phases. The first phase will start now, and the second phase will start later, maybe 1.5 years after that. And this is our current capacities are 9 million. And with this new capacities coming in, the total capacity will go to 12 million products. Now, the total capex on this new capacity will be close to 150 crores, out of which almost 50% has been done. And the balance will be done, as I said, in 2 phases. And it will start, the first production will start in last quarter of this financial year.
Well, that's a pretty interesting viewpoint coming in. But of course, why should the investors invest in the IPO? What are the top 3 reasons, if you had to ask your prospective investors, what should be there? What are your key pointers?
Okay, so I think the first is the legacy of the company itself. It's about a 50-year-old company. So there is enough history on the company for the investors to see. The second big thing I would say is the historical growth that we have given. And it's historically, if you see, the numbers look pretty good. There is no debt in the company. It's a profit-making company. So decent returns historically. And the third, I would say, is, as I said, the export and domestic side, right? Both are exciting for us. So these are the 3 big strategies, I would say, or rather the things that investors can see.
All right, Mr. Khurana, thank you so much for giving us those details and, of course, telling our investors as to why this IPO, is attractive from your lens. But Amit, I'll quickly come to you on some metal names. Metal is one of the sector that's been in focus, has been buzzing. Any of the counters where you still think an entry makes sense, and from here on, momentum is there to stay?
So last time when I had come, I was asked the same question. Metal was in an upswing. It continues to be in an upswing, and it has moved up further. So the risk reward continues to diminish. So any fresh entries in this sector itself is now offering lower risk reward ratio. So I would if I have entered the sector earlier, I would continue to hold on to them and look very sharp, look very closely for signs of reversals for profit booking to get out of this theme. Otherwise, fresh entries is not giving me great risk reward, so I would like to avoid for the time being.
Okay, all right. So that's with regards to where the Nifty metal is concerned. But the other counter that's been in focus is Zen Technologies. Now, this is the second quarter where the overall revenue growth has been disappointing. And in fact, we spoke to the management, Ashok Atluri, the chairman and managing director of Zen Tech, about the current ecosystem, whether it's favorable for companies like Zen Tech. This year will be muted, but expected next 2 years, how will they be? Will they be strong in terms of order flows? And how will the second half be in terms of execution? Listening to what he had to say.
We have really excelled not only in soft kill, but remote control weapon station from our partner, our subsidiary AI Turing, the system itself from UTS. All this converged, and we can see the pride not only in Zen Technologies but even in the armed forces that Zen has actually delivering products that are absolutely world class. So to your question that it is absolutely just delay, procedural delay, nothing, and we don't feel any sense that, there is going to be any change. I think the growth is expected to be as strong as ever. And, I have been talking about, on a cumulative that we'll be hitting 6,000 crores. That still, I think that still holds very, very strongly in my mind that the next 2 years, this year may be muted, but next 2 years are going to be very strong.
All right, so that was the management of Zentech. Quickly, Amit, your view on the charts for Zen Technologies. It's down 4.5% today itself in trade. But do you think if at all there's a trade there?
So, starting of this year, I had recommended this. I had taken this position also at around 1,000 levels when it had fallen very sharply. Unfortunately, it has come very close to those levels. It's currently at 1,300 levels, and it has faltered to deceive. It has given up all the gains that it had made during the India-Pakistan conflict, which was the run-up to it. The numbers don't show any encouraging signs. The chart does not show any encouraging signs. I do see maybe a retest of 1,000 levels is in the offing. So anybody who wants to take a punt on this counter can wait a little bit more. Probably around 1,100 and 1,000 levels is where one can start accumulating in this counter, because there the risk reward definitely favors fresh entries, not at the current levels.
Okay, so the risk reward levels become attractive at 1,100 odd levels when it comes to Zentech, and then the buy the dip strategy can be taken place. Of course, let's take a quick break. Stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment Heard on the Street.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
को शराबी प्यास जिसके हम ना हो जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Welcome back to India Market Close at NDTV Profit, and the markets are actually sustaining at a great levels. Nifty has again touched the 26,000 mark, and this is the October month, 2 days it's coming in, and on Nifty Bank also there is a good support coming in. And I think Hiral, we have introduced that.
Will the bullish momentum continue or not? And I think Alex has been doing India Market Open. Let's see what his commentary tells us basis the guest conversations. And I think you've done some number crunching as well, which tells you that the momentum will sustain.
Well, it all depends on a couple of things. When is the Fed outcome?
I don't know.
Wednesday.
Yeah.
So you could see a situation.
So Thursday morning for us.
And also, incidentally, by the way, a lot of people would not have seen this, but I was looking at the monthly numbers for October, and of course there are 4 sessions apart from today left.
Right.
You are seeing gains of 5.5% at this point, which is the second best month in 2025 for the benchmark Nifty 50. My only point is, of course, foreign institutions starting to buy. Some elements of short covering is what you've seen over the last few sessions, but you could see some profit taking. If you've seen run-ups in quite a few of these stocks, look at a bigwig like Reliance Industries up and about today. It's moved quite substantially in the recent past. Does money get taken off the table?
Well, yes, I think I agree with you. The European markets also agree with Alex. The markets have started opening in a very mixed manner. Some are in the red also. And of course, this week itself, globally, if you look at it, 2 big events are there. Alex mentioned
the
Fed meet. But there are big tech earnings as well. So the entire world will be there will be a pause.
But Sharad, you're forgetting also the possibility of a China and US deal. You have the meeting of President Donald Trump and Xi Jinping.
And the impact that could have as well in terms of commentary and in terms of October. This is the best October since 2023 because that was, I think, 2022. 2022 is when October gave you returns of 5.4%. That has now, you've gone beyond that at 5.6% this time around. It was 24 where it was a negative return of over 6%. I mean, negative growth of around 6%, negative downtake of around, say, 2 to 3% in 2023 as well. So, you know, there is something that is brewing and probably the bullish momentum should sustain. But let's get in Jay Bala, founder and chief market technician at Cash the Chaos, to understand more. Jay, welcome to the show and always a pleasure to speak to you. You know, 3 of us were just discussing right now 26,000 twice in the month of October in the last 2 trading sessions, that's on the 23rd and today. How sustainable is it? Number 1. And 2, will this bullish momentum continue when you talk about banks as well as Nifty 50?
Yeah. Hi, Hiral. I've been maintaining the 29,000 objective for the Nifty since April. And I've reiterated that in most of our interactions. And from a 2026 perspective, I still maintain 29,000 as the objective for this market. When it comes to the short-term up move, yes, 26,104 that it saw on the 23rd, there was not a significant resistance. And the fluctuations from the September low have still got further higher highs to come through. So the only significant resistance for the market is the all-time high at 26,277. I think it will take a few days to probably a week for that to get conquered. So it's probably coming either in November or in December. So most probably in November. I'm continuing to maintain the bullish view, the short term and the medium term. When it comes to the backing index, it broke the backing index crossing 56,150 a few weeks ago. That was very important. It negated a inverse head and shoulders pattern. And when a market negates a technical pattern, the move afterwards that comes after the negation is far more important. That's the reason why you're seeing bullishness in the banking sector now. And we have been bullish on the leading banks on the on the public sector space. And I even pointed out that SBI, when it crossed 837, that is going to be a breakout and going to reach record highs, and it has done so. So, so the fuel is receding, but it's still got some more in the tank to go.
Okay, I want to. This is the first time I'm speaking to you about your target, Jay, and you've mentioned 29,000. I might have missed this the last time we spoke, but what is the timeline that you're expecting this to take place in?
Time is always approximate, Alex.
Yeah.
So
with that caveat, no one's going to hold a gun to your head, Jay. But when do you see this happening?
So in April, I put it out as a 12-month objective, and I'm still maintaining that. We are 6 months into 4 months, 4 to 6 months into this. So I'm anticipating the 52-week highs to get crossed in a couple of weeks time frame, and so on the all-time high. And 29,000, I'm anticipating it to come through somewhere about March to June.
So if you're talking about around, say, 29,000 in FY26, which are the stocks that will lead to this rally, and what should investors then buy to actually encash on a Nifty at 29,000?
Yeah, good question. I've been bullish on autos, and autos is the leading sector, and I would consider Reliance itself as a sector, which you were speaking just before I came on air. Reliance is actually breaking out. It's got potential to scale somewhere close to about 1,700. So even from current levels, it's got good potential. I would watch out the real estate sector as the other one which could lift the markets. We have had some significant picks from there, but keep your focus there. And the other sector I'm also liking is the capital goods space. And I had identified comments from the capital goods space sometime in May, June. So so keep your focus on Reliance, a little bit on the auto, ancillary autos more than frontline autos, and capital goods as the other sector to watch. Capital goods and real estate.
Well, interesting picks coming in for the Nifty 29,000 target. But let's come back to the short term. What would be the short term targets if you have to pick, and what would be your important technical picks?
Yeah, I have two picks for today. One is, recall correct. What is it? Okay. Yeah, Bharti Hexacom. Yeah, Bharti Hexacom is breaking out of the inverse head and shoulders pattern, and the stop loss is about 1720, price objective of 2080. And the next stock is Kirloskar Oil. If you see today, oil stocks are doing well, and Kirloskar Oil is a laggard today, and it's got a very good strong base in the short term, and I expect it to test the all-time high close to 1,400 odds with a stop loss of 828.
Jay, I must confess that when I looked at your face and you're trying to remember the name of the stock, it seemed so familiar, because I think I make that same expression. I'm horrible with names, and when I can't remember somebody's name, I have the same expression. But it's all forgiven as long as the call is right. And so let's repeat the call just so everyone knows. Bharti Hexacom, you have a buy on this one. The objective, of course, is 2,080. The stop loss of 1,720. The stock is up and about in trade today, quite considerably so. It's one of the buzzers. We'll talk about more buzzers beyond this one, but this one, watch out for this. Long on Kirloskar Oil also being spoken about, 828 is the stop loss and the objective of 1,400. But let's talk about a few more newsmakers and buzzers, so to speak. And we've got Varsha joining in to tell you the list. A few interesting names in the earnings space, of course, but beyond that, order wins, there are a couple and more developments as well. Varsha, what have you picked?
Yeah, so a lot of stocks are actually buzzing on the back of order wins, starting with GPT Infra, wherein they've received order of rupees 195 crore for conveyor belt system, and the order execution period is for next 12 months. Then you have PTC Industries, wherein they've received purchase order from Gas Turbine Research Establishment and DRDO. Now they'll make ready to fit turbine blades, and the company is expecting order book of rupees 1,000 crores to rise substantially. Then you have Vikrant Engineering, wherein they've secured an order order of 354 crore from this is for solar PV power project in Maharashtra, wherein the execution period is for next 12 months. Lastly, you have Knowledge Marine and Engineering, wherein a company has received an LOI for hiring 160-ton electric green tug, and the contract value is 385 crore, and the contract is for the next 15 years. So these are all the stocks, which are buzzing on the back of order inflows.
Okay. So that's with regards to where, three of these names which are buzzing in trade and are newsmakers. In fact, very quickly, Jay, any view in terms of what charts are indicating for GPT Infra, PTC Industries, Vikran Engineering and Knowledge Marine, all of them buzzing on the back of news, but anything where you see signs of bullishness to continue?
Most of them are the stocks I don't watch regularly. But yeah, PTC in India is something that I track closely. It's got a very, very positive setup. 161, it put in a hammer bottom at about 161, and the pullback from the
Jay, we're talking about PTC Industries, not PTC India.
Okay, PTC. Oh no, I haven't had a look at that.
Okay.
And most of the stocks are something that I don't watch.
No problem. Apart from that, the other aspect that we need to look at is all your OMCs. Now, Reliance Industries we've already addressed in a way as to what's happened. The deal with Meta is providing it some bit of impetus. But apart from that, your Singapore GRMs are on a rise. In fact, in the last 10 days, GRMs have increased from almost 0.41 per barrel to almost $8.6. So that is very strong. And in the second quarter, they've averaged at around $4.1 per barrel. The reason why this is happening is because the sanctions on Russia, that is what is probably impacting the availability of the final product. Secondly, the strikes in Ukraine or by Ukraine have actually hit the Russian product exports. And thirdly, your planned capacity shutdowns are leading to an overall short supply. These are the three reasons which are impacting the Singapore GRMs, basis which you have names like IOCL, BPCL, HPCL, RIL, MRPL, Chennai Petro. In fact, Chennai Petro reported numbers as well in today's session. All of them are seeing some strong moves today. And every $1 per barrel rise benefits Chennai Petroleum the most, to the tune of around 26%, MRPL around 24%, IOCL around 11%, RIL, HPCL, BPCL in the range of almost 2 to 10%. So that's what's happening with all your OMCs. Jay, anything that you have in terms of OMCs which you would advise investors to buy?
Yeah, I was looking at all the OMCs before looking at Kirloskar Oil, and I think IOC and HPCL are stronger than BPCL, but all three look attractive. BPCL is probably a better looking structure, but slightly weaker of these two. But a stop loss of about 320 for BPCL, but it's more like a short-term trade rather than an investment bet. So I would possibly expect about 365, 370 with a stop at 320 for BPCL.
Okay, Siddharth Khemka of Motilal Oswal joining us right now. Siddharth, as always, thanks for taking the time. Good afternoon to you. You just heard what Hiral had to say about the OMCs. We were looking at the GRMs and which companies stand to benefit the most. A couple of these stocks buzzing in trade today. What do you make of this development, and would you be buying any one of these?
Yeah, hi, good afternoon. I think OMCs, we are looking at it positively from this quarter earnings as well. So overall, if you look at the up cycle for the oil marketing and the oil refining companies, I think that is on an upswing, and we remain positive. However, as you rightly said, on a quarter-on-quarter basis, two things are very important. A, the inventory gains or losses based on the crude oil prices, and B, the quarterly GRMs. So I think between the three oil marketing companies, we are most positive on HPCL. We believe that with the new capex coming in, the growth in HPCL, which will be much stronger compared to some of the others. So while the GRMs benefit all three in terms of the newer capacity, we would prefer an HPCL where we have a buy rating and a target price of 535.
Okay, all right. Siddharth, I want to ask you about Zen Technologies, and I'm hoping that you've seen the numbers as well. The management spoke to us in the morning today. And for me, one of the big takeaways in that conversation was the fact that the second half is expected to be a little soft as well. It's not expected to be dramatically better than the first half, though order win will likely kick in the second half. So the expectation is that next year you will see the fruit of that. And the disruption that was caused by this Operation Sindoor, etc., where the mix of orders that they have catered to has had a bearing on Q2. What do you make of the numbers, one? What do you make of the outlook for 6,000 crore of revenue in a couple of years?
Yeah, I think if you look at Zen, they have been struggling in terms of new order inflows. Even Q1 was in that sense weak. And yes, there was some new order inflows after the Operation Sindoor, but still we believe that the 6,000 crore, the 600 crores order book, that is not matching to the revenue potential that the company has. And hence the order inflows that has moderated. We have cut our FY26, FY27 estimates by about 18-20%. Nonetheless, with the existing order book and the segments that they are present in, we believe a 20-25% CAGR growth in the net profit that can be achieved, given that there is a strong focus from the government, especially on the defense procurement and the defense side. We have seen the capex from the government in some of the other segments waning off, but that continues to be pretty strong in the defense. So overall, I think there are better investment opportunities within the defense space, something like HAL that we like, Bharat Dynamics, HAL and BEL. These are our preferred picks in the defense space. Then technologies, we are neutral, and we'll wait for the uptick momentum in the order booking, post which we can look at it from a positive view.
So that's Zen Technology. Stay with us. We're just seeing some commentary that's coming in from the UK government. If we can pull up that one on the screens right now, and this is when it comes to JLR, where they've said that they will be supporting JLR through provision of guarantee for the commercial loan. Now, the reason why they are ready to support a JLR right now also, Alex, is because the cyber attack that happened, it's not only impacted JLR, but a lot of your ancillaries in and around JLR within Europe, and because of within UK, it was almost a blow of around $2.5 billion, which is around 1.9 billion pounds, and that is the reason
for the
why
economy, right?
For the economy, yes, for the UK economy, and that was the reason why they are ready to support a JLR as well on this. If you can just pull up those lines once again and the chart, on the back of which you're seeing some bit of positive momentum, but they will be supporting JLR through provision of guarantee for commercial loans. What would this mean? Actually, we will try getting Puneet in as well.
Just logically, I'm just thinking about this, right? You have a situation where they didn't produce anything for a while.
Correct.
And so therefore cash flows would have gotten dramatically impacted.
And there was a rating downgrade also.
Absolutely. And so therefore working capital availability would be a little bit of a question for a company to restart operations and kickstart it to the point where you have to cater to long pending orders in various geographies. You have to remember that apart from Chery Automotive, which is a joint venture that Jaguar Land Rover has in China, its primary manufacturing facility is in the UK.
I mean, you talk about Britain's car production. They said because of JLR, September production fell by 27%. Wow.
It's like a domino effect.
Right? That is one. So majorly it was your economic damage plus the supply chain issues that were faced across, because it's not only JLR in terms of the overall car, automotive parts is also what JLR manufactures and supplies, right? So it was the entire supply chain that was hit, and I think that's the reason why UK is forthcoming right now to come in and support it when it comes to your commercial loans as well.
So I just wonder if we can get a very quick view from Siddharth. Siddharth, of course, a raft of these bad news coming through for Tata Motors, and now we're specifically talking about Tata Motors PV, which houses the JLR entity. Would you use these opportunities to buy if you have a long enough time horizon, because ultimately there could be a recovery in the cards?
Yes, I think most of the issues that you discussed are there in the price, but I think the company will still take some time to recover from that. Obviously, the cyber attack issue has led to production halt, and there is a government support from the UK government. But the bigger issue or overhang is the demand weakness, especially in the key markets of Europe and China. I think, especially for the passenger vehicle business, that is a key driver. And for at least for the near term, next 1 or 2 quarters, I think the stock could remain under pressure. For the stock to do well, I think the global tariff issues needs to get resolved. The company has to see clear visibility in terms of competition from the EVs. Obviously, they are also getting a lot into the EV segment. All new models that are being launched are in the EV segment, but still they are facing a lot of competition, I think, on that front as well. So I would still say a neutral or an underweight on Tata Motors until we see some clarity in terms of growth. Between the two, I would be more positive today in terms of the CV business, given it's a domestic, pure domestic play. The India growth story continues to do well, while the on the global front, the passenger vehicles looks more attractive, but it comes with its own challenges as well as volatility in terms of the numbers, margins that JLR keeps reporting on a quarter-on-quarter basis.
You know, the PV business is the chart that you're seeing. CV business is not yet listed. And once that list is only when you will be able to see the chart of that stock. But thank you, Siddharth, for that one. Let's actually put focus on the bull versus bear segment that we have, you know, on India Market Close. The stock we're looking at is Coforge, with the kind of run-up that we are seeing in today's session, very stable at around 4% since morning. We have my colleague Jasmeet, who's with us to tell us what are the bull and the bear cases. I know we had an argument or a discussion as to very few bear cases, majority bull cases, but I'm sure he's been able to find a lot of the other bear cases as well. Jasmeet, what do you have for us?
Well, right, thank you for that. So now if you look at the numbers, we have a good set of numbers coming up from the management. Revenue expansion, margin expansion, even the profit have expanded. Let's quickly understand the bull and the bear case for the company. We see margins have sharply expanded on the back of improved performance. On the other hand, we also see that the brokerages have been divided, given that is this margin growth sustainable? And given the management has also guided a margin of 14% by the end of FY26. Now going to the next bull case, we see that there's strong traction seen across BFSI segment as well as the various segments of the company. But on the other hand, we also make a note that the Europe still lacks as a geography and sees a slow growth moment. Now, in terms of brokerages, Jefferies expect the margin to cross 14% by FY27. On the other hand, we see Ambit, which still targets an unchanged margin, and it targets between 13.8 to 13.9 and not to cross the 14% mark. While if you look at the other bull case, the JP Morgan have raised the target price to 2,500. But given Ambit has still kept it unchanged, citing that margin reasons. On the other hand, we see that this particular company leads the IT pack given the higher revenue estimates. On the other hand, the valuation still at 56, which is still the higher compared to par. Now, if you look at what the street expects in terms of the ANR, we see that the company has buys at 29 while sells at 6 and 3 with hold, a return potential of just 6.5% after the 4% run up today. We also spoke to the management. Do listen in.
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
All right, one of the stocks of the day, Coforge, and we'll get your view on it in just a bit. But before we do, a lot more stocks to talk about, and this is the dealing room buzz. Soumya Sarkar joining in with the regular feature on this program, which is heard on the street. This is where Soumya pulls out from his pitara all of the stocks that he's heard about from the brokerage rooms, from the dealing rooms. What are you picking up today, Soumya?
Multiple stocks that remain in focus. Firstly, it's Hindustan Aeronautics. Now, what dealers are indicating is that there are sell flows on DI desk in trade today for Hindustan Aeronautics, and they're saying that there could be some delay related to its Tejas aircraft, and that's the reason we are seeing this selling pressure coming in for Hindustan Aeronautics. Second stock on the list is Greaves Cotton, where dealers are indicating that there are buy flows on large HNI desks. They're expecting some positive announcements, some positive corporate development to come in next week when it comes to Greaves Cotton. For Voltas, dealers are indicating that there are sell flows on FI desk. Valuation is one of the major concerns that they have highlighted, and that's the reason we are seeing this selling pressure coming in for Voltas. Apart from that, when it comes to, given the fact that we are in midst of earnings, Pidilite, Infra and KFin Tech, these three stocks remain in focus. There are buy flows on large HNI desk in all the three counters, and dealers are expecting or saying that the Q2 numbers for these three counters could be much better compared to what the street is anticipating. When it comes to Cello, there are buy flows. There's some potential deal announcement is likely to happen soon when it comes to Cello World. And when it comes to oil marketing companies like IOCL, BPCL and HPCL, yes, there are multiple reasons why these counters have been buzzing in trade. But apart from that, what dealers have also indicated for these three counters is that the flows are also on the back of strong result expectation. In fact, PAT number or the net profit number could be much ahead of what the street is anticipating, and this could be also because of the LPG compensations that the oil marketing companies have received. So keep an eye out for IOCL, HPCL and BPCL. The PAT number could have some a component of the LPG compensation. And Vodafone Idea and Industar was part of our segment on October 24th, where we had indicated that positional buy trades have been taken by multiple HNIs and large HNIs, and this was largely on the back of the court hearing, and this trade has played out well for them, given the fact that both the counters are gaining in trade.
Well, pretty interesting list of stocks Somit gets us each time he comes on this segment. But moving on, we are focusing on the companies now, joined by MP Taparia, MD of Supreme Industries. So, of course, looking at Supreme Industries, we will be talking about the company and, of course, the numbers which have come in. That also will be in focus. But good afternoon, sir, for joining us. And of course, yes. So first question, of course, is on the numbers side. The numbers largely look in line with the street estimates, but the EBITDA we saw, there has been a slight downtick coming in. Could you just give us the entire picture, especially of how the performance has been, especially on the volume growth front, because you have given a guidance cut as well. So why you have given this guidance cut, and will that, impact your earnings over the next 2 odd quarters or so?
No, we are given the volume guidance for the company as a whole, that is 12 to 14%, and volume guidance on plastic piping between 15 to 17%. We are given because we told you the beginning also of the year, but first half we have grown only 11% in pipe volume. It was lower due to the extended rainfall and early break of rainfall. We are given the understand that the reservoirs of water are full by more than 90%. The demand for usual segment is going to be very robust in the second half of the year. So we anticipate to grow by 15 to 17% of plastic piping system, and overall between 12 to 14%.
Understood. Okay. So therefore, from that perspective, I do want to also understand, and thanks so much, Mr. Taparia, for taking the time. About the downtick in the EBITDA in the quarter gone by, is this also something that of a challenge that you're facing on the pricing front? Because the demand was a little softer, one would assume, in the second quarter. Did you also face a little pressure on the pricing front? Do you anticipate that that will improve in the second half?
EBITDA was affected in first half on plastic pipe due to drop in price of PVC.
Okay.
So we had an inventory loss.
Okay.
Understood. Now the price are at a bottom level, so we anticipate that no more price destruction will be there in the second half.
So, Mr. Taparia, okay, you're saying that volumes will pick up then in the second half. 2, your margins will be better in the second half as well on the back of better raw material prices. So, my third question to know you now is, in terms of the ABS project, what is the capacity utilization? Because you've just commissioned the new 70,000 TPA ABS plant, and you've expanded, and you've expanded the compounding facility in September 2025 as well. So the timelines and utilization targets for this one, and what's the targeted volume growth you're expecting?
Now, for ABS plant of 70,000 installed capacity, we anticipate 60,000 ton annual production. And now the plant is running very smoothly, so we intend to run plant fully in the remaining 6 months. And the PVC ABS is imported, so we'll be filling the import gap only.
Okay, so so my last question coming to you is, if all of this said and done, what is that demand outlook looking like for H2 FY26 if you're saying everything is going to be on track? Because you're saying the volume guidance is what you've cut, and that is 15 to 17% growth in plastic pipe operations in FY26. So what are the concerns that you are looking at?
As of today, no concern. We anticipate demand is going to be quite good. From the housing market was good in the first half also. It will continue second half, and agricultural demand, which was poor first half, will be better in second half. We don't have much business in infrastructure, and we are not very optimistic on infrastructure demand going forward in second half also.
Okay. Mr. Taparia, wish you all the best in the new Samvat 2082, and thanks so much as always for taking the time and for speaking to NDTV Profit.
Thank you very much. Thank you very much. For 2082, your wishes, we very appreciate your effort.
Absolutely. Thank you so much, sir. All right. Let's talk about levels. And let's, while we were speaking to Supreme Industries, I wonder if there's been a change for the benchmark at all. Are we still below 26,000? Chances are we are at 25,953, but holding above that 900 mark. And I think that's going to be crucial to watch. Would you... okay, we'll find out whether or not Jay Bala thinks that's important after this very quick break. Do stay with us.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas.
Welcome back. You're watching India Market Close. And earlier today, my colleague Neeraj actually pointed out to you, if you watched India Market Open, you will have seen that the snapshot of the earnings for the companies that have reported so far, just over 300, and the earnings growth is actually about 14% significantly higher than what was penciled in. Penciled in was actually lower single digit. So things are looking much better on the ground. In fact, that is what the latest economic data is also pointing to. Finance Ministry's September economic report is pointing to solid momentum in India's growth story through the second quarter of FY26, despite global uncertainties. With strong industry and services activity, a stable labour market and festive demand kicking in, the outlook stays upbeat even as external risks persist. Rishabh is joining in with the key highlights. Rishabh, what are the key details in this report?
Right, some few interesting insights that have come in with regards to the Indian economy, especially in the September monthly economic report. A few key headlines that we've picked up is the fact that the economy has remained resilient in quarter two of the current financial year as well. That is something that the monthly economic report talks about. What we're also seeing is that in the FY26 for the overall year as well, the resilience looks good. It looks set that the economy will be growing and not degrowing in the current financial year. What we're also picking up is the fact that the reforms that we're seeing in the economy, like the GST reforms that came in with the rate rationalization, slabs coming down, as well as the rates itself also coming down, those are the sort of reforms that will continue to support growth and also help in the face of various external factors that are upsetting the economy, such as the US tariffs. And it is reforms like the GST reforms will help cushion the impact of such external factors that are impacting the economy. What we're also picking up is the fact that there are certain global uncertainties. They will continue to pose downside risks. But what is interesting to note is that the services sector, that remains very strong. The industry itself is maintaining its growth. What we're seeing is the fact that you had the IMF also come up and they also upped India's forecast to about 6.6%. RBI sees it at roughly 6.8% GDP growth. And what we're seeing is that for the overall year itself, for FY26, that the Indian economy will grow. So all positive signs coming in, even in the face of geopolitical as well as global uncertainties coming India's way.
Thank you so much for that, Rishabh. In fact, that's an interesting takeaway that's coming in from the economic report as well. But before I go to all the guests, let's just quickly pull up an NDTV Profit exclusive where construction giant L&T is set to sign a deal for shipbuilding and repair works in India. Who are they signing it with? What is the deal all about? And the value of the deal? Agni joins us with all the details. Agni, over to you.
Larsen & Toubro is set to sign an MOU with Maersk about shipbuilding and ship repairing here in India. Now, while the financials are very fluid in nature right now because it will be a non-binding agreement, L&T expects an inflow of around $400 million over the few years that it takes to build container ships for Maersk and to repair existing ships for Maersk. Now, sources have been also telling us that the ships will be repaired and built out of their Tamil Nadu plant, and the MOU can be expected to be signed anytime in the coming week. So this is a developing story. We have reached out to L&T for their comments, so do stay tuned for more updates.
Okay, thank you, Agni, for that. We will wait for more updates. 0.5% up move on L&T. Siddharth, let me come to you. L&T, you're talking about a shipbuilding deal there. The stock is up around 0.5%. Alex did speak about Coforge as well, but the way earnings have planned out. eClerx has been buzzing as well on the back of earnings. If you have to look at these three companies as well as a Welspun Specialty, which has just reported numbers. In fact, the company has posted a profit versus a loss on the back of which a strong move coming in on that one. Anything that you like from this list, and anything that you would want to add?
Sure, Hiral. I think Coforge is something that we have been quite positive on. It is one of our top picks within the IT space, and the company has been delivering quarter after quarter consistently healthy numbers, and on back of it, I think this market is also rewarding the stock. Despite the macro headwinds, I think they reported strong revenue growth of almost 6% on a constant currency terms. Margins have seen improvement, and the management has guided for a stable margin going ahead. The order book is pretty strong, and we believe that the strong executable order book, resilient client spending across various verticals, that bodes well for the organic growth for Coforge. Plus, you also have the cross-selling opportunity with Cigniti remaining a high synergistic opportunity for the company. So overall, I think we are very positive on Coforge. We have a buy rating and a target price of 2,400, a decent upside even for current level. I think Larsen is something that we have been liking while the capex spending has come down, but in terms of the defense spending, I think that is something that has picked up. The global order book and execution, that is also seeing significant growth. The green energy portfolio, I think that is also seeing strong growth, and the recent efforts by the company to get into the new age businesses like semiconductors, your smart meters, I think that is also having a diversified led growth for L&T. So in the large cap space for a steady growth, I think Larsen will continue to do well. Again, we have a buy rating and a target price of 4,300 there.
And eClerx, what did you make of that? Because the stock, arguably the stock of the day today, Siddharth, 7% up move, and we were laughing about it earlier, but the kind of growth that they've reported on a quarter-on-quarter basis is something you normally be used to when you look at a year-on-year performance, 30% PAT growth. What do you make of the numbers?
So unfortunately, Alex, we don't cover or have not had a look at eClerx.
Okay, no worries. But let me go to Jay on some of these names, right? Of course, some of these stocks buzzing on the back of earnings or other developments, but others, we're trying to find a reason, Jay, but we're not necessarily able to identify the exact reason. Something like an RR Kabel has been in the top 5 gainers of the Nifty 500 all day today, practically. 6.5% higher today. First Source also up and about 8% higher. eClerx as well, 7.3%, arguably the stock of the day on account of earnings. Any view on any one of these? eClerx, I know for a fact, has run up quite significantly over the last 3 and 6 months, 70+% over the last 6 months.
Yeah, eClerx is a very interesting stock, but the risk reward from here on is a bit wide for you to punt here. As long as the stock can stay about 3,900 up can stay. That's the reason why I said the stop loss is quite wide. But I believe the stock is extending, and I think it's still got a powerful upside left, and the stock can probably cross 6,000 in the coming weeks and a couple of months time frame. Coforge, yeah, it's I believe it's in the last leg of its move, but still fresh record highs around 2,200 possible. RR Kabel is a very interesting stock, a relatively new listing, and it's gone from 854 to somewhere about 1,500 and pulled back. That pullback is a near perfect 50% Fibonacci retracement. That low was about 1160, 1150 odds, and from there it's starting to perk up. So if the stock is setting on for the next leg of its up move, we are possibly looking at a very powerful move. So, this is one of my candidates for today. And, you can be long on the stock with a stop loss about 1160, possibly expecting fresh record highs close to 1900.
All right, let's just get the SRF on chart. Of course, the numbers largely we are seeing it's below the street estimate, a slight beta, and the numbers, of course, it's a year-on-year basis. But do remember that the refrigerant gas prices, that they have been going down, and that doesn't augur well. And we had actually pointed it out last Friday as well. And other fluorination players also are in their days low levels in the red as well. But of course, SRF's guidance and their commentary, that is also something which the street will be watching out for. And right now, currently, we are seeing there hasn't been a significant up move coming in, but if you can see the profit numbers, that is slightly above what the street was estimating, and these numbers are flashing on your screens as well, but nothing much happening on the stock. Stock still down roughly 2% odd. Siddharth, just a quick check on the fluorination players. The overall refrigerant gas prices, they are on the downtick. I just wanted to get your view on it. Like, they have actually already run up. So would we see more pressure coming in going ahead?
Yeah, Sharad, I think we were expecting a strong quarter from the likes of SRF, Navin Fluorine. For SRF, we were expecting better margins, and our EBITDA number was about 825 crores. I think the number that has just flashed on your screen was about 775. It's been much lower, and I think the prices which have corrected in the recent times, I think that is impacting the margins. We'll have to see the details. But the stock prices had reacted positively earlier and moved up on back of an expectation of strong quarter. But I think the downside is limited because on a longish term basis, we see strong demand for the chemical business that they are in, and especially led by improving pricing again. But I think the trend needs to be tracked, The technical textile business, that was expected to see a muted quarter for SRF. So overall, I think a mixed quarter, but again, we'll need to see and how the prices trend up. And I think that would be the key driver for the stock price going forward.
So that's with SRF. In fact, we've been discussing this since Friday with the kind of pressure that all of these players are seeing. SRF, Navin Fluorine, as well as a Gujarat Fluoro, on the back of your R22 refrigerant gas market prices, which are down, which Sharad had pointed out. But very quickly, Jay, do you see an opportunity to buy with the kind of correction that has already come in? Because they've come off quite a lot from their 52-week highs as well. So is there a potential upside that you're seeing from now?
Are we talking about Gujarat Fluoro?
Gujarat Fluoro, Navin Fluorine, as well as SRF, 3 stocks.
Yeah, I see SRF has got a very interesting stock, and it's got a breakout on its long-term charts. And as long as the stock stays about 2600, I think this is a massive breakout. And I'd spoken about this with Neeraj in January 2020 when I was bearish on the markets. But the stock is yet to explode the way it's expected to do. And maintain an investment stop of about 2600 on a closing basis. I think the stock has got potential to even scale 5,000. So it's a horizontal consolidation and a breakout after several months. So usually when a stock breaks out in such a pattern, the move is on the higher side is equal to the horizontal consolidation erected upwards. So it's got a very huge potential here. Gujarat Fluoro, it's not that great a stock, and I would avoid it for the moment.
Is the view on Gujarat Fluoro. All right, significant development for Vodafone Idea, and this is in the case that they were arguing for AGR dues. The Chief Justice of India has said that the matter has been adjourned and the government is willing to hear the Vodafone Idea view. Danish Anand joining us to tell you about what emerged at that hearing today. Danish, tell us, what's the latest here?
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores. And considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest, penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who is representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees. So for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw H.G. Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mughal Rohatgi, who was representing Vodafone Idea, he agreed to this offer and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
Thanks a lot, Danish, for giving the views for Vodafone Idea. Just a quick check on the chart. Jay, Vodafone Idea, it has been a significant journey coming in, at least from 6.5 levels last month. As there has been some profit at the table. It's a retail favorite stock. So I would just like your view. If somebody is holding the stock, having a 30 to 40% gains coming in, is it the right time to do profit booking? We saw some profit booking actually happening as well in the earlier part of the day.
Yeah, that's right. That's a exact question you need to ask. And the stock is actually completing an important price structure under the Elite Wave model, known as a flat structure, which was expected to exceed the 2000 January high, 25 January high, and it's done that. And what it does over the next couple of sessions is going to be pretty crucial. The max, I would say, the stock can rise from current levels is capped. And I would expect the stock to not cross 11.5. So if it were to close below 9.5, 9.25, I'll be a bit cautious for people who've been long. That must be your training stops here.
All right. So that's the view on Vodafone Idea. Bear in mind that this is a stock that sees considerable volatility. So consult your advisor or think about the risk that you're willing to take before you dive into something like this. But let's talk about profit intelligence for the day. And we are taking a deep dive into Kotak Mahindra Bank. The reports of the numbers took place over the weekend and the stock is under pressure. In fact, one of the worst performers on the benchmark Nifty 50. And that's probably because of the anemic growth that the company or the bank reported, despite the fact that some of its metrics were actually pretty good, not least of which its margin performance. Vansh joining in to break down the numbers and to tell you what is likely the factor that the street has not liked. Vansh?
Well, thank you for that, Alex. So let's understand what the street, what's disappointing the street for the Kotak Mahindra Bank as per Q2 FY26 results. Firstly, it's the NIM. Now the NIMs have contracted for Kotak Bank. Now this is on the back of the decline in the yields and the change in the asset mix by the bank. Also, what we have seen is the provisions have remained elevated. And that has led to the profit growth being hurt for Kotak Mahindra Bank as well. Microfinance continue to see losses, which has led to the loan book contraction as well. If we talk about the credit card book, it has also declined on a 14% on a YY basis as well. If we talk about the unsecured loans, they constitute 9.2% of the book versus 9.7% in the June. So clearly the focus have been shifted to the secured part as well. Lastly, if we look at the retail commercial vehicle business, now the business is likely to witness continued stress as per management commentary as well. Now let's also understand what the brokerages have to say for Kotak Bank. Firstly, they believe that the stock is trading at an elevated valuations. So clearly this limits the scope for significant re-rating or upside for Kotak Mahindra Bank. They also say that the sharper NIM, the NIMs have been the fall in the NIMs have been sharper compared to the streets for the first half of FY26 as well. Lastly, they believe that the drag in the unsecured loan mix is expected to weigh on the growth in the near term for Kotak Bank as well. Lastly, if we look at the analyst recommendations, we have 48 buy calls for ICICI, 46 buy calls for HDFC, and only 28 buy calls for Kotak Bank, with a significant upside potential for ICICI Bank with 23% and just 10% for Kotak Mahindra Bank. So this is how the overall picture is panning out for the entire banking sector as well.
Got it. All right. Thanks so much for lining that up for us, Vansh. And let me go straight to you, Siddharth, on what you made of the numbers. You have a situation where the growth was weaker than the other two large private sector banks that have reported numbers. Would you say that you can look past that, or would you say that this is a good enough reason to avoid it or to even press the sell number? Siddharth, I think you might just be on mute.
Yeah, sure. I think, Alex, if you look at Kotak was a mixed quarter, and especially in terms of our expectations, it was broadly in line. The NIM contracted 11 basis points to 4.54%, but our estimates were about 4.51, so marginally better than our expectation. In terms of advances growth, I think it was pretty strong at 15.8%, led by growth in the business, SME, housing loan, as well as corporate advances. So I think we are willing to look past the current weakness, and we are seeing that what even the management has highlighted, that the NIMs are expected to expand in the coming 2 quarters, and with a higher exit rate in Q4. So that should be something that market should start liking. And we believe that the slippages that have declined on a Q-on-Q basis, PCR stood at about 77%. And with NIMs now the bottoming out and improvements expected over the next 2 quarters, I think the stock can do well. But if you ask me, is there a better choice between the large cap banks? As you rightly highlighted, some of these stronger numbers from ICICI, that continues to remain our top pick in terms of strong growth, in terms of valuations, and SBI figures in with a good growth and a lower valuation. So I think while we have a positive view and a buy rating on Kotak, there are better banks in the large size, the likes of ICICI and SBI, which is preferred over a Kotak.
ICICI SBI preferred over a Kotak from a fundamental view. Let's quickly just address the flashes at the bottom of your screens where Ashwini Vaishnav has come out and said that some of the plants under ECMS have been approved. 4 Keynes projects have been approved for PCBs, laminates, camera and modules. A polypropylene film plant of SRF has been approved. Sirma Strategic Ascent Circuits has been approved for multi-layer PCBs. And across 7 plants, it's an investment of around 5,500 odd crores that is expected. Let's just pull up SRF, Keynes and Sirma. 3 counters, no major moves coming in on a Sirma SGS right now. Let's put up a Keynes as well. You're seeing a mild spike that's coming in on this counter. So we're looking at an investment of around 5,500 odd crores over 7 plants which have been approved under the ECMS scheme. But apart from that, media stocks is what we need to address as well. And this is because of the government ad rate revision. They're planning to raise the print media ad rates by 26%. The approval for all of this is still pending and it will be effective mid-November 2025 post the Bihar MCC lifts. The first hike, this is the first hike that is happening since 2019, where that time the government had actually increased rates by almost 25 odd % on the back of which names like Jagran Prakashan, DB Corp as well as HT Media are seeing some smart moves in today's day of trade. Jay, very quickly, let's just take a quick view in terms of charts. Are you seeing further momentum on any of these names?
Yeah, HT Media looks like an interesting setup there. It's consolidating around the 28-29 mark. And, a breakout about 29 will propel the stock to a faster move. But it's just a trading call, not an investment call. The medium to long-term charts get a breakout only about 36. So but the stock, if it can break out 36, it will be a double bottom confirmation for the stock, and it can propel the stock even higher. So a short-term, trading call potential here, but 36 across of 36 would make it a slightly higher time frame holding call for it.
Well, that's interesting. But for our viewers, I just like to point out one important point. This counters in the media space, especially in the print related, they are low volume counters, and the newsprint prices, as per my channel checks, are on the higher side as well. So it might be a short-term trade, which Jay was speaking about. But Jay, what would be the BTST buy today, sell today strategy today, seeing the markets?
Yeah, I have BTST on Grasim. Grasim looking an interesting.
We might be having a little bit of an issue with Jay's feed. Jay, if you can hear us, buy today, sell tomorrow. What is the call today?
Yeah, by BTST on Grasim. Grasim at current levels looking quite interesting. It's breaking out on the short-term charts. Stop loss about 29.10 itself is good, but let's be a bit more conservative. Until a stop loss 28.99 is a better stop. So expecting it to touch 29.60 tomorrow.
Okay, so that's with regards to Grasim. That's an interesting one.
Top gainer on the Nifty.
Yeah, top gainer on the Nifty as well. Ola Electric is also very interesting, and this is on the back of the approved fundraise. I think the reason I want to talk about this is you're talking about a current market price of 52. And if at that price you're doing a fundraise of 1,500, it's way below the IPO price as well of 76 rupees. And I think that is what the street is not happy about. And the stock is seeing some bit of pressure. Now, the company has not really mentioned the reason of why they're doing the fundraise. And they already have a gross debt of around 2,000 odd crores at the end of the first quarter. So you have to take that with a pinch of salt. And the most minimal capex was what was planned for FY26 as a year. So when you put all of this together, I think where this is headed towards, why the fundraise is the key question. In fact, let's just take a quick question with Siddharth Khemka. Siddharth, Ola Electric fundraise 1,500 crores QIP, current market price below issue price or IPO price of 76. Is that what the street is not liking, or do you have another story around it?
So if you look at Ola, we don't have coverage, but I think last time around the quarter, the management clearly highlighted that there is no need for further capex and fundraise, and that is what the market had liked. I think that is one more disappointment. And again, as you rightly highlighted, if the dilution is happening at these odd levels, that is a bit of stress for people who had invested earlier, either at the IPO or at higher levels. So I think there needs to be a clarity in terms of the capex as well as the capital required in terms of the business. That is something that will give comfort to the investors.
Okay. There are a few significant buzzers, and point well made, Siddharth, on Ola Electric. A few small cap buzzers. I pointed out Bharat Rasayan before the start of trade today. Significant development, corporate action. There's going to be stock split as well as bonus issue. The stock is down about 7.5% or thereabouts. Alicon Castalloy. Volumes are 191 times the 30-day average, I think, if I'm not mistaken. Bharat Wire Ropes also seeing significant volume. You have Hatson Agro that is moving quite considerably also on the back of a quite considerable increase in the PAT number for the quarter gone by. In fact, at upper circuit continues to be at that level. I just wonder if Jay has a view on Hatson Agro, a very quick one if at all. If it opens up, would you suggest an entry at this point, or have you missed the bus already, Jay, in your opinion?
I don't think so. But the stop is slightly aggressive. The stop is at about 855 from positional trading point of view. The high it saw about 1040, 1497 in 2021. I don't think that's a complete high, and the stock needs to cross that to complete the price structure that started from 2015. So I would anticipate this to be a positional trade rather than a very short-term trade. But I think a new high is coming past 1400, 1400 in a few weeks to a few months time frame.
Well, thank you very much, Jay and Siddharth, for joining with us and giving your technical as well as fundamental perspective on the markets and the stocks. But it's a great day for the Indian markets in the second straight day where we saw 26,000 levels being breached for Nifty as well. Currently, it's near there, 25,980 levels, and even Sensex is showing a good up move. Nifty Bank comfortably above the 58,000 mark as well, and we saw a significant buying in the last 15 minutes of trade as well. Expected that this would be ending at day's high levels when I'm talking about the benchmark indices. Now, of course, let's speak about the actual heat map where the action is lying in the Nifty as well. Largely, we're seeing a sea of green. Grasim last moment, we are seeing the stock pushing up. That's up almost 3% SBI Life up almost 3% on earnings, and Reliance, that has been the main steady view of the day. Today's stock is up almost 2% in the red. If you look at it, largely this is Kotak Mahindra Bank, which has been dragging the Nifty banking index as well. That is where our focus will be. And now let's look at how the broader indices have fared. Let's pull out the advanced decline chart, and of course the small cap space, that itself we are seeing a slight betterment up move coming in just the last 10 minutes of the trade as well, but a very narrow range shifting towards the bull side. Now looking at the mid cap space, it's expected to end at the day's high levels, and the same story goes for the Nifty small cap index as well, and the alpha numbers are actually looking good, and there's a strong recovery coming from the day's levels as well. If you look at the BSE 500, Hatsun Agro stuck in upper circuit after their earnings, but eClerx Services, AB Real Estate also doing the trick. Stocks are up. Swan Energy, interesting pick, 4% up. Do remember Maritime Week is going on. We can see more announcements coming in the shipping space as well. Gujarat Fluoro down 3% SBI Cards also taking the brunt, and certain names we're seeing profit booking as well. Also, let's move out from the BSE 500. Now let's look at how the overall what to expect for tomorrow. And the first cues, of course, India Bulls Enterprises and Dhan Service merger would be happening, so that is something which you'll be watching out for. Shares to exit the anchor lock-in, there are certain names which I'll take. Shanti Gold is there, roughly 4%. And for fundraise, there are two important board meets happening: small cap Shriram Proteins, and in the mid cap we are having Aditya Birla Real Estate. But the question is, we are back to the earnings season. Adani Energy Company would be coming in with their earnings. Apart from these, larger names include Canara Bank twins, or you could say Canara Group twins, Bata India. From the tire space, we're having JK Tyre, Jubilant Ingrevia, K Fintech, and Sona BLW as well. Let's pull up more earnings which we'll be focusing on. TVS Motor, it's a very important earnings which we'll be focusing on. Adani Group stocks, Adani Green, Adani Total will be in our focus, and Premier Energies as well. Lastly, I'd like to point out the other set of earnings which are there in focus, and I think this list is enough. And of course, today the markets have also done really wonderfully well. And this is it from our show at India Market Close at NDTV Profit. Stay tuned.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. Viewers, Nifty, Sensex end near day's highs. Nifty ends a whisker away from 26,000 level, whereas Sensex jumps more than 600 points. Advance decline ratio was tilted in the favor of the advances. Let's look at the sectoral picture. That was sharply tilted in the favor of the green, with most sectors ending the day in the green. PSU banks, oil and gas and realty have led the gains. Defense, media and pharma were on the back foot and ended the day with a tinge of red. Hatsun Agro was buzzing away in trade after a stellar set of numbers in Q2. So the dairy major has reported a massive surge in its bottom line. Net profit for the quarter has skyrocketed by over 73%, marking the highest profit after tax growth the company has seen in the last 5 quarters. So this impressive performance was fueled by a robust top line, with the company achieving its highest revenue growth in over 3 years, or you can say 12 quarters. So more critically, the growth story is rooted in fundamental strength. Hatsun Agro saw strong margin expansion, driven by improved operational efficiencies and also better gross margins. IT major Coforge has delivered a mixed bag in its second quarter, though its results were broadly in line with street estimates. So the key takeaway here is that growth was overwhelmingly led by the travel vertical, and this was signaling a strong demand in that sector. However, the company has seen a modest slowdown in its core growth rate. So constant currency, that is the CC growth for the quarter, has clocked in at 5.9%, which is a noticeable dip from the 8% growth reported in the previous quarter. So on a positive note, the company's deal pipeline remains robust. Coforge has secured a deal win worth $514 million, which is slightly up from $507 million in quarter one. So this includes 5 large deals signed across North America and the APAC region, which should bolster the future revenues as well. Let's keep it going with the earnings. So it was the 11th straight quarter for data analytics firm Latent View Analytics. So the financial services vertical has delivered a massive 29.9%, that is, nearly 30% sequential increase there. Growth was also solid in the CPG and retail, boosted by effective deal execution. However, the margins were squeezed lightly by higher operational cost, and this is largely due to increased visa and marketing spends as the company invests for global expansion. Keeping going with earnings. So second straight quarter of the revenue has declined for Zen Technologies. Consolidated revenue for the quarter has tumbled sharply, and profit also shrank year on year. So the company attributed the muted top-line performance to procedural delays in order finalizations. This is stemming from the emergency procurement measures by the government. However, Zentech, has showed tight cost control, managing to expand its margins thanks to a 55% year-on-year drop in the material cost there. So the firm also reported that its R&D spends for the first half of the year are down slightly. Management remains confident, stating that deferred orders are still in the system, and they continue to maintain a robust order book of over 675 crore rupees. So that's about the earnings today, viewers. Let's shift gears and talk about some order wins that were in focus today. So HUDCO has signed a significant agreement with Jawaharlal Nehru Port Authority, that is the JNPA. So this pact is aimed at exploring and financing the infrastructure projects at the JN port, which is a key container port in India. So the total value of the projects covered under this agreement is estimated to be around 5,000 crore rupees. Let's keep it going with the order wins. Moving on to NCC Infrastructure. So infrastructure firm NCC has secured a massive new contract there. The company has received a letter of acceptance, or the LOA, from Central Coalfields Limited. The project is valued at a significant 6,828.9 crore rupees, and this involves the extraction and transportation of overburden and coal in Jharkhand. Next up, we have Vikran Engineering, which has secured a significant order from Illume Energy MH Solar 1. So the contract is valued at 354 crore rupees and is a turnkey engineering, procurement and also construction, or the EPC project. So it involves the development of a 100 megawatt AC grid interactive solar PV power project located in the state of Maharashtra. So the company has a clear execution timeline, stating that the entire project is scheduled to be completed within 12 months. So this win marks a major expansion of Vikran Engineering's footprint in the growing solar power EPC space. Next up, we have Vari Energies, which has announced a significant boost to its order book, securing new contracts totaling 692 megawatts for the supply of solar modules. Now, this massive order win spans both domestic and international markets. So the company has secured 3 major domestic supply orders for solar modules consisting of 220 megawatts, 210 megawatts and 140 megawatts. Further strengthening its global presence, a subsidiary of the company has also received an additional order to supply 122 megawatts of the solar modules. Now on to the telecom and digital infrastructure sector. RailTel Corporation of India has announced the cancellation of a major work order. So the order, which is valued at approximately 210 crore rupees, was cancelled by the client, the Bihar Education Project Council. So a RailTel, which is a Navratna PSU, disclosed to the exchanges that the cancellation was due to unavoidable reasons, though no further details were provided by the company. So this project was intended for the implementation of education quality enhancement under the PM Shri scheme. So the setback will be noted against the company's previously reported robust order book, which stood at 7,197 crore rupees as of June 2025. Now on to the infrastructure sector. GPT Infra Projects has successfully secured a major international contract. The order, valued at approximately 195 crore rupees, is for the detailed engineering, supply, installation, testing and also commissioning of a conveyor belt system. The contract was awarded in the Ivory Coast and is also part of the Phase 2 development works connecting SOCIM and TIPSP. So the project is scheduled for completion within a rapid 12-month execution period, and this international win is also expected to further strengthen the company's outstanding order book, which currently stands at 4,047.65 crore rupees. Next up, we have PTC Industries, which has hit a major milestone in India's defense manufacturing push. It has secured a landmark purchase order from the DRDO's Gas Turbine Research Establishment, or the GTRE. So the order is for the manufacturing of highly advanced single crystal ready-to-fit turbine blades, components that are critical to high performance and also aero engines, and a technology previously held by only a few global firms. Now, viewers, there's a big relief for Vodafone Idea today in the long-running AGR dues case. So the Supreme Court has adjourned the hearing, with the Chief Justice noting that the government is open to hearing the Vodafone Idea side. So Solicitor General Tushar Mehta said that any major move could actually affect the users and also the employees. So the centre will now reconsider this issue. SBI Life Insurance has delivered a strong Q2 performance, and they have beaten the estimates despite a dip in the profitability. So annual premium equivalent and also the value of new business grow, in double digits, while the net premium income jumps over 22%. So a better product mix and also higher non-par share lift the margins. So persistency ratios also improve, adding to the positive momentum. Next up, we have Kotak Mahindra Bank. It came out with its Q2 results during the weekend, and they have left the street underwhelmed. While the bank reported a sharp improvement in the asset quality and benefits from the lower slippages and also better recoveries, higher provisions dent the profit growth. So the microfinance segment continues to drag, and also the credit card book shrinks 14% year on year. Analysts remain cautious, citing limited room for a re-rating despite strong advances and also improved cost metrics. Reliance Industries has announced the launch of Reliance Enterprise Intelligence, which is a new AI-focused joint venture with Meta. So RIL will hold a 70% stake via its wholly owned subsidiary, while Meta will take 30%. So the JV plans to invest about $97 million to actually build and scale the enterprise AI solutions, with Meta bringing its cutting-edge research and also the Llama models to the table. Next up, we have Ola Electric, and its board has approved a fundraise of up to 1,500 crore rupees. So the company is planning to raise the amount via equity shares or convertible securities. While the reason hasn't been disclosed yet, the move actually comes amid a gross debt of 2,000 crore rupees and also a minimal capex plan for FY26. September's economic data is in. India's economy has gathered the pace in the second quarter of FY26 despite a volatile global backdrop. The Finance Ministry says the supply-side indicators remain strong, while reforms like the GST 2.0 and festive demand are driving the consumption and also the investment. While the IMF and RBI raising their growth forecast, the government remains optimistic. Now, in a major move to expand India's digital payments footprint, Paytm has now extended the UPI access to the non-resident Indians that are the NRIs, allowing users abroad to actually link their international mobile numbers for UPI transactions. So this means that NRIs in countries like the US, UK, Canada, Australia, Singapore, and the UAE can now send and receive money via UPI. So without needing an Indian SIM card, the feature is available for those who hold NRE or the NRO accounts with Indian banks that support UPI. So the update comes as part of Paytm's ongoing efforts to enhance the cross-border payment accessibility and also expand the UPI adoption among Indians living overseas. Next up, we have SpiceJet, which is, gearing up for a major leap in its winter operations. The airline says that it will run 250 daily flights during its winter 2025 schedule, which is double the number of flights it has operated in the preceding summer season, and also a significant jump from the last winter. So the expansion comes as SpiceJet inducts around 19 leased aircrafts into its fleet, and also, boosting the frequencies on major metro routes, and also opens new domestic and international connections, including non-stop daily flights to Phuket from Delhi and also Mumbai, and have added the connectivity to Rajasthan's top winter destinations. Singapore's refining margins have shot up sharply, jumping nearly 2,000% in just 10 days. So that's a massive turnaround, and could actually mean strong near-term gains for the Indian refiners like the BPCL, HPCL, and MRPL. So experts say that the spike comes as supply disruptions tighten the global diesel and gasoline markets, with sanctions on Russian fuel exports and also renewed geopolitical tensions adding the pressure for Indian refiners. Higher margins directly boost the profitability, especially for the standalone players that rely on the exports. Now in the jewelry space, P.N. Gadgil Jewelers has reported a strong festive season. Sales up 74% year on year. So gold has led the gains, followed by silver and diamonds. The company actually expects this momentum to continue via the wedding season, though the actual gold volumes have risen only about 10% as prices remain elevated. A strong export performance has given India's passenger vehicle industry a boost. According to Society of Indian Automobile Manufacturers data, exports in the April-September period have risen about 18% year-on-year, climbing to 4,45,884 units from 3,76,679 units last year. Now, leading the pack was Maruti Suzuki India, which has shipped 2,05,763 units abroad, which is a 40% jump compared to the same period last year. So utility vehicle exports have surged even faster, up 26% to 2,11,373 units, while van exports have jumped 36.5% to 5,230 units. Now on to some national news. Odisha and Andhra Pradesh are on high alert with a powerful cyclone named Montha is barreling towards India's east coast, and also the government in Andhra Pradesh has already swung into action to protect the vulnerable communities. Coastal districts are facing heavy rains even now. Senior citizens, pregnant women and others in low-lying areas are being evacuated into the camps. Authorities say that schools will remain closed and all the relief mechanisms are on standby. With landfall expected imminently, residents are urged to stay alert and also follow the official instructions. The Madras High Court has directed the Tamil Nadu government to draw up and publish a standard operating procedure, that is the SOP, for political rallies within the next 10 days. The move comes in the wake of the tragic stampede at a rally in Karur that claimed 41 lives. So the court said that interim conditions for event permissions will remain in place until the formal guidelines are finalized, and it also invited suggestions from political parties as part of the process. Officials emphasized that the new SOPs must address the crowd control measures, also permissions for use of highways, basic amenities, and transparent timelines for the approval, all designed to prevent the future tragedies. Supreme Court has raised serious concerns over wave of digital arrest scams where fraudsters impersonate law enforcement or judicial agencies and also threaten people with arrest via phone or video call. The court said that many of these crimes originate from abroad and are widespread across India. It's now signaling its intent to direct the Central Bureau of Investigation, that is the CBI, to take up all such cases, and also has asked the states for details of FIRs and resources for handling these cyber crimes. The Uttarakhand government is rolling out a new green cess on vehicles entering from the other states as part of its push for cleaner travel and protection of the Himalayan ecosystem. Under the plan, non-Uttarakhand registered vehicles will face automatic deductions via their FASTag wallet when they cross the state borders. So thanks to the ANPR cameras monitoring entry points, exemptions include electric and CNG vehicles, two-wheelers, ambulances and other essential services vehicles. So rates vary by type of the vehicle, and also the policy is expected to launch from December 2025. On to some global news now. President Donald Trump has announced that he might sign the final deal for TikTok's US operations this Thursday. He stated that he has received provisional approval from the Chinese President Xi Jinping and is expected to meet him later this week in South Korea. So the agreement would transfer TikTok's US business to American investors, addressing national security concerns over user data access. Officials from rival neighbors Afghanistan and Pakistan are meeting in Istanbul for a third straight day after failing to clinch a lasting peace agreement to stabilize their volatile border. The lack of a breakthrough comes despite recent fragile ceasefire agreed to in Doha on October 19th. The truce had temporarily halted the deadliest violence the two nations have seen since the Taliban seized power in Kabul in 2021. Clashes that killed dozens of people. So now, as diplomatic efforts stall, US President Donald Trump has jumped into the mix, repeating his offer to personally mediate the conflict between the two South Asian nations. US President Donald Trump has also inked a flurry of major deals at the ASEAN summit in Kuala Lumpur, seeking to counter China's dominance. The US signed critical minerals and also trade agreements with 4 key Southeast Asian partners. The pacts, including deals with Malaysia, Cambodia and also Thailand, aim to secure crucial supply chains and also chip away at trade imbalances, particularly following China's tighter export curbs on the rare earth minerals. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit for more news and updates.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has a have come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान.
Nifty Sensex end near day's high with Nifty closing a whisk away from 26,000. Sensex jumps over 600 points. Most sectors finished the day in the green. PSU banks, oil and gas and realty lead the gains. Defence, media and pharma were the top sectoral losers. Government approves 7 electronic component manufacturing scheme plants including Keynes, SRF, Sirma Strategic and Ascent Circuits. Investments of 5,532 crore rupees is expected for PCBs, laminates and camera modules and polypropylene films. Some relief for Vodafone Idea as Supreme Court allows Centre to reconsider the telecom carriers' AGR dues. CGI Gawai says any decision will have a direct bearing on Vodafone Idea's 20 crore customers. Larsen & Toubro is set to seal a $400 million deal with Maersk for shipbuilding and repair works in India. Orders to be executed from Tamil Nadu plant. This is an NDTV Profit exclusive. India Maritime Week 2025 kicks off with 500 exhibitors and 200 global speakers. NDTV Profit speaks to Mazagon Dock, Bharat Forge and LLT Precision, who showcase their defense equipments at the event. Lenskart plans to launch its IPO on the 31st of October with an aim to raise 7,278 crore rupees at a valuation of nearly 70,000 crore rupees. The price band is set at 382 to 402 rupees per share. Investor Radhakishan Damani commits a pre-IPO investment of 90 crore rupees. The India-EU FTA talks enter final leg as year-end deadline looms. Commerce Minister Piyush Goyal visits Brussels to meet his counterpart, while the EU delegation arrives in New Delhi to hold ministerial and parliamentary level talks. Finance Ministry says India's economy gained momentum in the second quarter of FY26. Growth outlook remains strong despite global uncertainty. Both IMF and RBI hiked their growth forecasts. Hello and welcome. Very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. So follow along. Let's begin with checking how the markets performed today. Benchmark indices traded higher today, rebounding from last Friday's pause in a 6-session winning streak. While Nifty closed above the 25,900 mark, the Sensex finished above 84,600 odd levels. The broader market sentiment appeared positive, with most sectors advancing in trade. PSU banks, in fact, emerged as a top performer, with gains led by Bank of India and Canara Bank. In contrast, Nifty Media was a top laggard, with Nazara Tech and Zee Entertainment posting the largest losses in that index. My colleague Puneet now joins us with a detailed market roundup of the day.
Well, it was a strong end to the Nifty 50 today, with the benchmark indices closing above the 25,900 level. It's a key one to watch because on Friday we slipped below 26,000 with rigor, to say the least. And while we were unable to maintain 26,000 as a key level on the Nifty 50, over 178 point gain on the Nifty 50 will continue and augur well for the market going into tomorrow's session. When you look at some of the key winners, SBI Life as well as something like a Grasim led the gains today for the Nifty 50. We also saw Reliance as well as Bharti Airtel were major gainers for the Nifty 50 in trade today as well. But overall, a positive session to say the least. When you look at the broader markets, both the mid cap and the small cap gained and were ended in the green as well today. We saw that overall participation also coming in for the broader markets in today's trading session, a trend that's largely been on the opposite side, to say the least. When you look at some of the other key winners, we mentioned that in the mid cap space, Bank of India as well as Bharti Hexacom were one of the key winners, while in the small cap space, we saw the IT players starting to get a lot of traction, and that was led by something like eClerx. Post its Q2 results, a really strong set of numbers which propelled the stock up almost 4% in trade today. Similarly, a positive trend was seen in something like First Source Solutions Limited as well. When you look at the broader markets in terms of sectoral allocation, something like a PSU bank, something like the Nifty Auto were also in focus. The PSU bank emerged as the top gainer in terms of the sectoral index. Bank of India as well as Canara Bank were some of the key gainers in that index, while the Nifty Media emerged as the top sectoral losers. That was led by Zee Media amongst others. We also saw the Nifty Realty gain for the third day, while something like a Nifty Pharma has actually fallen for the third consecutive day as well. So we are seeing mixed trends overall, but it's going to be a very important week for the market. We are seeing a lot of global factors like the Fed meet, as well as US and China also. The president is going to be meeting this week on the 30th in the ASEAN summit. So multiple key triggers in terms of the global markets will have an impact on the Nifty 50. But largely going into tomorrow's session, it is a earnings heavy week, so there will be multiple key factors that will pay out for the markets. But overall, a positive session to say the least, and a lot more action to be seen tomorrow.
Thanks for that market wrap, Puneet. Now let's take a look at a microscopic view on Coforge, especially after the company posted in-line numbers for its second quarter last week. In our conversation with the company, it clarified that its deal win momentum remains strong. The CEO and executive director of Coforge stated that the recent $500 million win is just the beginning, with more such deals expected in the pipeline. In fact, Sudhir Singh broke down the numbers of Q2 FY26 as well. Listen in.
Well, we've been at about 500 plus for a few quarters now. We believe $500 plus million should be more or less, obviously factoring in the occasional vagaries up and down, should be more or less the baseline that we should operate at for the foreseeable future. We feel very good about the order intake number because the large deal velocity and the large deal median size of the firm has been going up almost every quarter and of course every year over the past few years and quarters. So at this point in time, 500 we believe, and this was all organic, is a good minimum baseline for Coforge to aim for going forward.
Moving on, another day, another hit job falls flat. The Washington Post claimed that the Indian government pressured LIC to invest up to $3.9 billion in the Adani Group, a charge LIC now calls completely false and baseless. From multi-thousand crore bond deals to equity stakes, LIC says its decisions are independent, profitable and fully above board. My colleague Nisha Podar now joins us with a detailed report on the same story.
but let's look at the facts and publicly available data that is there to really see whether Washington Post's allegations have been hold true or not. First of all, they have said that Government of India has pressurized LIC's investment decisions in Adani Group and especially Adani Ports, which required over $500 million for repaying some bond or debt dues. Now, first of all, LIC has proactively refuted all these claims by Washington Post and also stated that their exposure to Adani firms is 36,000 crores, which is under 1% of their total AUM. The first big allegation of over $500 million of bond issue refinancing, that's what Washington Post has said, that it is for refinancing some earlier debt. And to that, the publicly available data suggests that Adani Ports had utilized that particular money for really buying back the bonds which were maturing in 2027 and 2029. Also important to note that LIC is receiving an additional profit with 1.26% of spread over 15 years GSEC. So that is a profitable investment coming in for LIC by way of this investment in Adani Group. Also to look at the big question that Washington Post really asked is Adani dependent on LIC for its fundraise and funding requirements? Well, debt from LIC is less than 3% of Adani's total debt. 50% of Adani's debt is from overseas investors. So that particular point gets refuted here. Other large investments that have been done in LIC, and is LIC really the sole investor? That also is one of the claims by Washington Post on Adani in this particular bond issuance. So is that of its investment decisions or general trends of decision? That is a big question to be asked. And here again, we have found out that LIC has been making or being the sole or the largest investor in many of the conglomerates and large companies in India, and the list is right here. Now, the second allegation also is of other international bankers and institutional investors, whether or not they invest in Adani Group. And there again, the fact suggests, and we have many instances in this particular year where Adani has received investments from many marquee foreign investors. So looking at the overall size of LIC's investments, and equity issuance, remember, could be just market trade by LIC by way of even corporate action and equity action of Adani Group, which has unlocked value in several of its verticals, starting from Adani Enterprises way back. So there again, by way of that, LIC could have held larger stake in many of the companies in LIC. But when it comes to large investments, top 10 investments of LIC in the large conglomerates or businesses in India, Adani Group does not fall in that. So a lot of these Washington Post's allegations fall flat when we look at the facts which are publicly available data on the listed companies of Adani Group.
Thanks for that detailed explanation, Nisha. Meanwhile, the news of Lenskart IPO viewers has been buzzing in the primary market. In this context, CEO and co-founder of Lenskart, Piyush Bansal, spoke about how he grew up admiring Radhakishan Damani but never really thought of approaching him for funding. He also commented on how Damani's investment into Lenskart is poised to be a priceless learning experience. Listen in.
Me and my co-founder Amit, we have had such a huge respect for Mr. Damani. I mean, we have grown up watching DMart stores, right? And you'll always find a Lenskart store near a DMart store. I'm telling you that little secret. And we have stood in that DMart store from morning to evening. And, when we met him just as an admirer, not necessarily to raise any money or request him to be part of the IPO, but the conversation hit off really well. And I think, and it was an honor that Mr. Damani decided to be part of our journey. That's all I can say. But yeah, I don't know if it is of prize validation or anything, but yeah, it's a huge honor for us, and there is so much to learn from him. I mean, he's definitely created. DMart is something that we always look up to.
And moving on, the government has approved 7 new electronic component manufacturing plants, including projects by Keynes, SRF, Sirma Strategic and Ascent Circuits. These initiatives are expected to bring in investments worth 5,532 crore rupees, focusing on the production of PCBs, laminates, camera modules and polypropylene films. Let's hear from Ashwini Vaishnav as he shares insights on these approved projects and how India aims to meet the growing demand for electronic components.
इलेक्ट्रॉनिक्स कंपोनेंट मैन्युफैक्चरिंग के 7 प्लांट्स आज अप्रूव हुए हैं, जिसमें मल्टी लेयर पीसीबी, ये एक मल्टी लेयर पीसीबी है इस तरह की, ये जैसे इसमें 3 लेयर्स हैं टोटल जो कि आपस में इंटरकनेक्टेड है। मल्टी लेयर पीसीबीज बनेगी, हाई डेंसिटी इंटरकनेक्ट, आप देखेंगे इसमें कितनी हाई डेंसिटी के सर्किट बनता है। ये हाई डेंसिटी इंटरकनेक्ट का, कॉपर लेमिनेट का, ये कॉपर लेमिनेटेड अल्ट्रा प्योर होता है जो कि पीसीबीज में काम में आता है। फिर कैमरा मॉड्यूल कंप्लीट जो कि कई चीज़ों में काम में आता है, इलेक्ट्रॉनिक्स के कई आइटम्स में कैमरा मॉड्यूल्स काम आता है। और ये कैपेसिटर है, इसके अंदर की जो पॉली प्रोपिलीन फिल्म होती है वो पॉली प्रोपिलीन फिल्म बनने लगेगी भारत में। मल्टीलेयर पीसीबी के प्लांट से करीब करीब भारत की जो रिक्वायरमेंट है 20%, 20% ऑफ दैट डिमांड विल बी met through this entire production. Camera module में around 15% of our demand will be met by domestic production, and laminate 100% of our demand will be met by Indian plant. अभी तक सारा import करते थे। Polypropylene film में अभी भी import करते हैं, उसका भी काफ़ी बड़ी मात्रा में इस प्लांट से उसका भारत की डिमांड मीट होगी।
In a relief to Vodafone Idea, the Supreme Court has allowed the government to reconsider its AGR dues issue. Chief Justice B.R. Gavai said any decision on this issue will have a direct bearing on the beleaguered company's 20 crore customers. He in fact cleared that he sees no problem in the centre reconsidering the situation and taking appropriate steps. It's important to note that as of now, the government controls 49% stake in Vodafone. But for more details on what's brewing behind the scenes, let's take a look at this report sent by my colleague Danish Anand.
Well, in a big relief to Vodafone Idea, the Supreme Court today permitted the central government to consider Vodafone Idea's viewpoints on the overall AGR dues. Let me tell you that Vodafone Idea had reached to the Supreme Court last month, in which it highlighted that how back-to-back fresh AGR orders are creating a huge impact on companies' financials, and moreover, the fresh AGR demand that DOT had furnished to Vodafone Idea, it amounts to somewhere around 9,400 crores. And considering the financial situation of the company, Vodafone Idea has reached to the Supreme Court seeking a relief on interest penalty and interest on penalty. But in today's hearing, which finally happened after 3 deferred hearings, SG Tushar Mehta, who is representing the government, he said that considering that how big Vodafone Idea is, and it has almost 20 crore users and it has thousands of employees, so for their betterment, they have thought that the government will be considering some kind of proposal. And later on, we saw SG Tushar Mehta handing over a document which is a proposal from the central government side to the Supreme Court. Mughal Rohatgi, who was representing Vodafone Idea, he agreed to this offer, and he obliged to Chief Justice of India that the top court is finally considering Vodafone Idea's situation right now. So all in all, if we see, it is a big relief for Vodafone Idea, as now the ball is between the Department of Telecommunications and Vodafone Idea, and it is expected that in the coming few days the government will be giving a proposal to Vodafone Idea, and then we will come to know that what sort of money will Vodafone Idea will have to finally pay to the central government.
Let's now shift focus to one of the largest maritime gathering here in Mumbai, the India Maritime Week 2025. Now, this edition is themed Uniting Oceans, One Maritime Vision, and is organized by the Ministry of Ports, Shipping and Waterways in partnership with the Indian Ports Association. Highlighting the gravity of the Maritime Summit, Home Minister Amit Shah said about 2/3 of the world's trade and 90% of India's business occurs through the Indo-Pacific region. Emphasizing on India's preparedness to connect its maritime strength with the rest of the world, the minister said India targets to be among the top 5 shipbuilders in the world. Let's listen in to a brief portion from his address at the summit.
हमने लक्ष्य रखा है कि दुनिया में शिप बिल्डिंग इंडस्ट्री में हम टॉप 5 में भारत होगा। नए मेगा और डीप ड्राफ्ट पोर्ट्स का निर्माण हम कर रहे हैं। पोर्ट डीलिंग में 10,000 मिलियन मैट्रिक टन प्रति वर्ष का हमने लक्ष्य रखा है। पोर्ट ट्रांसपोर्ट को पूरी तरह से डिजिटाइज कर लिया गया है और इसके साथ ही भारत इंडिया मिडल ईस्ट यूरोप इकोनॉमिक कॉरिडोर, ईस्टर्न मैरीटाइम कॉरिडोर, नॉर्थ साउथ ट्रांसपोर्ट कॉरिडोर जैसे कनेक्टिविटी प्रोजेक्ट से भी अब जुड़ चुका है।
Let's now get you a glimpse of some stalls our reporters visited at the Maritime Summit today. First up, my colleague Charu hit the mic at Anand S. He's a representative of Kalyani Strategic Systems at the summit, which is the defense wing of Bharat Forge. In their conversation, Anand showed us their flagship product, that is Mine Reconnaissance underwater vehicle that can detect underwater mines with its high-end technology. Let's take a look at this report.
Can you just explain to our viewers this flagship product of yours? What is this? What it does?
So this is Mine Reconnaissance Vehicle. It's an AUV. So this actually detects if there is an underwater mine, and then it can clear the ship pathway for the ships to come. So, and we already have this product in service with the Indian Navy, and this is one of our flagship products. So coming to these two products, this is called EUT, Expendable Autonomous and Expendable Underwater Target, and that is a mobile target emulator, MTE. These both are for ASW, which is anti-submarine warfare. And this means it acts as a decoy for incoming torpedo, which is an underwater missile. So your ship can deviate and this only will get struck.
My colleague Charu also covered the stall of Mazgaon Dock Shipbuilders. There she spoke to Binay Kumar Sinha. He's a general manager corporate planning of the company. In their conversation, he spoke in detail on the efficiency of its three key products, which are Vishakhapatnam class missile destroyer, Scorpene submarine P-75, and the ships being built under Project 17A. Let's take a look at a brief portion of their chat.
This company journey started in 1774, incorporated in 1930 and taken over by Government of India in 1960. So far, after taking over by Government of India, we have built more than 806 vessels, which include 31 capital warships and 8 submarines of 2 different types. This is one of the flagship platform for us, destroyer, which can be built only in one shipyard, MDL. Destroyer and conventional submarine. These two model is built by Mazgaon, and that can be built only by Mazgaon.
So you have some patented technology over it, or you have the tender to make these products solely?
No, it's a customized product as per the Navy requirement. What Navy wants, they give the design, and we as a shipyard procure the item, integrate it and deliver it. And finally it is getting commissioned and serving the nation.
सर एक ये प्रोडक्ट बनाने में आपको कितना साल का वक्त लगता होगा?
Starting first vessel is taking more than 6 years, and subsequently every year we are giving. Like this Visakhapatnam class is having 4 vessels, so we have delivered consequently every 1 year. Every 1 year once.
And कितने आपने बना दिए हैं already?
Visakhapatnam class we have built 4 and all delivered to Indian Navy. Even we have completed guarantee period and last ship guarantee period we are serving.
India and the European Union are in the last lap of finalizing a trade deal ahead of the year-end deadline. Negotiation teams from both the regions are about to carry out discussions with their respective counterparts. Let's go across to our senior correspondent Rishabh Bhatnagar for more. Rishabh, what's the latest that you're picking up on this trade deal?
Right, yet another very key free trade agreement that India is about to sign is the European Union Free Trade Agreement, and this is something that both sides are working towards. Remember, the deadline for this was the year end, and talks have entered the final leg as we're now just about to enter November. So just about a couple of months left. And what we're seeing is that negotiations are picking up on both ends. You have the Union Minister Piyush Goyal, who is in Brussels in Belgium, meeting his counterpart Maros Šefčovič. And what they will be talking about is, of course, giving all these trade negotiations. About 14 rounds have happened between India and the EU. Now what is required is more political guidance, more political direction, a strategic impetus that both these leaders will be providing. While that's happening in Brussels, you also have very key members of the European Trade Committee come into Delhi and meet a lot of parliamentary leaders. You'll have diplomatic meetings happen there, and also their meetings with industry associations like the Confederation of Indian Industry. So you have two-way visits that are happening. Remember, of course, earlier this year we heard that the final negotiations that have entered, this will be the final leg that these negotiations are entering. Remember, only a couple of months left till year end. What we're seeing is that there are certain pending issues around market access, around non-tariff measures, as well as certain regulatory cooperation issues. Those will be a part of the discussions that will happen over the next couple of days, and that is something that we will have our eyes peeled on.
Rishabh, stay with us. According to Finance Ministry's September economic review, India's growth has strengthened amid global uncertainty. What does the report say exactly? Could you take us through the key highlights?
Right, some few interesting insights that have come in with regards to the Indian economy, especially in the September monthly economic report. A few key headlines that we've picked up is the fact that the economy has remained resilient in Q2 of the current financial year as well. That is something that the monthly economic report talks about. What we're also seeing is that in the FY26 for the overall year as well, the resilience looks good. It looks set that the economy will be growing and not degrowing in the current financial year. What we're also picking up is the fact that the reforms that we're seeing in the economy, like the GST reforms that came in with the rate rationalization, slabs coming down, as well as the rates itself also coming down, those are the sort of reforms that will continue to support growth and also help in the face of various external factors that are upsetting the economy, such as the US tariffs. And it is reforms like the GST reforms will help cushion the impact of such external factors that are impacting the economy. What we're also picking up is the fact that there are certain global uncertainties. They will continue to pose downside risks. But what is interesting to note is that the services sector, that remains very strong. The industry itself is maintaining its growth. What we're seeing is the fact that you had the IMF also come up and they also upped India's forecast to about 6.6%. RBI sees it at roughly 6.8% GDP growth. And what we're seeing is that for the overall year itself, for FY26, that the Indian economy will grow. So all positive signs coming in, even in the face of geopolitical as well as global uncertainties coming India's way.
Well, on that positive note, it's the end of this edition of Profit 360. Do stay tuned to NDTV Profit for more news and updates.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
Hello and welcome to KYC. I am Sharad Dubey and with me is Anushi Vakharia. And the company on KYC's radar today is ProStarm Infosystems. This company was of course recently listed. Not much data regarding the company, but yes, we have seen the overall research happening and there's a lot of questions regarding the stock itself. Recently the stock was listed. Anushi, I think it was the June month when the stock was listed, right?
Around a 19 to 20% of a listing premium is what we had seen that time. Yeah.
Well, the question remains is why are we actually getting this company?
Right.
There are key concerns, of course, for the investors and maybe the prospective investors. The first question is how are the order book trends or the client confidence looking like? That seems a decent question to start with, but then of course as we peel through the onions, there are some questions which will be raising some eyebrows. How will the company stand against its MNC giants? And of course, we'll be discussing about the company as well going ahead. But the new foray, battery energy storage system, that's like the mantra of the entire industry right now.
All of these companies,
everybody's talking
everybody's
about, going into this
space.
Yes. So let's see how much it's truth and how much it's executable. Higher debt levels. After IPO also the debt levels are at the higher levels. So we need to ask, where's the progress of this debt reduction? So these are some key questions I think which we will be actually looking out for. And of course, lastly, what is the actual moat of the company? Company is doing 2 or 3 announcements. Where does the company actually stand? But let's just give our viewers a flavor of what the company is all about. So of course, the company, they have run advanced UPS systems, lithium-ion battery and end user computing. The numbers, the jargon, it's very technical. We'll try to decode it for our viewers in a simpler manner. And this is a big announcements coming in. They have around 750 customers, 1 lakh installation and 3 operating manufacturing facilities and maybe one facility will be coming online in some months as well. Key competitors, these are very big global names, Anushi. Schneider Electric, Vertiv, Delta Power Solutions, their size is also very huge. But there are certain questions. I think I would like to just ask, what is end user computing? A lot of viewers are asking me, Sharad, what is it, this company all about? There are so many new things coming. Can you just decode that jargon?
Right. So, we've already spoken about the power side of the business. This is another area that the company has been increasing its contribution to. It's around a 94 crore of a market that we are looking at in comparison with about 2 crore last year. What it essentially does, it delivers end-to-end IT hardware solutions. So this includes all your notebooks or desktops or all-in-one systems as well. So it's basically reading side of a setup that we are looking at. So that is on end user computing. But just a little bit about the IPO as well, if you're talking about that, we already spoke about it, that they marked an entry in June 25 and they came out with a total issue size of about 168 crore. This is an entirely fresh issue that we had seen. Proceeds to be utilized towards funding working capital requirements of the business, along with that for repayment of debt also. Now that amounted to something around 18 crore or also. And of course, the other would be to look for more inorganic growth opportunities as well. So we'll be quizzing the management about the last two questions, especially about the debt repayment, also about how they have deployed these IPO funds so far. But let's take a look at the FY25 business mix as well. So if we are just drawing that on board, manufacturing power solution products, that makes up to 35% of the mix. Third-party power solutions and other products also 32% of mix coming from here, while solar EPC contracts and value-added services see about a 6% of contribution. Now with most of their order book shifting towards the BESS side of the business, it's interesting how this would change going forward, right, Sharad?
Correct. And if you look at it, the numbers, if you are adding up and if you're thinking it's 100%, it's not 100% because other services are also there, other revenue segments are also there. That's why it has been put up. So we are seeing a variety of businesses the company is doing under one head. Now, of course, the question arises is the manufacturing plants. I would just like to, go faster. Pune plant, they are having a UPS system, while they have a second plant for the solar hybrid inverters. And lastly, there is a lithium ion battery pack as well. So futuristic manufacturing plants, 3 are operational, 1 is in the offing. But let's get back to our show. The rating parameters, Anushi, that's the most important thing which our viewers actually look for. And if you look at it, we are having income statement, balance sheet, cash flow, return ratio, shareholding, street trade, valuation, and outlook. And out of these 8 parameters, we will be giving the numbers so that you get a clear picture, a 360-degree analysis of the company, and later on the management will also be coming in. So we start firstly, Anushi, what do you like to say about the income statement? What are your views on it? They look prima facie decent.
Yeah, so what we are looking at is an overall decent set of numbers in terms of where the revenue growth is concerned. It's a 26% of a CAGR growth that we are looking at over the last FY22 to 25. If you are taking those fiscal years in account, while margins also in these particular fiscal years have ranged between that 12 to 14% of mark or so, the question would be, what's the kind of sustainability that we'll see in terms of the margin profile, considering the first quarter we did see a dip in terms of how the margins have panned out. Net profit, a 36% of a CAGR growth that we're looking at. So considering the previous fiscal's performance, we've given this one a thumbs up, right?
Well, yes, but of a balance sheet, I do have some apprehensions, Anushi, especially if you look at the debt numbers. That number has not reduced, and of course, we will be quizzing the management is after getting the IPO proceeds, when will the debt start going down? What's the timeline? But the numbers have spiked up. It's almost up 50%, 67 crores of borrowings coming in. Not much to look at the book value, but the cash and bank, that's an area of concern for me. If you're looking at a big size, you need a good, decent cash and bank balance as well. It's a high working capital intensive business. More loans will be coming in, but the liquidity ratios need to shore up. It's such a big size of a company. You're just having 2 crore cash and bank balance. So that raises some questions as well. From my side, Anushi, it's a neutral.
Right. So for cash flow, we have, accounting for all that we spoke about, we've given cash flow a thumbs down, because if we just see the previous 3 fiscals, a negative cash flow is what we are looking at. Now the business wants to utilize towards, is expanding in terms of how they want to utilize their working capital requirements. So if there is improvement in terms of the management commentary on that, that is something that we should be watching out for. But considering the EBITDA and the net cash flows also, it's almost negligible that we are seeing. So far, for now, we've given cash flows a thumbs down on that basis.
Well, of course, so it's basically even Steven still now. We look at the financial statements, but return ratios, Anushi, that's on the higher side. I would like just point out the ROC numbers. That's for FY23, it was 34%. It's 28% and 25%. So it's kind of actually going down. Now, of course, we will be quizzing the management. Is there a extra balance sheet pressure? Whenever these numbers come, there is a pressure on balance sheet, whether it's debt or it's over expansion. That is something to look at. ROE numbers also, you look at it. It was 40%, 32%, and now you see there is a slight downtick of 30-odd%. Net, the return ratios, however, still, if you look at the industry average, it's still on the higher side. And let's give some time to the company as well. It's just, just been June is the month which Anushi was talking about when it was the listing. So we should need a much more better data to actually understand and give us our ratings. But initially, for the time being, in the industry itself, whatever limited data we have given a thumbs up here. Anushi, what would be there for the shareholding patterns? I know it's just 2 quarters of actually seeing the data, but something is there, right?
Yeah, before I just go to shareholding, a quick point about return ratios is also that we are looking at this dilution because of increase in the equity capital as well. Now, since there was IPO in picture, so the base has increased. So from now on, how the ratios would be sustained is something that we should be looking out for, because if you just look at prima facie, the 25% to 30% number, that seems on the healthier side, as Sharad just spoke about, that versus the industry average. But quickly coming to the shareholding part, we just have 2 quarters of information as of now. While promoter stake remains healthy at 73% odd level, FII and DII stake has gone down considerably from 4% to almost 1% of a ratio is what we are looking for FIIs, while DIIs have also offloaded their 2% stake to about just 0.7% now, while the public shareholding has increased to about 26%. So more time awaited for this particular piece of information going forward, right?
Well, yes, Anushi, but the most alarming part which I saw is both the institutions, their stake has come down below the 1% mark. That means it's technically an exit. And of course, as we go forward, there will be a lot of months where lock-ins will be coming in.
Right.
So we'll have more of these exits likely. And if that happens, we see the retail position going up. And whenever there's a lot of retail position going up, it becomes a distribution kind of a move. And that is why we are I think for shareholding, you have given a down, thumbs down as well. But moving on, the second last parameter to focus on, that's the street cred. Anushi was speaking about the recent IPO performance. And if you look at the company itself, on listing day itself, it came at 120 rupees. That's more than 10-15% odd listing gains as well. Currently, since listing, the stock is up 56% and there has been a sustained buying and support. Anushi is coming from the retail segment. That's a very interesting thing. So net, I would give a neutral rating on this because the timeline is not there. So that's why I would suggest let's keep it neutral for the company. But there is a last parameter which you look at. What would that be?
Well, let's talk about valuations. Is this the right time to buy or enter? That's the question we should be asking. Now, if you just look at the price multiple, 25 times versus its peer, which is Servotech Renewable that we are looking at, there's a vast difference that we are looking at, 25 times versus 84 times. Now, what is the kind of growth picture, the cash flows, the debt profile, all of these have to be accounted before we just look at this one multiple in particular. But for this metric, we've given it a thumbs up, right, Sharad?
Well, correct. And I think let's revise the entire report card. What our special show is there, what our rating numbers are there. If you could just get our ratings in income statement, we had given 1 positive, it was balance sheet largely neutral, cash flow on the negative side, we've given a thumbs up for return ratios, and going ahead, let's look at the shareholding portion, that's on the negative side. Street Kit largely neutral, but valuations still favorable as compared to its peer. Outlook largely you could say it's neutral, and I'd just like to point out the new segments they are entering, that is something Street will be watching out for. Currently the KYC final rating that comes in at 4.5 out of 8. So the company needs to prove more, they need more time, and of course they are doing so many things at a single time. So of course the time will say, and how the prices move. But overall right now, Anushi, the retail is holding up the stock.
Right. Well, so that is what we are seeing for Prostam right now. But with that, let's welcome in the management as well. Ram Agarwal, the CEO and whole-time director, is with us to talk to us about the results that we are looking at. Thank you so much for taking out the time to speak to NDTV Profit. I just want to start off the conversation. You recently had your IPO, you had the proceeds. Now, what we are seeing is that in the last 3 fiscals, there have been negative cash flows. Will this improve from this FY26 period onwards? My first question is regarding that.
Yeah, namaskar. See, first of all, thanks for having me here. I would like to say that our negative cash flow has improved in last 1 or 2 financial year, and it will substantially come down by next financial year because we are working hard on it, and it will definitely will improve further.
Okay, so just want to take this in account that what is the kind of debt picture that we are looking at, because if we just see the FY24 to 25 value, we've in fact looked at an increase in terms of where the debt number is concerned. So just want to understand your overall plans for debt reduction. You already had a plan of around 18 crore of debt reduction in your IPO proceeds as well. So how have you deployed those IPO funds? Can you give us an update on all these key parameters?
See, our debt ratio has come down substantially. As on today, our cash fund-based limit used is only 7 to 8 CR. Our major fund debt is used against non-fund-based, that is bank guarantee. It is around 75 CR as on date. Whatever IPO receipt we have used, we have paid 18 CR for one term loan debt, and all other fund has been used for our regular cash flow, and some has been parked for using against this acquisition and the capex investment.
Well, that's pretty interesting. You mentioned the debt and of course the overall interest rate costs and how things will move ahead. Anushi had asked. But one more question remains is, and your company largely the revenue numbers, when we and Anushi were checking the investor presentation, that was ranging between 80 to 85%. So the company has a huge exposure to the government segment. Now there are problems of execution comes, payment comes. So where is company positions in that, and how is company actually helping itself out or safeguarding itself when it comes to the B2G orders?
See, I'll tell you one thing. Our product is a last mile product, is a capex product. So we generally bill at the end of the project. Generally it is happen at the end of quarter, end of the financial year. So in the balance sheet, the number goes up immediately. But if you see the last 2-3 quarters, the collection is happening. Yes, there is some delay in the execution, in the collection of the government, but there is no any bad debt. First. Secondly, going further, we are working hard on increasing our business portfolio, and if in this current financial year you will see substantially rise in the private sector. We are focusing more on the product side, where to increase on B2B business in the current financial year, and overall the number at the end of the quarter, at the end of financial year, you will see a good change in the proportion of the breakup of the sales.
Ram sir, if you could just give us the breakup, roughly I think it's 15%. So will that touch around 25 to 30% at the end of this year? If you could just quantify.
Yes. Minimum. It should be minimum. I can't give the exact number, but it will be
range will be fine.
Above.
20% above. Fair enough.
Agarwal, just want to get, because with this overall capacity additions that you have in plan, what's the kind of outlook that we should be building for FY26 in terms of top line as well as margins? 26% of a CAGR is what we've seen in the previous 3 years. Is that expected to sustain, or do you see a further uptick also with the addition of more of these segments going forward?
I tell you, I can't give the actual numbers to you. I have some limitation. But if you see our last 3-4 year growth and our top line and bottom line, if you compare those for last 3 to 4 years, I can say you that next 2 to 3 years will be much better. We are working very closely on the reverse integration in our manufacturing facility, and lot of new product is coming up in the UPS and inverter, which will add up a new revenue model, new revenue segment for us. So it will overall increase in the size of the manufacturing capability as well as the manufacturing product sales in our overall portfolio.
Okay, and what about the margin profile? Because, in the previous 3 fiscals, it's been in the range of 12 to 14%. But in the first quarter, it came down to 7%. So just want to understand in terms of the shift in terms of margins.
Quarter-wise, I can't comment. There are many factors where quarter-wise I can't justify. But when you compare the financial year number, it will be totally different. And I'm with very confidence, I can tell you that it will be better than last year.
Okay.
That's a pretty interesting focus on that. But of course, main thing which of course the investors have been asking us is to ask about the order book. So suppose this order book status, what's the actual breakup like coming in, to give us more clarity? And also before that, can you just explain us what this end user competing segment means? There seems kind of in the investor community that what this business is actually there, because significantly now the orders have started coming in this segment. So could you first, just for our sake of our viewers, just define this segment, what it actually is, and then we'll go ahead with the order book story.
See, end user computing is nothing but an e-governance project of the state and central government, where we have our own product like power conditioning equipment. We call it UPS, inverter, whatever. So earlier we used to quote to the partner where they bid for the project, and in some cases where we are qualifying, we are justifying our presence, we are bidding directly with in few projects just to gain credential, and it becomes a business factor for us in the future. Last year, if you see, we have done one end user computing project where our margin was very low. But because of that, we are getting qualified for a large project in the current financial year, where our bottom line is fairly good. I can't disclose that. It will come up in the financial year number, but it is much, much better than last year. So it is just to add on a vertical. We are not going out of our domain, that is power sector. Here, UPS plays a key role in this IT computing sector. So we are taking the other product and doing the integration and supplying, giving a one solution to the government, where we are leveraging our infrastructure, our service network, our capability, everything. It's not just a supply, it's a commissioning, installation, commissioning, and the end use service for the 3 to 5 years. It gives us revenue for 5 years also, as an AMC.
So this new segment gives you a revenue visibility of 3 to 5 years. Viewers, please note this, because a lot of queries had come for this business itself. But order book, that's what our last discussion was, Ram sir. And order book stands at roughly 284 odd crore rupees, and annual status is roughly 11 crores. Now these new order inflows, what is the guidance looking like? And if you could just break it down by sector to sector.
Give you the actual number as on date.
Yeah.
I'll give you actual numbers on date.
Sure.
Actual number order in hand is around close to 1100 crore, where we are likely to bill minimum 300 crore in this financial year, minimum. And out of this, apart from this 1100 crore, we are having our bidding, which is under evaluation, is close to 1000 crore. So our numbers are very pretty on better side, on upward side, and at the end of the financial year, we are very hopeful we will have better top line and bottom line compared to last 3 financial years.
Okay, so that's on the order book that we are looking at. Now coming to the main segment, that's the battery energy storage system. A lot of the industry players are, increasing their focus towards this particular segment. Want to firstly understand what is the competition scenario like? You're already setting up huge capacity plans in Haryana as well. So firstly on the competition side of it, and second, when will this start, contributing to the revenue? If you can help us with the utilization levels and that as well.
I will discuss BESS as a overall. BESS in India is totally a new subject for everybody. Anybody doing any tall claim, I can't comment on that, but it is a new subject for everybody in the market. Even for us, it's a new, but being as a power industry, as an electronic industry, we are into for last almost close to 20 years. So as a power electronics manufacturer, we have a better stand in this BESS overall. So in our Haryana manufacturing plant, we are focusing on manufacturing 1.2 gigawatt capacity, if you talk of the business, in a business case, how much business we can do from the manufacturing facility, there's a possibility of doing 1200 crore billing from this Haryana facility once we start using the facility more than 50% or close to, you can say, 80%.
Well,
This
that's,
is
please continue, sir. Yeah.
This is what we are targeting from our Haryana plant as a OEM of the best. Secondly, the project what we are having in our hand, that is Bihar government and the Karnataka government. This is under the active processing. We are the designing and all agreement, everything is done. And we are targeting by next financial year, it will be commissioned and our revenue will start coming in.
Ram sir, I just have a follow-up question on the BSS segment. The revenue will start coming in, say, in the next 18 to 24 months if the plant gets commissioned in 12 months. So it's a wait period of 24 to 36 months?
No. We have mandate of doing within 18 months, but we have a target within self-target to do it within 12 months.
Okay, so there's an internal target for BSS. Okay, sir, this is a strategic question for you because I have been reading about your peers. Your peers are basically global players. Schneider is also there. All these players are there. But what sets you apart? Especially the question I'm asking you is because you're an Indian company, you're an inborn company here. Credentials at times matter also. You're getting almost 90% of your orders only from the government itself. Private market space, when you go, there will be more competition from the foreign majors. How will you differentiate yourself?
Tell you, there are two type of sectors in the market in India, tier 1, tier 2. I term this slide as a tier 1. We term our Indian companies in tier 2 sector, and we are among the top 3 in the tier 2 sector. As an Indian company, as a company size, we are too small compared to this giant. But as a product, we are competing, we are capable of competing with them. We are matching the all technical parameters, specification of the product. And I'll give you a few examples. Like recently, we have taken one order from Delhi Metro, from airport, from defense. This is something where there is an entry barrier for the Indian company. Only the multinational company can enter into this segment. But we are well placed now. As we have access to the technology, we are digitizing our complete internal procedure, internal activity, our operations. And the last mile reach is the most important for us to get further go aggressive in the market compared to MNC, because those people work so they are dealer partner. We want to go all out from our own network what we have today.
Right. So just considering all of these capacity additions that are happening, and we'll see that flowing into your top line from the next 2 years onwards or so, I want to understand what's the kind of capex plan that one should be looking for from your company, and would there be more fundraising for these capex requirement?
Yes, we are having a very good increase plan in the future. Yes, capex planning will be there, fundraising will happen, and by when it will, I think by next financial year definitely. So once this plant is active in Haryana, and once we start getting the rollout, I'm sure we'll go for the further expansion, for which definitely capex will be required.
Well, thank you very much, Ram sir, for taking out your time and talking about your company's growth plans, and best of luck for the future. Well, moving ahead, that's all, folks, for KYC today. And thanks for tuning into our show only on NDTV Profit. Stay tuned.
we unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ये बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. If you're in Mumbai, then you're probably wondering why it's still raining at the end of October. And you'd be forgiven for leaving the house without an umbrella. It's one of those things, and so therefore, if you're caught in the rain, then you can't really complain about it. But health insurance is not like that. The problem is, with health insurance, a lot of people realize that they need it too late, often when they don't have it and they're faced with a problem. Corporate insurance is the one thing that you can bank on. And the point is that a lot of people tend to depend on only that. Today we're going to talk about what it covers, how much it usually is, whether you can bolster it, who all can be covered, and how much you should ideally add with your own personal insurance when you do have that corporate insurance policy. Aditya Shah, who's the founder of Hercules Advisors, joining me now. Aditya, thanks as always for taking the time. Let me ask you this. In your opinion, do most people, from your experience, who are in the salaried space almost always depend on corporate?
Definitely, yes, Alex. By rule, Government of India has mandated more companies who have more than 10 employees or a certain turnover need to have a corporate health insurance for their employees. The government of India also gives them tax incentives in the sense that it is treated as an expense for the company person. So most people don't care about the insurance as such. They believe that corporate insurance, they have corporate insurance, so it is more than enough for them. But the reality is far different from what they perceive. There are so many terms and conditions in a corporate health insurance which are good for them, but there are so many terms and conditions that are bad for them as well. So one needs to have a holistic view before entirely depending on the corporate insurance.
Now, I don't want to talk about just this. I want to talk about personal insurance as well. But while we're on the subject of corporate health insurance, what is the difference between some of the services that are provided? Because it's not the same. There are some places, for example, where the policies are not necessarily the best, right? Aditya, for example, you could have a co-pay requirement where you pay 30% and the policy covers 70%. And so you end up shelling out quite a bit depending on the medical costs.
Definitely. So, unlike a personal health insurance where you can pick and choose, the terms and conditions of a corporate health insurance will depend on your company's budget. The higher the budget, you will get better terms and conditions. But in today's age and world, companies are trying to cost cut, and because of cost cutting, there can be room rent limit of 1 or 2% of your sum insured in your policy. There can be a co-payment, which means you share the bill with the insurer, or there can be supplements on treatment of deadly diseases like cancer, which have recurring costs of treating them. The sum insured can also be really very low. Some companies offer 3 lakhs, some companies offer 5 lakhs, some companies offer 10 lakhs. So it is a wide range of cons basically, where terms and conditions of corporate health insurance must be examined really very carefully before depending on them. Mind you, companies like TCS have an excellent corporate policy where they don't have any supplements on treatment of diseases or a copay or a room rent limit. However, companies like TCS end up paying a premium of 50 cr or 50 lakhs or 1 cr, which is affordable to them. Not many companies can afford this kind of a premium deal.
And it's an important point that you're making. So there are certain benefits as well, Aditya. Let's not rule them out. So let's list out both the benefits as well as the drawbacks. First, the benefit that I see is that you don't have to wait. There is no waiting period for the treatment of any diseases, right? You could have a lifestyle disease as a result of which you could have an admission, but that will be covered under corporate policy. Is that right?
Absolutely. So there are both pros and cons. If you talk about the pros, a simple thing: if somebody's parent has contracted a critical illness like a kidney disease or a cancer disease or a heart disease, they will not get a new personal policy, but they will be covered on their corporate policy from day one. So the biggest pro of corporate health insurance is you get day one cover for each and every kind of a disease which is not available on a personal health insurance. Second point is they are highly subsidized. Corporate health insurance is highly subsidized. Mostly the company pays a majority of the premium and the employee pays a minority of the premium, which could be 20-30%. Again, there are no medical checks as such while issuing the policy. So these are the 2-3 benefits of a corporate policy per se. They are cheap, day one cover for many whole host of diseases, and finally senior citizens can get those policies really very easily.
When you have the option, Aditya, of bolstering your corporate health insurance, which I think a lot of companies do allow you to do, of course, it is out of pocket for you. You can choose to pay that additional premium. Should you go for it?
Definitely, yes. We advise all customers to have a top-up. If the company is offering a top-up by paying from their own pocket, what it really does is that it bolsters your sum insured. Mind you, today, if you go to the hospital, 5 lakh is used up within 2 or 3 days. or 4 days of hospitalization. And if it is an ICU stay, 5 lakh is absolutely nothing. So generally, let's take an example of TCS. I'm taking an example of TCS time and again because their corporate policy is an excellent corporate policy. They do give an option to top up to 25 to 30 lakhs depending on your stay in the company. So we advise customers to take the top up. Even the top up is a little bit expensive. That will help you get a day one cover for whole host of disease.
Okay. In the chronology of events, right? Because the whole genesis of this conversation, Aditya, I must inform you, was because a colleague of mine had to go for a predetermined surgery, and it would be something that required hospitalization. And his doubt was, should I utilize the corporate cover first and then utilize my personal cover? Is that even allowed? And how do I go about it? If I can cover the entire thing with my corporate cover, should I do that? Is that my priority? Or should I do a combination of the two?
By theoretically, you can use both of the policies. Let's say your bill is of 10 lakhs and you have a 5 lakh corporate policy and a 5 lakh personal policy. Theoretically, you can use both. Practically, using both is a very difficult task. Why is it a difficult task? Because let's say both insurers are different. There's insurer A and insurer B. Both of them will require a whole host of original documentation work, which is not possible to give in one go to both the insurers. So ideally, in a hospital, on a TPA desk, they will allow you to use one in cashless mode and the other practically has to be a reimbursement mode. Generally, both two policies are allowed only if they are of the same insurer. If they are of different insurer, then one has to be a cashless claim and the other will have to be compulsorily a reimbursement claim.
Okay. Is that something that can complicate matters though? Because I know that in conversations that we've had in the past, you've said that cashless is always preferable and that a reimbursement claim can be complicated. Is it beneficial if you have a combination? Because in one case, there is a cashless claim that is probably been settled. Would it help you to get a reimbursement easier?
Absolutely not. The other insurer will also do a whole host of investigations before paying the claim. Generally, we don't tend to prefer reimbursement claims. Reimbursement claims in today's ecosystem takes about 1 to 3 months, and it's a real painful process where they do investigations like ACP Prathiman would do and hire private investigators and send to your place. So generally, I would always advise if you anticipate a bill bigger than 5 lakh, just don't use your corporate policy. Go to your retail policy, maintain at least a cover of 25 lakhs there with a good amount of bonus. And for critical illnesses with higher bill, just use one policy, which would be a personal health insurance policy.
Okay, so that's the answer that I was seeking. If the amount is too large, which is not covered under your corporate policy, always go for your personal policy. Now, that is where the problems arise, when people don't have enough of a cover or they don't have a cover to begin with. So therefore, Aditya, the question to you, what is the ideal policy to have? And I know that you can't have a one-size-fit-all solution. So let me give you an example of anywhere between somebody who's 25 to 35 and somebody who's beyond 35 and heading into the 40s, and then somebody who's 50 plus. In these three age categories, what is the kind of policy that you would suggest? And you could actually do a combination of a personal policy plus a top-up or a super top-up, as the case may be, right?
Yes, so there are two options to work this around. One is you take a higher cover in your base policy, and the other is to have a smaller base cover with a super top-up. So the ideal preference does remain to have a higher sum insured policy. Insurers are also cognizant of the fact that low sum insured is a problem in terms of medical inflation being 14%, and they are getting innovative products. So let's say, for example, ICICI Lombard Elevate does have an option that on a 25 lakh policy, they do give a bonus of 25 lakhs each year for unlimited number of years. So in the 5th year, the policy does turn out to be 1.25 CR. In the 10th year, it turns out to be 2.5 CR. So perspective being medical inflation is taken care of. Now, what is the ideal sum insured? Up to the age of 35, I believe that you should have a 25 lakh cover. Now, if you would ask me, does 25 lakh cover cost huge amounts of money? The answer is absolutely no. A 10 lakh cover for up to 35 years of age would cost about 10,000. a 25 lakh cover would cost somewhere close to 12 to 13,000. The delta between 10 lakhs and 25 lakhs is not huge at lower ages. It is huge at higher ages. At lower ages, it is not huge as such. So from my perspective, maintain a 25 lakh cover. Then as you come to between 35 and 65, I would suggest a bare minimum of a 10 lakh base policy together with a super top up of 90 lakhs does work out to be a cost effective measure. A 90 lakh super top up would cost you anywhere between 2 to 3,000 rupees. And depending on your age, at the age of 35 or 40, that would the 10 lakh policy would cost you anywhere between 20 to 25,000 rupees as such, depending on policy terms and conditions. So from my perspective, given the medical inflation, you need to build a policy with a good bonus, or B, when you are going to a base plus super top up 10 plus 90, which makes you a 1 CR cover. You need to have a very good cover. Critical illnesses cost a bomb. I'll give you an example. One of my customers was admitted to a hospital for a cancer claim, and he ended up paying about 60 to 70 lakh rupees for the entire treatment together with the chemotherapy treatments. And mind you, the age of that customer was only about 42 years of age. So today with the lifestyle diseases, claims are coming in, and it is imperative to maintain at least a 25 lakh cover with 25 lakh bonus each year, or a 10 plus 90, which makes the cover of 1 CR.
Yeah, okay. So that's pointed, actionable advice. Aditya, thanks as always for taking the time, and pleasure speaking with you.
Thank you. Thanks for having me.
All right, there you go. So some key aspects to bear in mind, and I think the most important point to bear in mind is that you should have a cover of your own beyond your corporate policy. And I know the tendency is to avoid doing that, but really it's like the umbrella. You won't realize that you needed it till it's raining. We've got an interesting conversation lined up ahead as well, and this has to do with decluttering. And the end of a year and the start of a new year, as we are doing right now with the somewhat 2082, is a great time to undertake this activity, particularly in your mutual fund portfolio. Just like you clean your home, I think a lot of us need to review our mutual fund portfolios and clear out the cobwebs, so to speak, or at least remove the things that we're not really using or are duplications of other things that we have. Pratibha Girish, who's a partner at FinWise Personal Finance Services, joining me right now. Pratibha, thanks so much for taking the time, and compliments of the season to you. Let me ask you this. In your experience, when people come to you for the first time, do you find that there are a lot of duplications in their portfolio, that there are a lot of redundancies that they should be removing? What percentage, broadly, do you find that needs to be removed from the portfolio of anybody that you meet?
Thank you so much for having me on the show. Season's greetings to you too, and to all the viewers. Yes, this is one of the biggest problems we have. We have, their NSDL statements which is coming in with multiple schemes. What happens generally is, you start investing in a particular scheme, and then you start looking around and you see some other scheme is performing well. So you may stop your SIP in one and then, start in another. Without realizing that you're choosing the same category. For example, FlexiCap, very popular category. You do all your analysis, you choose the proper funds, couple of them, you start out with, and you see that the funds you've chosen are not the stellar performance is not happening in them, it's happening elsewhere. So you quietly discontinue your SIPs, you don't redeem them, and you start 2 other funds or 3 other funds. So when you look at the portfolio, you will see there's multiple. Recently we have an investor come to us, 52 funds in all. Total portfolio 52. Just the FlexiCap category had 9 funds. So beyond a point, adding funds, there's not much diversification happening, and on the reverse you'll have a lot of overlap. Same kind of in the same category you're buying funds, there will be a lot of overlap. It's a very cluttered portfolio. When you look at the portfolio statement, it's not a pleasant sight. There's multiple, line items.
Let me ask you this, though. What is the problem with portfolio duplication? If fund scheme A and scheme B have 80% of the same constituents, and you are invested 50% in both of them, Why is that a problem?
So, I mean, in your mind, you have diversified because you've invested in two different funds. Now, if your logic for investing in two different funds is that both of them, say one is a value style kind of a fund and another is a growth style of fund, there's no problem because you may have the same underlying, but at least you have the logic. When growth is doing well, this fund will do well. The other 20% will be possibly growth led, and value is doing the other one will, and on average, your portfolio will always do well. But if you're having multiple funds and there's an overlap of some 80%, the underlying stocks are the same, right? So if something goes up, your entire portfolio goes up, and if the markets are not doing well, the same 80% is going to fall, everything is going to fall. So what have you achieved in doing this? And every fund house will have a time when it's not doing well, when its style is not working. At that point of time, if you've chosen even the same style, say you've chosen 2-3 funds, all of them are value style and value is not in favor, then the portfolio falls down. It's very difficult for you to hold on to that portfolio for a long time.
Well answered. So if you are to, and duplication is just one of the issues that you might have. You might actually be over allocated towards one particular style, as you've mentioned. Even if it is in different market capitalizations or different schemes, you could have too much of a sectoral allocation. So concentration could be a problem. You could be maybe not enough towards your asset allocation, where you could have too much in equity, not enough in fixed income, and maybe not enough in gold, as we're speaking right now. So various things to factor in. How do you get started? And often it is the feeling of looking at a cluttered room and wondering where to start. Where do you start?
Absolutely, it puts you off the cluttered room. So this reviewing your portfolio the first time is very difficult, and once you get the thought process right, then it is easy. But you should set a date for a review, and the date has to be a milestone. It can be the new year, the new year which we're celebrating just now, or the English New Year, your birthday, anniversary, anything works, but it should be an annual exercise. One shouldn't do it just one time. When you do it one time, the subsequent exercises don't take too much time. That is true, but you need to you need to set aside a date. You need to commit to a manageable portfolio. So you may choose, like we just discussed, you may choose to have 2 funds in each category, 2 funds in flexi cap, 2 funds in multi cap, because of style differences, because somebody is taking concentrated bets, somebody is not. That's okay. So once you decide that you're going to have a portfolio, there is no magic number. You see a lot of people saying 8 funds, 9 funds. It depends on the size of your portfolio. It depends on what you're trying to achieve and the diversification you're trying to achieve. You commit to the size of the portfolio, that I will have a maximum of 2 funds in each of these portfolios, and stick to that. So those are the 2 starting points. Then you look at, you also, when you're looking at the portfolio, you also look at asset allocation, like we discussed. I think we'll discuss that a little bit further. You're not looking at your mutual fund portfolio in isolation. Though we're discussing decluttering mutual fund portfolio, you have other investment as well, right? You have retirement benefits like your EPF, you will possibly have PPF investments, you'll have fixed deposits, insurance, all these are debt. So if you have decided on asset allocation that 20% is what I want to have for my retirement, that 20% is already there in your EPF. Therefore, you need not add more debt in your mutual fund portfolio. You'll have to look at possibly adding more equity to your mutual fund portfolio. So those are the steps which you need to start thinking on those lines, and then go about decluttering your portfolio.
Yeah, and it helps to have an overarching thesis, right, Pratibha? Because, and on this program as well, we've discussed one possible way of approaching this, and it's quite popular in the advisory community, and that is the bucketing strategy. You can look at why you need this money over the course of 1 year, 3 years, 5 years, and beyond 5 years, and you can allocate your money in your investments based on that requirement and how much you need in each of those buckets. By the way, we had a lovely conversation on that, and you can find that on our YouTube channel. But Pratibha, if you have this overarching thesis in mind, will that help you?
Absolutely. I think that's a perfect starting point. See, it's also important for us to realize what is a What is the reason you invest in a certain fund? Not always we are looking at, it's very nice to say, but very difficult to follow that you're always investing for the long term. You don't worry about the short term. All this is nice to say. But we are, as human beings, we are also, there are behavior biases. We see that a certain category, for example, a gold fund has done extremely well. And suppose you've not invested and you invested because there is FOMO, you fear of missing out, you invested for that. Similar, same example, stellar short-term performance, you haven't invested, so you invested now because you want to capitalize on the short-term performance. Not only in different assets, even within mutual funds, you'll say, okay, this fund house is doing well, let me invest something in that, or this fund is particularly doing well. Or you're testing waters before you invest large sums, you're checking out with small investments, does this work? Tactical allocation, you think that this is the right time for a certain sector, manufacturing, a defense or whatever, and you've invested, then it's important to declutter also the right time. Or you've invested, like we said, the ideal strategy, long-term belief in consistency, rolling returns have been good. This is something which I can fill, shut and forget kind of a portfolio. You'll have to revisit that. You'll have to review, like I said, your entire investment universe and focus on asset allocation also while you're trying to declutter your funds.
Okay, so now let's get into the nitty-gritties of it, right, Pratibha? Because ultimately, suppose, let me give you a hypothetical example. If I've gotten a situation where I need to fix 2 or 3 major issues, one is maybe over-diversification is one possible issue. One is under-diversification because I've got too many of the same category. The third is if I have too much of the same fund house. And so likely the overarching approach of portfolio building is going to be the same across schemes. That can be a problem as well. How do I go about fixing this? And do I need to bother about tax, for example? Or do I need to bother about timing of this in any way? What are the implications of this? Because it could be costly.
Absolutely. Decluttering your portfolio, especially if you've not done it for years, can be very tax heavy. So we have a simple strategy. But before I come to that, you discussed a very important point, which about having a single AMC concentration or a single fund concentration. I just gave an example of a customer who's come to us with about 50, 60 stocks. And if you look at his funds, one single AMC has 25% investment. And it's a very, very large portfolio. 25% of his investment is one single portfolio. And 2 funds together have 15% of the same fund house has 15% of his entire portfolio, double-digit crores. And that's the kind of, concentration which is there in that portfolio. So it's important while you're doing this to also look at how many funds you have and what percentage of your entire portfolio is it. If something is 1 or 2%, even if the fund were to do, spectacularly well, it gives fantastic returns, your portfolio is not going to move in a significant direction. So you mark them out. And in this way, you can also, look at debt hybrid equity, look at market cap diversification and mark your portfolio into red, amber, green, to minimize your, your outflow in terms of taxes and exit clause, etc. So red is something which you need to act on immediately. Like I told you, if you're having 1 or 2% in multiple funds, may as well take them out and take them out immediately. It's not going to make a material impact on your portfolio, not possibly on your taxes. If you have laggards and you know that you invested for a certain reason which is not worked out, that goes into the red category, immediate action required. Okay, then again, the next category is amber, which is like, your traffic signal. Red is go, amber is okay, this is something which you need to take action on, but you could possibly do partially now in March and partially in April, so you get 2 financial years and 2 benefits. Or you can face it out saying, okay, fine, I've invested this is not my long-term portfolio, this is something which I'm waiting for it to play out. I can hold on for some time before I, exit this portfolio. And then there's a core portfolio, which is green, which is as per what you need, as per your financial plan. It is long-term, it's consistent, no action required. So it kind of gives you clarity and, you can calculate your taxes also backwards and decide, okay, red, it doesn't matter if tax goes because I may lose more if I hold on to it. Amber, I'll wait, I'll split it over 2 financial years. And green is anyway, it's good to go.
Yeah, it's a good way of putting it. And of course, this is something that you can utilize, right? When we're talking about the tax aspect of it, it's important to note that in the capital gains tax regime that we're currently in, long-term capital gains in equity, you have that leeway of up to 1.25 lakh of profits that you can book in a year where you don't have to pay any tax. So you can actually utilize that to your benefit, particularly if you want to consolidate your holdings and you are not over diversified, but you've got too much of a sprinkling in various categories. Pratibha, I think we've covered quite a bit of ground on this program. Thanks so much for taking the time, and pleasure speaking with you as always.
Thank you so much for having me on the show.
Now, specifically, if you've got individual questions about what we've just spoken about, write to us in the comment section and we'll take it up in future shows. We've already done a few episodes based on comments that you've sent, so we are listening and we are reading your comments. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Lenskart is finally making its market debut with an IPO which will open this Friday for subscription and close on November 4th. The price band is 382 to 402 rupees per share, and this is a mix of an OFS as well as fresh capital. That means an exit for investors as well. Total issue size is 7,278 crores. Out of this, a fresh issue is 2,150 crores, while the offer for sale is 5,128 crores at the upper price band. Now, what is the vision of Lenskart? What is the strategy? And what is this behind its massive growth? To speak on all of this, I'm joined by Piyush Bansal, CEO and co-founder of Lenskart. Piyush, thank you so much for your time to NDTV Profit. My first question, why are you raising money? You're a net cash positive company for the last 3 years.
See, we are still, as you know, we are expanding stores, Tamanna, and firstly, thanks for taking our time, but yeah, we are expanding stores. We have to still, we are very early in our journey in India, if you understand. I know it may seem like that we have 2,000 stores, but if you look at the size of the problem and what we have achieved so far, we only have single-digit market share right now. And I think the problem of myopia is really growing in the world, in India and Southeast Asia. We today have about 750 million plus people in India who need glasses. Only about 35% of them are wearing glasses right now. But this good part is this number is getting better, and every year the adoption is increasing. And similarly in Southeast Asia, I would say the penetration is only about 35%. Myopia rates in adults in India right now has risen to about 70%. In Southeast Asia, it's gone up to 80-83%. So from, if you look at that size of the problem, we are still very early in our journey. We are still going to open a lot of stores both in India and internationally. We need to continue to build the brand in India. We need to continue to build the brand internationally. So I think I would say we are still early in the journey. I know we are generating cash flows, but we have a lot of investments coming up.
So then is the purpose to give an exit to some of your investors, and you have some storied investors, some very big names, Piyush?
Not really. If you look at it, none of our investors are really exiting. In fact, to get this IPO done, we had to do kind of a pro rata distribution for our investors. In fact, a lot of our early investors, you'll see, are quite eager to participate in the IPO again. So it's not really an exit IPO for anybody.
Yeah. In fact, there are new names coming in. One of them is Radhakrishnan Damani. Now, what an endorsement that is, Piyush. Any reaction to that?
Me and my co-founder Amit, we have had such a huge respect for Mr. Damani. I mean, we have grown up watching DMart stores, right? And you'll always find a Lenskart store near a DMart store. I'm telling you that little secret. And we have stood in that DMart store from morning to evening. And, when we met him just as an admirer, not necessarily to raise any money or request him to be part of the IPO, but the conversation hit off really well. And I think, and it was an honor that Mr. Damani decided to be part of our journey. That's all I can say. But yeah, I don't know if it is of prize validation or anything, but yeah, it's a huge honor for us, and there is so much to learn from him. I mean, he's definitely created. DMart is something that we always look up to.
Yeah, no, it's a validation for sure if Mr. Damani comes in and invests. Now, let me talk a bit about the growth of the company. You've seen revenue grow at a CAGR of 33%. You've turned profitable finally in 2025. Now, are these metrics sustainable in your view?
It's difficult to, I won't comment on the future projections, but yeah, I think, like I said, what's happening is that there is more awareness coming for eyewear right now. More and more people are getting up and getting their eyes tested. Kids who are going to school, I think there's a lot of awareness in the schools to get their kids' eye tested. So there's definitely that big gap in people who need glasses and wearing glasses, and that realization is kicking in. And also at Lenskart, eye tests are absolutely free, and we are working very hard to democratize that. About 2 years back, we used to do 6 million eye tests. Last year, we did 16 million eye tests. right? And if for us to really make an impact, this number has to be in hundreds of millions. So I think if I look at it, I can't comment on the future growth, but I would say there is a lot to be done in this category still.
Yeah. But now that you're going to be a listed player, analysts will look very closely at things like margins. You have margins at 14.5%. Is this sustainable?
Margin, I think, margin is a reflection of the value that we create for the customers, right? I think largely we have to keep getting better at our customer experience, and with scale coming into the picture, there should definitely be operating leverage that would kick in the business, just like in the last 3 years. But yes, I would still say there is a lot of work to be done here and a lot of value to be created. The category is getting very exciting now. It's getting its adoption for the first time. पहले तो खाली चश्मिश कहते थे लोग. अभी at least you see celebrities wearing glasses, you see youth adopting glasses. So I'm quite excited about the times ahead in terms of possibilities that we can do with eyewear. I mean, smart glasses is another big area which is just at the cusp of exploding.
Yeah, I like that. Chashmish is no longer a negative thing, says Piyush Bansal. Now, just talking a bit about the business a little more, Piyush, do you see the revenue mix changing going forward? I mean, 80% is still coming in from eyewear. You talked about fashion. Is that where you're heading to?
I think glasses are fashion, look at it, right? 70-80% of the world is becoming myopic, right? In an office today, 7 out of 10 people need glasses. So from a mixed perspective, I do see that more and more people are going to get glasses. Now, whether we want to wait, and glasses are as much fashion. I mean, I feel these glasses add a lot of fashion to me right now. So I think it's a mindset that we have been used to, where sunglasses are fashion and eyeglasses are not fashion. But as far as I can say about Lenskart customers and people who are buying, glasses are more fashion than what you can imagine, even sunglasses, because you wear this all throughout the day. So I think the growth is going to come in the prescription category.
Okay, so growth in the prescription category, also growth through international business. You're present in Japan, you're in Southeast Asia, you're in Middle East. Already revenue contribution from your international business is about 30%. Do you see this growing?
We expanded internationally largely because it is very core to our mission to democratize eyewear. And if you look at Southeast Asia, myopia rates are even higher than India, and the gap between what the solutions that are available in terms of quality, affordability, they are not today, I believe, there to match the demand. And even the same problem like in India, we have only about 30-35 opticians for 1 million people. So they need similar level of solution, and that's why we expanded. In terms of look, it's difficult to comment in the short term. I think if I look at, I usually like to see business in the long term, from 5 to 10 year journey. International is going to be a key part of our journey. I mean, we are not doing this as a trial right now. We are quite excited about revolutionizing eyewear, particularly in markets where myopia rates are very high, including Middle East, Southeast Asia, and Japan. How this mix will change, I think it will keep changing momentarily depending on which market we are accelerating first right now, which market right now is going through, some fundamentals in terms of setting up supply chain. But largely, I would say international is going to be a core part. I mean, we are trying to build a global brand here.
Yeah. So what are the new geographies you're looking at? Or are you going to focus on these areas? Is United States, Europe, and some of these areas also on your map?
Right now, we are not looking at new geographies. I mean, we are already present, focusing on India and neighboring areas of Southeast Asia, Japan, and Middle East, and we expect to continue to focus on these areas.
You keep mentioning through this interview, Piyush, that India is the myopia capital, that rates of myopia are growing. I'm sure this is something that you have researched into. Why is that?
I'm glad you asked this question. So first, I think if you just look at the digital penetration, right? I think the amount of time we are spending on digital screen, I believe has a impact on vision deterioration, and because muscles get really tired. And the second, I think we are not spending as much time outdoors. And what happens is if you're not spending as much time outdoors, your eye muscles are not getting practiced to see far distances, which is myopia, which is short-sightedness, which is that you're not able to see far things better. So I think largely, and that is on the rise. I think, and also post-COVID, I've seen a massive rise in this. There could be some other angles, but not proven. But I would say digital penetration and shorter sleep cycles, spending a lot more time indoors is the reason for increasing myopia right now.
All the things, Piyush, that we are supposed to not do and are not supposed to be good for our health.
Our lives cannot run without digital screens right now. This interview, this talk conversation is on a digital screen. So glasses ain't that bad, right?
Yeah, I don't know. So, okay, let me just ask a bit about the risks that investors should know about. For example, supply chain. You have quite a bit of dependence on supply coming in from China. Geopolitically, we live in a very uncertain world. Don't you see that as a threat?
See, at Lenskart, if you look at spectacles as a product where there's a frame and lens coming together, we do all of that manufacturing in-house, right? All the full spectacle manufacturing, the frame, the lens, everything is done in-house and just in time. And then there is an element of frame and lens supply chain. We are manufacturing significant percentage of our lenses now in our factory in Bhiwadi. Even frame manufacturing, we have moved a lot of it to India. If you look at traditionally, frame manufacturing has not happened in India. The entire supply chain is kind of imported. We are putting the ground, the initial investments into building that supply chain, building the capability, getting the ecosystem going. We are manufacturing a significant number of our frames in India, and in times to come, I would see more and more of it happening in India. And that's the intent.
Where does Piyush Bansal see the competition coming from? You have some brands who are doing what you do, but do you see competition on the horizon? What if a large digital player suddenly decides to get into this?
I think as a company, as a company, and I would say even as an entrepreneur, I have never really got the time to look at the competition. I think there is just so much to do. And in this, we're talking about 500 million people in India needing glasses and who are not wearing glasses. That's like a huge number. So there's a lot to be done. I wouldn't necessarily, I haven't really looked at it ever, to be honest. And I know it's something everybody would say, but that's the reality.
So how exciting is it for you to become a listed player? What does it mean to you personally?
Well, I feel it's going to be, the next level of training. In terms of, fundamentally, we are not listing to exit. We are listing to get ready for the next phase of Lenskart, where we can start taking this impact to the next level. From where we sit, we have really not done much. We have served about 20-25 million people, and of the 500 million people in India which are sitting with a vision deficit. So from that perspective, there's a lot to be done. So this IPO is more of a stepping stone in that journey. It gives us ability to really get the best of talent, and it's going to be an exciting. I do feel there's going to be that initial period of credibility building with the new partners that we bring on board. Currently with the existing partners, that is quite settled. But I think it'll be all exciting because IPO is nothing but making you even more real.
And under a lot of scrutiny as well. Best of luck for that and all of it going ahead. Piyush Bansal there, co-founder and CEO of Lenskart, the new IPO on the block, talking about what the way forward is for the company.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया आपके तो ना
Let's get into our big conversation this morning. Saurabh Mukherjee, founder and CIO of Marcellus Investment Managers, with us this morning. Very good morning, Saurabh, and great to see you on after quite some time. Hope all has been well. Let's start off with where the markets are right now, and we're speaking at an important time where some of the fears seem to be fading, FII seem to be coming back. The only question then is the India-US trade deal, isn't it?
I think there's more to it than that. I think the India-US trade deal more likely than not will get done. It makes sense for both countries to do it. I've been saying this ever since the tensions broke out. I think the bigger question is, will we see a earnings recovery? Earnings growth has been weak for the last 6-7 quarters. Will we see an earnings recovery? The stimulus that the government has imparted through income tax cuts, GST cuts, the RBI has done its bit through 4 rate cuts. Is that enough to juice up consumption growth and generate an earnings revival? I think the jury is still out on that. My reckoning is we'll have a decent quarter. The current quarter will be decent on earnings growth. I think this is potentially the first quarter of double-digit earnings growth after 7 or 8 quarters. But I think a longer term earnings revival will depend on job creation, especially white collar job creation. And that's something I still don't have full visibility on.
I just want to come in a little more detail to the earnings outlook, and that's quite an optimistic note you've struck, Saurabh. That double-digit growth after 8 quarters. Where do you think the pack is being led by? Is it banks that is giving you, the most confidence right now? IT has also performed better than expected.
I think the let's start with the obvious stuff. Clearly, the GST cuts have helped the auto sector. There's been spectacular numbers from the auto sector. I've never seen so many cars ever get sold in my life. There's also plenty of jewelry sales. Unfortunately, I don't think the jewelry sales will entirely reflect in stock market earnings beyond say Titan. But more generally, my reading of the Diwali spending was that even consumer durables will have a good quarter. October, November, December will look up for consumer durables as well. And the credit quality issues which were hammering the banks and NBFCs. By the way, even the September quarter numbers suggest elevated credit quality issues for the lenders in our country. I'm hoping that the October, November, December quarters, on the back of GST cuts, interest rate cuts, and income tax cuts, I'm hoping that October, November, December brings some relief on the credit quality issues. If over and above that, the trade deal fructifies in the next 2-3 weeks, then the export-oriented plays will also have a better November, December than they did in September, October. So all in all, the chances look to me to be more than 50-50 that the quarter to December could be the best quarter for earnings growth in 4, 5, 6 quarters. I think that last time we had double-digit earnings growth, we have to go back 1.5 years. So fingers crossed, but the signs are looking up. This could be the best quarter for earnings growth after 1.5 years.
Hey, Saurabh, good morning and a happy new summer to you.
Happy New Year.
I wonder, Saurabh, if that means that the markets could have a continuation of this bullish sentiment that has come in, independent of what the Nifty does, that's secondary. But can the sentiment stay constructive with earnings growth, or is is some bit of trade resolution a necessary condition, even if not a sufficient one?
So I think the continuation of bullishness, I think, is contingent on three aspects. My reading is, at the margin, the FII sentiment is turning positive. I think you were referencing flows as well. My discussions with FIIs over Diwali suggest that they're keen to put more money to work in India. Back in America, this whole private credit boom seems to be dissipating, and also the realization amongst American investors that post a US-India trade deal, it does make sense to put more money to work in India. So I think the first driver of sentiment will there be sustained uplift in FII inflows? I stay optimistic on that, but I would also hesitate to give a completely emphatic statement, because I think there are many other variables playing in the FII's mind. So pehla issue is FII sentiment. Second is the US-India FTA. Will it just be a token FTA? Naam ke vaste to do something, or will it be a genuine 15% tariff for Indians exporting into America, genuine breakthrough for Indian trade? I'm hoping it'll be a genuine breakthrough for Indian trade. If it is, I think it'll be a significant mood uplifter. And the third is the capex piece. So private capex, the first 6 months of this year, first 6 months of FY 26, private capex has seen a significant bump up. I think it's up 40 or 50%. If private capex sustains in the second half of the year, that too could be a significant mood lifter. So FII, the US-India FTA, how substantive it is, and private capex. If these three all turn positive, then I think change in sentiment could last for several quarters, rather than being a 3-4 week, a 3-4 month affair.
Got it. Where sort of, I mean, the obvious options or the announcements might be the data centers and the energy transition, but 50% uptick in private capex when the headlines have been that the one thing that is not coming through is private capex. So where do you see this upshoot in capex?
I'm just reflecting on the data that's already been published. So even I was also surprised to see the Business Standard headline that private capex is up 40 or 50%. I think it reflects a few things. I think, remember, the L&T had said that they've got a big boiler turbine genset order for a thermal power plant in India. I suspect that's a mega capex announcement, and I suspect it's linked to a large conglomerate in India. So if L&T's announcement in there, I think this was in the Q1 results, they had said that they've received a big BTG order for a massive power plant in India. I think that's inside the private capex data. I suspect the massive Google data center in Vizag is potentially also inside the H1 capex. So combination of private power plants, private data centers, potentially some factories coming up, that's enough to give the private capex number a boost. Whatever's happened in H1, it's already in the data that it's up 40-50%. Question is, will the private capex piece sustain in H2? Because remember, government capex has to come off. Given the fiscal pressures that are now mounting on the government of India, government capex will have to throttle off. Indeed, it's already throttling off basis the data I'm seeing. So as government capex comes off, if private capex jumps up in H2 at this 40-50% rate, then I think the change in mood in favor of optimism could sustain into FY 27.
Another interesting space, Saurabh, we'd love to hear your thoughts, is what's happening in private banking space and the entry of some global partners coming in, whether it's an Emirates NBD and RBL or a Blackstone investing in a Federal, IDBI is up for grabs in some part. Do you think that this is the start of an exciting trend, and how would one hop onto it?
So look, I think this should have happened many years ago. My reading is FIIs, foreign banks, foreign private equity were very keen to invest, have been keen to invest in Indian banks for many years. For reasons best known to our regulators, they haven't been supportive of this until recently. So for whatever reason, the regulators have turned constructive on this, and kudos to them. This is the right thing to do. We need more foreign capital in our banking system. The banking system is undercapitalized in my view, and I think RBL is the first of many banks which needs a foreign investor. So hopefully the RBL NBD deal, remember there was a DBS Lakshmi Vilas Bank deal a few years ago. Hopefully, we'll see many more of that in the coming months. To my mind, there's at least 3 zombie private sector banks, 3 private sector banks who are there sort of operating, but not really with any financial muscle. There are at least 3 zombie private sector banks. I don't want to name them because it's just not fair. But there are at least
I was just about to ask you to name them because that's...
So some other day.
Yeah.
So I think everybody who needs
That's
to know
the quiz of the morning.
everybody who needs to know who the 3 zombie private sector banks are knows who they are. But jokes apart, there are people there are private equity firms who want to put money to work. Historically, they've been stymied by discouraging words from the powers that be. Now I think the tide has turned. The powers that be have realized that we need foreign private equity and foreign strategics to buy Indian banks. So let's hope that Blackstone Federal Bank and Emirates NBD is the start of a new trend where plenty of foreign money pours into private sector banks and gives the banking sector a lift that it really needs. Because remember, credit quality will stay under pressure because of the weak job scene, and especially the southern Indian tech hubs. The job losses in the southern Indian tech hubs is going to create more credit quality pressure in the coming quarters. So foreign capital much needed in Indian banking.
And does this place private banks in a more desirable space versus public sector banks right now?
I think the public sector banks are going to go through a repeat of what they went through in that traumatic decade from 2010 to 2020, right? In that decade, they got pulverized on corporate credit quality. This time around, I think the public sector banks will get pulverized on retail credit quality. The deterioration in credit quality that started, say, 3-4 quarters ago, I think we're in the early stages of a downside in credit quality. I think barring ICICI Bank, HDFC Bank and SBI, I'm not seeing too many other banks being able to deal with this downturn in credit quality, which is why I think we need foreign capital to come in and inject fresh equity into the Indian banking system. They'll naturally do it in the private sector. The government, I don't think, will allow public sector banks to be taken over by foreign bankers. So natural entry for foreign banks, foreign private equity and foreign banks will be via the private sector. And as I said, there's at least 3 zombie private sector banks which could do with significant infusions of foreign capital.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can. But I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched. I hope you're watching NDTV Profit a lot. Absolutely, you can come to my office and you can see. Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well. No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Good evening, I'm Vikram Oza and you're watching The Big Question here on NDTV Profit. After that 5-year hiatus, India-China direct flights, they're finally back in the air. Indigo's flight from Kolkata to Guangzhou has taken off this weekend, the first since the year 2020. What does it signal? A possible thaw between two of Asia's biggest economies? Yes, more connections are on the way. Daily services between Kolkata and Guangzhou. There's Delhi-Guangzhou flight from the 10th of November. And Air India is set to join the route by the end of the year. So on the face of it, this is a big boost for business and tourism. Remember, before the pandemic, nearly 8 lakh passengers were flying between India and China every year. But behind this kind of new connectivity, there is a more complex picture, one of lingering border disputes, widening trade deficits, and there are new flashpoints as well over rare earths and tech exports. So tonight we're asking this question: India-China flights are resuming, but do these travel links mask these strategic tensions, these strains in the relationship? Are they masking them, or are we expecting a genuine thaw? We're looking at whether this renewed engagement can truly rebuild trust, or if it's just an attempt to keep channels open while these tensions simmer beneath the surface. First, take a look at what passengers, the ones who traveled from Kolkata to Guangzhou, what they were saying about the resumption of flights.
It was definitely very convenient because it was a direct flight, so it was much more relaxing that we could just directly come down here without a layover in between. So yes, we are looking forward to many more such opportunities.
So there have been many other options previously, like from Delhi Guangzhou there was a direct flight. China Southern used to fly. It's easier for both the countries, India and China, that this flight has resumed because the trade will even get better from now.
It is very good because before we came with China Southern direct from New Delhi to Guangzhou. So direct flight was not there, so it's a bit of hassle. But now they are starting again. It is very good, very, very good.
Well, there you have it. There is a resumption of flights between India and China, and that's happening after a span of 5 years. But what does it really mean? Let's discuss this with an excellent panel that's joining us tonight on The Big Question. Let me introduce our guests who are here with us this evening. First up, of course, we do have Meera Shankar, former Indian ambassador to the United States. She's joining us in a moment. Also, Dr. Shrikant Kondapalli is here, professor of Chinese studies at JNU. And Subhash Goel, chairman of the STIC Travel Group. And along with them, we have Jyoti Gupta, the research analyst at Nirmal Bang. So all of you guests, thank you for making the time and joining us on The Big Question. Let me ask first, in terms of what we are expecting, how, Jyoti Gupta, you see the markets and trade perspective. Do you see the resumption of flights as this genuine thaw in the relationship? How are the markets viewing what is actually happening by way of resumption of flights between the two countries? Because yes, there is euphoria around it, but how's the market